what more do you need, right? The culmination of the entire quarter. Check 1, 2. What up? Good morning. Check 1, 2, baby. Fed rate day. That's right. We got Fed day today. It's going to be wild and crazy around these parts. Not even a pullback this morning. I mean, talk about relentless. Look at this. Woo. Uh-oh. I don't know if my camera's on or not. All right, let's get right into the market brief. We'll try to be quick about this. All right, good morning out there. How y'all doing? We've got a hell of a day coming up, don't we, legend? It's going to be a big one. I mean, I was trying to wrap my head around it this morning, and all of the volatility surrounding what can he say, what can he do, will he raise rates today or not raise rates or cuts or whatever. There's an inevitability here, right? I think that's the key point, is that there is an inevitability. Whether he cuts rates today or he cuts them on his next decision, he doesn't have much more room, is the point. Right? What does the argument become today if he doesn't cut rates, right? So let's say he doesn't cut rates today. He doesn't have that many decisions left this year, and he's already said that they likely wouldn't be back-to-back. That's been known, right? So there's an inevitability to this, and the market likes to front-run these inevitabilities at some point. So that's a big thing for me today, at least, is to listen to Jerome and what he has to, what the language is. I think the language today is probably going to be the big thing. Is there any change in language? We're still at the data dependent, and we're not quite ready to cut rates. So I think his verbiage today is going to matter significantly to how the market reacts in terms of price. Now, this morning on CNBC, not seeing too much this morning, right? CNBC is pretty quiet overall. Here's everything to expect from the Federal Reserve policy meeting. I'll open this one up for you and read it to you this morning. I'm not going to read it at the moment, but I will read it to you. Fascinatingly, I read last night. I spent my time reading articles written for Main Street. That's what I did last night. I read MSNBC, CNBC, Fox News, whatever I could get my hands on that was for the regular person. And maybe I'll try to read one of those articles to you this morning, how they explain things to regular people. Next up, we've got Financial Juice this morning. Not too much here either. Traders await FOMC guidance. European market wrap over here. Prior to today's Federal Reserve meeting, Treasury bonds and these U.S. equities futures remain stable. That's a key point too, right? I thought this morning, I'll be honest with you, I thought this morning we'd at least have a pullback by open. Maybe we'll still get it this morning, but I was expecting it. I didn't see it this morning. So today, just so you know, today is the 20th. And we've got the FOMC rate decision, right? We've got Fed Chair Powell press conference. Tomorrow we do have some big news. We've got initial claims at 8:30 in the morning. We've got a PMI through into 9:45 a.m. And then on Friday we have Fed Chair Powell taking part in a Fed Listens event. Most of those Fed Listens events, they're usually tied to, I don't know, global warming or people's rights, all kinds of things that have nothing to do truly with the market. Sometimes we get a comment or two, but not. I wouldn't expect too much out of the discussion on Friday on the 22nd. Next up, we're going to go to the opening bell this morning and see what positioning would be. On the top right-hand side here, we have, just so you can see this here, you've got the previous high back here at 516.73. The natural progression for an upside move is going to be to the zeros and fives. So if you're looking for an upside target today on some good news from the Fed, you're likely going to be targeting, of course, 520, right? Nice and flat. Right up here at this 520 is kind of your place that you're looking for today. The key point about today, too, I want to get into with you is it being a Fed day. It's a good day not to trade. I know you don't want to hear that. It's a lottery trade type of day, but I do want you to realize that trading the extremes has been fruitful. It's been fruitful this whole entire week. It was fruitful all of last week, and more specifically to today. You don't want to get caught before the rate decision or after the rate decision on the wrong side of a trade. So you're looking for squeezes to sell, and you're going to be looking for drops to buy. Whatever you do, don't get caught in the middle of it. You've seen me here even do that, right? I'll go early. A lot of times on Fed rate days, I'm like, yeah, I'll go in right now at 1:45 in the afternoon, and then for the next 15 minutes, we're just dropping straight down into that decision, right? It's 2 p.m. So try to trade the extremes here this morning. So we've got 520 to the downside. We also know that we've got some other things to work with this morning. We've got down below here at 510.33. So we'll snap a little line down there as well. Right down in here. We'll make that nice and green. So you have some tradable zones. You've got another one down below over here. So you got this little area right here. Let's see, we'll take that one right there. Oh. That's your hourly trigger. And I think this might be, I mean, this looks like a foregone conclusion, doesn't it? Kind of looks like people have resigned and reserved themselves to an up day. I don't know how true that is. It could be. Let me look at all this stuff down here. You got buyers. I mean, I don't know what you're going to do if you're a bear here this morning. Right off the open this morning, let's take a peek and see what's going on. This is where your hedge is right above all these yellow bars down here. And let's switch over to the main screen. Sorry about that. I'm losing my voice already. We're not even there yet. Next thing that we're going to do is I'm going to read for you this morning. Slide this over. I'm going to read for you this morning. We'll come back to that. I'm going to read some briefs to you this morning from some other people so you can get other people's perspective on what to expect today. There seems to be this thought process that we're going to 520 today no matter what. Myself, I think we get a pullback. I think that we do pull back to at least the hourly trigger. That's down here at 514.30. And I'll show it to you here. You have a small bear cross above here in pre-market. So if I was looking for a dip to buy myself this morning, it's likely going to be down here. Just like that right there. Right down there. Yeah, it'd be Uncle JBJ saying it'd be funny if today was a nothing burger. I can see that, Uncle JBJ. I mean, it's kind of a foregone conclusion, right? We're trading 516 right now. The market right now, at least the gamma markets goes to 530. Let's take a look at the gamma market really quick. Because I was wondering that same thing. Is it kind of a nothing burger, right? You kind of like crush all of the vol. You crush Bulls. Bulls wants to go to 550 or 530, and then you make the move later. We'll take a look right now at SPX gamma this morning, and let's take a look down below here and see what we can see. In one quick second. I wondered the same thing, Uncle JBJ. I'm like, man, this seems like a sell the news kind of an event, right? We traded up into the rate decision today, and there's not a whole heck of a lot of room to the upside. It's like a foregone conclusion. Do I take vitamins? Yeah, I take vitamins. I take vitamins, and I take vitamin E, vitamin D, and then I take a multi-day. Good morning to you too, Poke. I feel better today, though. I'm feeling sick, but I don't feel the nausea. I did speak to Binky yesterday, and he said, hold on one second here. We were thinking that I have nausea from the headphones being on. So my ears are being boxed out. And because my ears are boxed out with headphones, that's what's making me nauseous. We'll find out today if I get nauseous again this morning. The plan here is to try to be, here we go, right here. See if we can see anything from the market this morning. Local resistance is a little bit higher this morning. It's at 5,200. Let's take a look down below and see what we got here. So this is SPX gamma this morning. Leaf slide. Oh, wait, we're pushing. Turn that off for a minute. So this is SPX gamma right now, right? You've got local resistance now is at 5,200. So it's a little bit higher than it was yesterday. It was at 5,180 yesterday. Market is now pricing in 5,400. Woof. Oh, man, dude. So this wasn't here yesterday. There's now a gamma bar above at 5,400. This was not here yesterday. This is new this morning. So there is call buying taking place to an extreme upside, right? You want to see that development of call walls to 5,500 to get to 5,300, 54, 5,500. The more you see that development to the upside above your target, the better off you are as a bull. And this morning, we now have a new gamma bar above at 5,400. Jesus. Okay. 5,400 it is. Also, the gamma flip is, you should note that the gamma flip this morning is at 5,150. It's pretty tight, right? We're coming straight up here with that gamma flip. Local support sits down below here at 5080, right down here. Get rid of this one here. This is your local support. And we are selling right now currently off of this 51. It's right here, this 51.75, 51.80. So you can just see the rejection already happening this morning. You can know where the sellers are. They're right above up here. They're trying to sell us down right now. Remember, too, on these extremes we talk about, last week it was an important topic for us. We said we'd get off the 1 minute chart and try to trade the extremes. And you can see right here on SPX, right? Selling down, buying it up, selling it down, buying it up, selling it down, buying it up, selling it down, buying it up. And of course, we're right back to it again. And these sellers want to sell us down today, right? It's only natural that they would want to do something like this. So just be aware of it as the morning progresses. we're seeing it right now off of the open, right? You can see where I drew this line here. They're trying to sell this thing down, get us down into the half-hour trigger. The half-hour trigger is at 5:15.10, and the hourly trigger is down below at 5:14.30. And if you guys want to know from me what I think, man, it's a hard one. It really is this morning. If we were lower, if we had like sold down into this event, I'd be like, like the sky's the ceiling. Where we are right now, trading 515, right? What's the expectation here today? Do you think we trade higher than 520? Would you like to see a pullback to trade 520? This seems like a sell the news event. I'm telling you, this seems sketchy to me. I could be wrong. Maybe I just don't like being a bull. Yeah, that's what I was thinking. The same thing. Like, 520, man. Like, can we go higher than 520 today? I'm not quite sure. Maybe we'll take a look at IWM this morning and see what they're doing. And look at it's parked right on IWM this morning in the half hour, right? Is parked right on the daily trigger at 201.68. If there was a ticker today that could move, it's probably small caps. Probably small caps can move either up or down depending on what the decision is today. And my big question, you want doom into the close buy? You want doom into the close buy? IWM is probably the ticker for you today if you're looking for an upside move at least, or the chance of an upside move. My biggest contention or question about IWM is if we get rate cuts, small caps does very well with rate cuts. They do horrible when a rate increase policy from the Fed. And so when do they start to ramp that? And look where it's parked right now. It's like parked perfectly on its daily trigger. Insert doom into me digitally. Give me a 6 billion MOC sell side limit down. You remember if it's what does Trader Podcast say? If it's a $1 to $4 billion, expect the market to move up, right? Buy calls on that close. Oh, it's killing me. All right, so IWM is going to be the one that I'm going to watch this morning. I don't know if the initial if let's say we don't get a rate cut, we don't get a rate increase, we just go data dependent, all the bullshit that Jerome says. I'm interested to see if there's any blood here on IWM this morning, or if they begin the pricing in during the Q&A, if they do the pricing in of small caps. What he says today is going to matter. Are we looking at a rate cut coming up? Is he going to leak any of that that we're waiting for a rate, or we're now waiting for the next rate cut at the next rate decision meeting? And how does IWM and small caps respond to that today? This has to be the most relentlessly bullish market of all time. You guys want to see something cool? Let's look at something cool. I got something really cool for you. Give me a second here. I got something neat for you. Well, the one thing that it could be. I was looking at. I'll show you what I was looking at. The thing that's got me is I was looking at 1987, right? And then I was looking at the run from 1995 to 1999. Apologize here. I'm still pretty sick, so I apologize for my voice. But I'll show you guys something kind of neat here. And the thing that's kind of got me here. Let's see if we can show you something here. Okay. I always like looking at this chart. This is the S&P 500 PE ratio, forward PE ratio. And what I find fascinating about it is if you go back to 1978-ish, I think, somewhere in here. Yeah, it's like 1978 right here. I should draw this line a little bit farther down. This is 74. And we had material changes to our markets once in the 50s and 60s, but more importantly, as Reagan became president. And whenever I see these guys out there in CNBC, especially the old guys, I always like to hear what they have to say when the PE ratios get down here, right? See what they're saying on CNBC. And it's always fascinating because these guys have been buying this dip down here for decades, right? You can see them down here buying it right now. They're buying it right here. And they did it again. And this was, I remember I posted this chart right here. So that was the low right there. This is the low right here, right? I remember I'd posted this chart as these guys were coming on CNBC, and they were talking about how I think it was I forget what the guy that was on CNBC or whatever, but the thing that mattered was these guys are like, don't buy the dip, don't buy the dip, don't buy the dip, don't buy the dip, and these are the guys that are actually buying the dip. This isn't you and I. This is big money, right? All these talking heads telling you not to buy the dip. And yet they've been doing it like that since 1978. And one of the most fascinating parts about where we are currently, see this gray line right here? Not the green line, but the gray line that's above. You can see right where we are right now, right? This is that this is the 1987 top right here. And you've got now 89 into 1985, right? We're now surpassing that one, right? See that? It's like 87. And then this is the 89 to 95 run. And we're now surpassing to this run right here. And this run right here, what I find most fascinating about this run is that you've got 1995 right here, right? And this is this is about the year 2000 right here. You see it? And we're like putting on right now in time years of growth in a quarter. Well, more than a quarter, a year and one quarter. But I want you to see that right now that you're talking about what took years to do. We're doing at a pace that is kind of unseen. I forget. I remember who said that in the chat just now, but look at this right here. Big pull up, pull back, and then this monster move to the top. You can kind of see right now, right? We're past all that, we're past all this, and now we're making this run in what, a year and a half. We're making this run like we did to the blow off top in the year 2000. That's the tech bubble, right? The tech bubble. Well, just this right here is what we're now trading, believe it or not. And to that question of what we're in right now, let's take a look at it here, right? You can see right now that we've got this big push right here, and the question becomes, do we go up here and trade that 1995 to 2000 in just 1 year? And you're talking about crazy moves in the market, right? Tell me that's not insane. I just showed it to you, and I've seen people on FinTwit say things like, we're just getting started, or you might see another 4 or 5 years of this. And I'm like, no. You're seeing 4 or 5 years of growth in a year and a half, like 4 times the rate of growth that we had in the year 2000. That's how crazy this move is. Was that you, Stocks Anonymous, that said that? Like, this might be the strongest bull run ever? This might be, man. It's insane, dude. It's pure insanity. I'm looking at it right now. I woke up this morning and I'm like, what do I even do to this? Like, can we get a pullback this morning to trade? How do you trade a high of 516.20 on a rate decision day? I don't know how you do that. We're bullish as heck. I don't know. This looks to me, if you're going to ask me what I think happens this year, I wrote an expectation for this year in December. It looks like a blow off top. That's what it looks like. It looks like a mad dash to the end. That's what it really looks like to me. If we go up and up and up into December or March with the election, we get the election effect that carries us into March, where do you think we'll be? if that happens. I don't think 6,000 is out of control. I don't think it's to not be expected that we could trade that 6,000 with with where we are going and the speed at which we're going to it. The one thing that bothers me here that I put inside that expectation for the year is that if we do this like mad dash into end of year and into March, that is the end of a debt cycle. That the housing cycle runs in 18 years, around 18 years, and right in that 2026, excuse me, 2025, right around there, we're at about that 18-year mark. It looks like it to me. Nothing at this point is saying otherwise. That would be a major market top. So if we came into January, March of 2025, you're talking about what, 2 or 3 down years. 2 or 3 down years, and then possibly 4 to 6 years of sideways. So take that into consideration with this bull run. This bull run, as it looks right now, looks like a blow-off top, and it looks like if the housing cycle, you can count the years from 2007, 2008 to right now, and you're right at that 18-year mark. If that is the case, this is it for a bull. This is your run. You're going to get your blow-off top. You're likely going to come into the market some mornings. What are you going to see? Stocks up 5% in a day, 3% in a day, something in pure insanity. I can't even believe that we're talking about this because I don't know that I want to know that reality either. Like waking up and you're up, like we're up 5%. Tesla's up 5%. NVDA is up 10% every day, relentlessly, over and over and over as we make that run to the tippity top. Any guys old enough to were you guys here? Do you guys remember the news programming that was going on in 2000 during that tech bubble? It was insane. It was pure insanity. Yeah, John's saying they won't let it dump until after the election. The worst part about this too, I was thinking about this. I'm like, if we get the blow off top, right? And you're young, you got no buy. Like you got no. If that's the case, you get no buy for a couple years, 2 or 3 years. You would have no buy in this market. You'd be selling this market, and then you'd be seeing a market that turns over or just like consolidates for multiple years. Now, is that good for you if you're young? Overall, in 20 years, yes, you'll get a generational buying opportunity out of it. But you're still talking about waiting 4 years, 4 years, 5 years, something like that. Maybe 2020, 2030, 2028, 2030, somewhere in there for that generational buy for yourself. Let me ask you guys that. Do any of you guys think that this is not the case? Do you have a counter argument to this argument that we're going to blow off top? Do you think that the bull run will extend beyond springtime 2025, March 2025? Do you think that we'll have continuation? If you are young, it's the worst scenario. My whole generation is going to miss the normal returns due to this past few years. I think so. I think you are. I think you're going to miss. I think you're going to be waiting about a decade, or not a decade. We're already in 2024, so you got another 5 years. Or you could just DCA the whole time leading up to the next range to be established higher. I don't know. If you look back on 2000, if you look back on 2008, 2000, those bottoms, they weren't DCA events. They were sit on your hand events. They weren't. They wash out so many companies. They wash out. It's a complete wash of the market. You don't think this is the bluff top? You think it's fair valuation. Did you just see the fair valuation chart that I brought up? Did you see the S&P 500 forward PE ratio? That seems like we've been trading that since 1978. 2000 was dead money until a year or two before the GFC. Yeah, I'm wondering. I'm looking at the fair value right now. I just looked at it a few minutes ago with you. We're definitely above fair value. Without a doubt. We're trading 1995 right now. Factually, we're trading the 1995 to 2000 run. Oh, you missed it? You want me to show it to you again? I'll show it to you right now. Hold on. We'll go over it one more time. Let me post this on FinTwit so that if anyone wants to come watch the show, they can hop in. By the way, if you're on YouTube this morning, I left the comments open for you, so you can chat this morning if you want to, because it is Fed Day. Give me one quick second here. QQQs and IWM. I always forget to put the live stream up on Twitter. Yeah, we'll go over this one more time. We can go through it one more time. Give me just one quick second here. So someone made a comment that no, this is not a blow off top, and they said get shareable link. Here we go. Hey Zach, thanks for saying that you appreciate me. Did I watch Yen's announcement video? No, I don't know anything about what's going on. I haven't seen Mr. Yen in some time. Well, what was the announcement? Was it good, bad, or is he okay? Is his health okay? I hope he's all right, by the way. No, haven't seen Mr. Yen. Don't know what's going on with him. Okay, so we're going to go, and someone brought up earlier fair valuation. And I know some of you were here for it, but some of you were not. 1 second here. Oh, was it Pure Fury? That sucks. Hope he's okay. I haven't seen it. Mr. Talking Monkey, would you post it to me, to my, or send me an email with it or something, or a DM on Discord so I can read it? That sucks. Yeah, let's look at this really quick. Ready? How am I feeling? I'm sick. So totally. You can hear it. It's all inside my nose and up inside of my top. All right, so we're going to take a look at the PE ratio. We're showing this to you earlier this morning. I post this chart every time we get down here, right where this green line is, right? Whenever the PE ratio is down here, I try to post this chart on FinTwit when we're down here. The reason being is I'll hear these guys, these old guys will come on to FinTwit, or not FinTwit, to CNBC, and they'll say things like, don't buy the dip, blah, 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 my bonds this, my bonds that. And in reality, this is where they're buying the dip. They buy the dip down here, and they did it again down here. This was October. They've been doing this shit since 1978. We had material changes to our stock market back here, too. You had banks that began to get more aggressive in their investments in the stock market. We also had Reagan come to power in here. And you can see a material change where they bought the dip. You can actually see it rising slowly over time, too, where they bought the dip. Now, this was back in, this right here, right down in here, this was back in October. They were actually buying the dip. To be truthful with you, they were actually buying the dip back here in June of 2022. And then they bought the dip again back here in September 30th. They were buying the dip again. They didn't stop buying the dip at all So they didn't stop buying the dip. They came in in 2022 and they kept buying the dip. Now the point behind this chart is this. But what's important about this chart right now is this white line that you see here. See this white line right here? That white line, this one right here. It's going right across right there. That is where we currently are in the forward PE ratio for the S&P 500. And we have now surpassed 84 to 89, right? So this is the 87 crash right here. And we've also surpassed the early 90s right here. And what are we trading right now is the question. And we are trading right now the run from 1995 up into June of 1999. And that's what we're trading right now. And you can actually see this here, pull back and then push higher. And that's what we're discussing, right? Are we going to go higher in the market? And if we are going to go higher in the market, what years are we trading? And the other fascinating part here is look at the time frame. You know, if this is May of 95, right? This would be October of 2022. And now we're trying to trade 4 years in about a year and a half, 2 years, about half the time to get to this next top. This is the tech run right here, and this is the rest of it, right? We got this other pull right here. This is Friday, the 1st of February of 2002. So if you think about where we are right now, when you're making an argument, hey, where are we? Where are we going? And this is, of course, the COVID run up here, right? It's still pretty low in terms of the COVID run, but 95 to 2000 is where we're headed. So we're doing it fast. The rate and the clip that we're doing it is pure insanity. So I'm being asked by people I'm asking people, do we have a blow-off top that we're coming into? We're trading a blow-off top for December, March. Will the PE ratios rise so dramatically that you're going to get 4 years of growth, 5 years of growth in about a year and a half, right? Maybe 2 years. Just like rip facing fast. Just rip facing fast. And when people say fair value, I'm like, yeah, I'm with fair value, but this run here has been, it's been vertical the entire way, right? You guys can do this at home. You don't need me to do this for you. If you get here, hold on a second here. Here, I got some cool for you guys. Hang tight 1 second. Hang tight here 1 second. I will post this for you. Give me 1 quick second here. If you have Trading View at home, let's see, can I post this here? So Eugene Park. I want you to plug that. I want you to plug this into Trading View at home, and let me put this on where would S&P 500 be to be back at that green line, 3,500. Yeah, 3,500. Or well, let's talk about where that green line would be now. No, it would not be at 3,500 today. That green line heads higher, creeping slowly over time, going back to 1978. You're talking about 3,800, 3,900, somewhere in there. If we came back to that green line, somewhere roughly around there. And to be honest, whenever we get down there, I don't really care where price is. I care about the ratio, right? So as long as we're down there, I start paying attention to the talking heads, and I start listening to the bears that are out there, and they're like, "Oh, we're gonna crash even deeper," and I'm like, "Nah, dude, they've been running this shit. This is even through the GFC. They bought the shit down. They bought the hell out of it down there. It's just like the slow creeping line that keeps going up. So roughly 3,800, 3,900, somewhere in there." I'll post this for the Twitch gang too. It constantly goes up. It's like a slow riding line. They've been buying the dip like that. This is how like how do I explain this? Like everybody makes things complicated. They're always like complicating stuff. And I'm like, well, wait a minute. You can actually look back and see exactly where they are buying the dip. You can see exactly where they do it. You can see that there's this trend line. There's some guy in an office somewhere, and they don't overcomplicate this shit. They're like, oh, the PE ratio is down at 14 right now. Start buying, like clockwork. Been doing it since 1978. So when you hear these guys on CNBC talking, they're fucking lying to you. They're lying all day long, and there's nothing complicated to this. They just do it repetitively, over and over and over and over and over and over, without fail. This is just parked up here, not moving at all right now. I don't even know if we're gonna get the dip by. This looks like it just wants to go up, baby. Just wants to go up. Where's the 520 target up here? Oh yeah, there it is, right there, Valhalla. Right there. Let's draw that. Let's draw that in. Let's draw Valhalla. Man, I got 522.31 up here. R3, 522.31. R4 and R5, 525.46. 528.61. Woof. Does anybody have 528 on their bingo card for today? Anybody at all? We're talking about just R2 today. Just give me R2. Anybody have 528 on their bingo card? I don't. I don't have 528 on my bingo card for today. You're ready? My God, savages. Pure savages. R1, 517.43. R2, 519.15. My God, you guys are buying calls, huh? You guys are buying crazy calls. All right, I'm going to read some morning briefs for you on what to expect today. Here, give me one quick second here. Huh, interesting. We should talk about NVDA and their growth this morning. Growth expectations. Need one quick second here. S&P 500 rallied 0.6% yesterday to a new record high, supported by a broad number of components. Equal weighted basket of 0.6%. Short-term interest rate futures are pricing in only about 2.5 rate cuts for 2024 ahead of the Fed's interest rate decision. So the bar for a hawkish surprise is pretty low in our opinion. From a gamma perspective, upside potential is clearly there, as the overall SPX dealer imbalance is running at only 426 million, which is not indicative of an overbought market from an option perspective. So we can go higher. The relative modest call wall at 5,200 is the key strike to watch today. We expect the market would quickly trade higher to 5,300 when resistance falls. Let me post that on Twitter. Key point for today. If we break above 5,200, I can't believe I'm posting this. I'm gonna eat these words. So I just posted on Twitter. Key point for today, if we break above 5,200, 5,300 will be fast. And we can see it here already this morning. We've got 517.43. We've got the Valhalla target of 520. And then we have the RTX sell zone above. Whew. Let's go over and check that out. I mean, I don't think we're going here. There's no way we're going here. We're going to change this Valhalla to a yellow, just in case. I don't think anybody's got this on there. I don't think anybody has this. Does anybody out there that you know of have 528 as a possible target? If not today, in next week or so. Does anybody out there have 530 as a potential target? I'll be the first to tell it to you if you don't. If 520 falls, we will target 528.61. I can't believe we've been saying this. 525.46 and 528.61. Let's go to a 30-minute chart and take a peek at it. I mean, look at that right there. Is anybody ready for that big green bar? Like burritos, right? Straight up. Look at that. That looks impossible to me. I got to be honest with you. That doesn't look right to me. And I'm a bull. Let's put that right there. 530. Like one big giant green. Do I really think JPM will let it get there before end of quarter? It's a good question. There is no magnet right now drawing us into the collar. So no, and they're making money regardless. If we pop this, well, we pop the collar, right? But there's nothing dragging us down into end of quarter. So no, I don't think that there's anything that would stop us. And the one thing that's freaking me out this morning was when I just put the gamma on the chart and I'm like, oh, we got 5,400 now. 5,400 allows you to go to 5,300. Whether you like that or not, now we have room now to go there. So is it possible? Theoretically, yes. There is a potential. What is the probability of us going there today? 25% chance. 25% chance. David, how are you, man? Good morning. How are you, brother? 25% chance we can go there today. It's not a big percentage chance, but there is a chance. You have 512 as slightly higher gamma than 520, so I say 512. I'm trying to buy a dip down here. If I can buy this down here, right down here, these green bars, anything down in this zone right here, I'll take it. Whether it's down here, I don't care if it's there. If we get a little bit of volatility into the rate decision, we blast down here, and then that's the move up higher. I'll take that. I'll take that dip buy all day long. I think that's where you are, right? I've got it at 512.50. I've got a 512.55. I'd like to buy that dip if possible. 528C is 5 cents worth a lotto, maybe. I wouldn't be buying any lottos here for end of month until we get the personally, myself. I'll wait for. I think we're still going to roll down a little bit here. Chase Winters saying Spot Gamma is wrong so far in expiration, and they drop it lower and lower. What are they saying out? What is Spot Gamma saying out there, Chase? I don't follow them anymore. I got no opinion of them anymore either. I don't know what they're saying. Morning. How you doing out there, short seller? Good morning, brother. Did you have a chance to see the I put up a PE ratio chart for you to take a look at or consider. There I did post in the chat what to plug into TradingView to see that PE ratio, and you want to be viewing it on a daily or weekly basis. Yeah, I don't know what those guys. Thanks for reposting that right now. I appreciate that. 5:30 SPY, not till April. So just a heads up, if you're just joining us, I don't think we're going to 5:30 right now, but I do want you to be aware. I want you to be aware. The gamma profile for the market this morning has opened up to 540. The wall at 5,200 is now weak. It's weak. It can be broken through, and we can quickly trade 5,300. I need you to be aware of that, even if we're not going to do it today. Just want you to be aware that the window is open to trade that. Please be aware of that today. I need you to be aware of it, even if you don't agree with it. Just be aware of it. If you're short, I need you to be aware. Well, mostly if you're short, I need you to be aware of it. There is a potential for us to trade that today. 528 is a possibility. It's not expected. As a matter of fact, that target of 528 would be a 2 sigma move. That only happens 10% of the time. But I just want you to know that the conditions are right for us to trade it. Don't come. If I'm going to eat these words, I already know it, right? We're not going to trade it, and you're going to be like, Cap called 5,300. Guy's fucking crazy. I just need you to understand that it's there. There is a chance we can trade it. It's a total gamble. I'll say that. It's a gamble. But 5,200, that wall is open. It was not open. It is now open. That is not a resistance anymore. 5,200 is nothing for us to trade. Please be aware of that. And that was as of this morning. So this is like very new information. We had it as half an hour ago. Oh, dude, look at that gap in HYG too. HYG's got a gap all the way up to 77.82 to fill. Dixie getting blooded. They had Dixie today up at $1.04 and change. $1.04.15. That was from Japan. The Japanese rate decision made Dixie blast off. VIX currently at 14.05. We hit 5,200 if the Fed cuts a hike today or no catalyst needed. No catalyst is needed. None. The target for today, if you don't know, the target for today is 520. That is today's target. 53 can come like it's nobody's business. Is the Fed cutting today or not? I don't think that they are either. If you weren't here yesterday, the highest probability for the Fed today is no rate cut, no rate increase. That would be the expectation. Your next expectation would be a rate cut. today, an unannounced rate cut. The unannounced rate cut today, even if we get a rip to the upside, is bearish in my opinion. I don't want to see a rate cut today. It can be perceived as bearish if we get a rate cut today because it's unexpected, because it also shows that that they've broken something that they haven't seen or they just found. If they were to not cut today and cut at the next decision or in June, that would be perceived as bullish. So the perception today should be no rate cuts. If we got a rate increase today, the initial reaction would be bearish, but it would be a bullish thing. So if you ever saw like 25 BPS today, you would want to buy that dip or find a bottom down there to buy to take the market long. I'm trying to read what you guys are saying. See, like the dot plot and Fed funds rate, or Fed futures fund rate. I don't put a lot of value into those projections. It seems like more gambling to me. Not gambling. Well, how do I rephrase this? We were discussing this yesterday. So we were at 3 rate cuts, right? We were at 7 rate cuts. That seems to me like it was. Remember, we were at 6 rate cuts or something, 7 rate cuts heading into this year, and it seemed like more of a form or function of trading the market than anyone believing that. And I think the same thing holds true with. I think we were at 3 rate cuts a couple weeks ago, and then we went down to like 2 rate cuts. A few days ago, right? So, I think it's more a function of gambling, not based on any kind of reality. So Chase is saying the window of weakness is now. Okay. Yeah, I'm not a prescriber of that. For me, it's gambling. It's pure gambling. And anything that you see out there for rate cuts, any future Fed rate cuts, it's all bullshit. The whole thing is bullshit. Scam. Fucking scam. It's a bunch of people fucking gambling on how many rate cuts we're going to have. I'll be honest. That's how simple it is to me. Chase, I missed what you were saying, man. I saw a bunch of chat go by, and I missed a bunch of what you guys were saying. Are they coming out? Are they coming out and discussing this morning that the window's open to go to 5,300? Am I the only one saying that in public? Yeah, put out a Tesla update this morning. We put out a Tesla update Monday or Sunday for Monday, Wednesday, and Friday. You should have one this morning. We update Tesla every 2 days on the website on tradethetrigger.com. Yes, every day or every other day we do a Tesla update. You get asked that all the time. Markets are a little changed ahead of the FOMC rate decision today. 2 p.m. Gamma situation is straightforward. Call wall 5,200, gamma flip 5,150. Zero date call wall is 5,190. Short-term interest rate futures are implying 64 BPS and cuts for 2024, and we think the probability is low that the Fed will telegraph a substantially more hawkish path. But Powell likely will signal a higher for longer, long-term neutral rate, as several Fed speakers have indicated they are open to this idea, which is really very common sense given the fiscal dominance. So today, look for Jerome Powell to signal a higher for longer term neutral rate. That's coming out. That's coming out this morning from the boys over at Gamma Labs. I'm going to read to you some of what CNBC is saying this morning. I hope I don't lose my voice this morning. The Fed has to do a lot at its meeting this week, but ultimately may not end up doing a whole lot in terms of changing the outlook for monetary policy. The meeting will likely be all about the Fed Open Market Committee's dot plot of individual members' interest rate expectations. Officials also will release their quarterly update on the economy, specifically for gross domestic product, inflation, and the unemployment rate. These are all sources of volatility today. The Federal Reserve has a lot to do at its meeting this week, but ultimately may not end up doing a whole lot in terms of changing the outlook for monetary policy. In addition to releasing its rate decision, actually, let me just stop there for a minute. So the CNBC is pushing a narrative today, right, that the Fed is going to actually change its language to a higher for longer and not to expect rate cuts. In addition to releasing its rate decision after the meeting wraps up Wednesday, the central bank will update its economic projections as its unofficial forecast for the direction of interest rates over the next several years. SPOO's squeezing right now, trading 515.97. Yet the general feeling is that policymakers will stick to their recent messaging, which has emphasized a patient, data-driven approach with no hurry to cut rates until there's greater visibility on inflation. Boy, they're really fucking, they're like, I'll tell you what, I don't know what rate decisions you guys are sitting in. I don't know what you guys are watching out there, but, or whatever CNBC is watching, but they were extremely dovish the last Fed rate decision. In my view, they were extremely dovish. So they're pretty much saying maybe pulling back the reins on that dovishness. SPOO's now trading 516.10. I'm not buying this bullshit from CNBC this morning. Yet the general feeling is that policy makers will stick to their recent messaging, which emphasized a patient, data-driven approach with no hurry to cut rates until there's greater visibility on inflation. I'll tell you guys what, man. They need a story. They need a story, because that is what I posted this morning. Which I posted on Twitter this morning. What shit are you going to make up for a story for the market of when they're going to cut rates? What bullshit are you going to make up out there? Like, it just kills me, man. They always need a story. Quote, they'll make it clear that they're obviously not ready to cut rates. They need a few more data points to feel confident that inflation is heading back to target. This is all bullshit, by the way. Said Mark Zandi, chief economist at Moody's Analytics. I expect them to reaffirm 3 rate cuts this year. So that would suggest the first rate cut would be in June. That's true. That's what they've always said. So I don't know why we're having this. I don't know why CNBC is having this conversation of more doom and gloom. Now, that's not what the Fed's going to do. It's not what Jerome does. Jerome is not known for this. So I'm patiently waiting for what Jerome has to say today. You can bet your ass, right, that he's going to be questioned today on, are we getting a rate cut in June? People are going to want to know if that's the case. And he was quite dovish in his last appearance. Remember that. He was quite dovish. He didn't change stance and become a hawk in the last rate decision. And I don't expect that today either from him. Markets have had to adjust to the Fed's approach on the fly, scaling back both the timing and frequency of expected cuts this year. Earlier this year, traders in the Fed funds futures market were anticipating the rate cut campaign to kick off in March. Bullshit, right? All bullshit. And continue into the FOMC had cut the equivalent of 6 or 7 times in increments of 0.25 percentage points. So we can tell right now that it's all bullshit, right? Now the market has pushed out the timing until at least June, with only 3 cuts anticipated in the current target range of 5.25% to 5.5% for the Fed's benchmark overnight borrowing rate. The swing in expectations will make how the central bank delivers its message this week all the more important. Think about this for a minute. Think about the logic think about the logic that is here. All right. You got no rate cuts. You have an expectation of 3 rate cuts this year. And you have to write a story because they get backed into a corner of what are they going to do? Are you going to try to sell me a story that after today or after today, are you going to sell me a story that, oh, you might not get a rate cut in June? They're going to have some emergency rate cut meetings in September or October or December. The rope that you've been given, right? If you're a bear, if you're a hawk, the rope that you've been given has been pulled away from you with time. Time. It's been taken away from you. We know what the market does. They price this shit in before it happens. And the longer that the Fed delays, the more dovish they will become as they get closer to the inevitability of a rate cut. SPY now trading 516.32. Did not get a dip buy this morning. Wanted to buy lower. Now we're chasing price higher. Second target to the upside, 516.71. R1 currently lies at 517.43. Seems like a bull trap, man. I warned you guys this morning, so I'm only going to say it. I'm not going to say it again. You break through 520, 530 is open. It's a window of weakness, so 100, 200-point rally. All right, I'm going to take a quick break. I'm going to put CNBC on for you as we rip faces right now, heading towards 5,200. SPX, keep your eyes on this chart down here. This gamma chart, we are heading right now to 5,200 on SPX. I think I'm just going to leave this open. I think I'm just going to leave. I'm going to pause the. I'm going to pause this chart down here. I'm just going to show you 2 key places. Okay. Here's your first one right here. This little yellow box right here. We're going to open this up so you can see it. And here's your next one above it at 5,200. Snap yourselves some lines at the all-time highs, and then at 5,200, right here. And I'll be right back with you, taking a quick break to get some more coffee this morning. I'll be right back with you guys.
We have posted out the US EIA weekly petroleum status reports on the feed for anybody interested.
Or download the app.
Welcome back to Squawk on the Street. I'm Bertha Coombs with your CNBC News Update. A federal appeals court is hearing arguments this morning after blocking a controversial immigration law just hours after the Supreme Court allowed it to take effect. The measure allows police to arrest migrants who illegally cross the border from Mexico in Texas and gives state judges the power to deport people. The Irish Prime Minister unexpectedly resigned this morning. Leo Varadkar, who visited President Biden in Washington just last week, said he will step down as soon as a new party leader is announced. Varadkar said he had no firm future plans, but he does plan to remain in Parliament. And in the UK, a data watchdog is launching an investigation into an alleged breach of Kate Middleton's hospital records. The probe comes after a report that staff at the Leaf Hospital, where the Princess of Wales underwent abdominal surgery, tried to access her medical records. The princess has been the subject of conspiracy theories as she has mostly remained out of the public eye since that procedure. David, back over to you.
Thank you, Bertha. Well, if you haven't heard, it is day 2 of the FOMC meeting. Steve Leisman is in D.C. getting ready for the press conference later today. He's also got to look at what investors may expect from Fed Chair Powell and, of course, the old direction of interest rates. Steve.
Yeah, David, I think it's an interesting meeting. No explicit policy change coming, but markets are listening for potentially significant changes in the outlook that could, of course, influence policy, as in the direction of those old interest rates and the economy. Here's what the Fed forecast in December versus where we're at right now. 1.4 was the GDP forecast.
I want to know from you guys out there. So I'm listening right now to CNBC.
Proposal was negative.
We're running at 3.9, not far off where the Fed thinks we ought to be. And I've highlighted the core PCE.
Let me ask you guys a question here. Like this is a fundamentally. Tater, let me bring this back up here. Let me see if I can get a poll going. I'm here. I'm right here. I'm right here. Hold on 1 second here. Let's see, put that up. I was just listening to the guys on CNBC, and I'm like, when did this conversation start? I saw the Nick Timmerow stuff, but I was like, boy, they're really working up the language change here, or point. Listen to this really closely again.
Politics and the Fed. It found 70%
I'm here.
of our respondents think the president election
Bears mad.
No influence on the Fed's decision about whether to cut. 12% thinks those cuts could be more likely and 15% less likely. 88% say the Fed would just go ahead and reverse course and hike if needed, despite the presidential election, while a small contingent, 12%, thinks that it would make them less likely to do so. All of that is to say survey respondents, and I think the market itself, take the Fed at their word that they are data dependent with no obvious serious economic risks right now on the horizon. And
who's begging for this? Is this like the bond market guys? Are these like bond bros doing this?
In the decision making about when and how much to cut, guys, not necessarily the political cycle. Sarah?
All right. Thank you, Steve. Steve
Sure.
Leisman.
Like they're basically saying the Fed's going to come out and be a hawk today. Is that they changed the language more hawkish? Did I have that wrong? Am I missing something here?
And expects the number of Fed rate cuts will be less than the market is currently expecting. Former Federal Reserve Chair for Supervision, Randy Quarles, joins us now. It's good to have you back. Just on that point that Steve left it on the politics. And I guess it's good that people don't expect the Fed to be political. The Fed goes to great lengths to state its independence and to prove it. However, we talked to Vince Reinhart yesterday, who's at BNY Mellon now, formerly at the Fed, and he said they might not talk about it, and it won't come up in the minutes, but it'll be on all of their minds that if they wait for a rate cut in the third quarter, that is going to be perceived, or at least there will be headlines about the Fed cutting into the election. Do you agree? You were at the table.
Yeah, I'm with you, JC. Like, why now would he? This is like, this looks like fucking theater from CNBC, or at least the news. This looks like bullshit for headlines.
In the discussions, and that affect the decisions that people are making. Obviously, the fact that there's an election going on, the members of the committee won't be unaware of that, but it really won't affect their decisions about what they need to do with respect to monetary policy.
Yeah, do you guys, I don't recall, like, why would Powell change his stance? I don't understand this. I'm trying to, is this just for headlines? It has to be, right?
It's moving, but it's not moving at the rate that would be necessary for interest rates to come down as quickly and to the degree that markets are currently expecting. I think that there's frequently in market assessment of the Fed's likely policy path, a view that, well, 2% was a rather random or at least arbitrary target, so they don't have to get down to 2% before they can declare victory. They could declare victory at 3%. And that's just not how the Fed is going to think. They don't have to get all the way down to 2%. But if inflation remains higher than their...
Dude, they always go for 2%. Like, what are these guys saying? Like, we can see it.
Lower interest rates as quickly as markets are expecting. I think it has to get closer to 2.5 as opposed to 2.9 before they could say, now we can start lowering interest rates.
Well, 2.9 is core PCE, so it excludes food and energy. If you factor in food and energy, which people do, it's at 2.4% the year over.
Like, now they're saying that, they don't have to hit 2%. I'm like, they do. They fucking do it every time. You can see the rate of inflation come down and slam in at 2% every single time. Like,
sort of the effect of monetary policy, the effect other...
Yeah, nothing's changed. I'm with you, JC. I'm with you. Jimmy Berry, I'm with you, too.
They'll need to see that come back down closer to their target.
So when do you guess that will happen? When do you think the first rate cut comes? Markets now circling around June.
Certainly not before June, and I think that it's possible that if we don't see further progress on some of these measures that the Fed has been very clear that they're focusing on, the measures of tightness in the labor market and the inflation target, that you might not even see a rate cut in June. So I would say that, the current market expectation, I think, is for 3 cuts weighted towards the end of this year. I think 2 is more likely, given the way that I expect the environment to evolve over the course of the next.
Oh, the bears are out.
And it's possible that would mean that there wouldn't be a cut even in June.
I know. I'm watching this guy right now. I'm like, they're just making shit up now.
They go from 3, where they were in September this year, to 2. Randy, thank you very much for the time today. I really appreciate it.
I must be watching a different Fed speaker, or different Jerome Powell.
Jewelers are down this morning, despite what was a beat of earnings estimates. We're going to talk about the quarter. That'll be next.
Oh hell no! I'm with you, Jimmy. I realize they're fudging the inflation for sure. They're most definitely fudging it. I was looking at. I don't know that I shouldn't say they're fudging inflation. We were discussing. Hold on, let me mute this here. We were discussing the other day. So Jimmy's saying the stock market is up, the oil is up, copper is up, cocoa is up, commodities up, housing prices are up. Do you not see inflation? So there is a key point here. This was an article. This was a comment section in a Reddit post earlier in the week. And I couldn't believe that people couldn't grasp the concept that you're still not stopping the price of things going up. If the rates of inflation, here, let's talk about this real quick again, because I guess we have to discuss this again. So you have the rate of inflation, right? This is eggs are $2, right? $2. Eggs. The rate of inflation, 2%, means that the price of eggs goes up at 2% every year. Does that make sense to you? So a decade passes, right? Eggs are now, let's say they're $2.12 now. Right? $2.12. We have COVID. COVID rate of inflation went up where? 8, 9%, right? Just blasted off. Woo! Blasts off, right? Eggs now $6. Right? They bring inflation back in line. Where it's at 3-4%, right? Woo, right back down here again. There's an expectation. There's an expectation from a lot of people that when the rate of inflation comes down, that eggs should come back down to $2, maybe like $2.50 or something. That is not the case. That is not what happens. That is not what happens. The rate of eggs is now like $6.02. Does that make sense? $6.02. Doesn't come back down to $2.50. It just slows the rate of the price of eggs. So if you really want the price of eggs to come back down to $2, so is there inflation? Yeah. We jumped about a decade ahead. About a decade. We literally threw like a decade, if not more, in like a year, right? Like you had $2 eggs, now you got $6 eggs. How do you get eggs back to $2? It's not by year-over-year inflation of 2%, is it? No, you have to go into deflation, right? You have to get above or below. You have to get the year-over-year inflation rate to go negative, right? You don't do that with 5%, 6% interest or interest rates, do you? You got to go way, 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 way higher, right? Yeah, so we had that conversation yesterday. There's an expectation of people are expecting when inflation comes down that the eggs are going to go to $2. That's not what happens. That's not how it goes. The rate of inflation has nothing to do with the price of eggs. He is. He's a dove. He's a dove. He believes in MMT. He believes that printing money will solve our issues. 100%.
For a rough fire invasion, it will take some time.
That's right. Deflation is necessary.
Do you want?
You would have to have basically negative inflation, right? You have to have like minus 0.05 to begin to bring the pricing down for all of these goods back to pre-2019, or maybe slightly like if it was normal 2% inflation, I guess eggs would be up another 25 cents or something. Absolutely. We know that, right? The Fed has to do what? Destroy employment, right? Destroy demand. And that's not their mandate, supposedly, right? Or a recession or a depression. Any of those things. War. Something big, right? That would be the only way that you'd get the price of eggs to ever come back down. You cannot correlate the price of goods to the year-over-year inflation or in terms of like a pullback in prices. It's not going to happen. It's not going to happen when we're at 3 or 4% either, year-over-year inflation. Can we get a green Hulk dick to 520? I think I'm with Uncle JBJ on this one today. If I had to do my own thing, I wonder if it's a big nothing burger. If this rate decision, sometimes you get rate decisions where they're a big nothing burger. Great value, large white eggs, 12 count, $2.06. Active price right now. So let's ask that question. So we're going to talk real pricing. Real pricing. What were a great value rack of eggs? How much did they cost pre-COVID? I know what they cost. $1, right? They'd be on sale for 99 cents, right? So now we're double that price right now. Double. If you think about how Jay Powell's actions, he participated in perhaps the loosest monetary policy in U.S. history. I know there's code which muddies the picture, but I think his actions are clear. 100%. Sam saying 89 cents. They were 89 cents at one time. Yeah, organic eggs are like $6. I know what they cost. I got kids, man. Bananas used to be 17 cents a pound. They went up to like $4 and then came back down. Yeah, I don't see any disinflation in anything. So between my taxes are through the fucking roof. Like they're just obscene right now. I got one of my tax rate increases said you're getting this one because we think everybody rehabbed their house. It was like a remodel tax for every homeowner in my town.
The forecast is -15 with a previous of -15 spot 5.
I think another thing that we could do here would be what are you guys thoughts on tax for the ultra wealthy? That's something that what's his name always says. The guy who's found who's now a hippie, Ray Dalio, is always like, at the end of a debt cycle, you'll see the ultra wealthy get hammered with taxes. Saying yes and give the money to the people. Don't do that. Don't tax the ultra wealthy. They pay at least the same effective rate. Yeah, Ray Dalio talks about this. He discusses that it's not so much a function of whether we want it or not, but it happens in these cycles. Just need to count loans secured by I'm missing some of you guys are saying here. That should be the first thing you should do. The ultra wealthy don't need all that effing money. Yeah, we had a discussion on the show recently about home buying and how this is going to sound crazy to some of you. Some of you were probably here for that discussion, but some of you probably weren't. How the new rules that were put in place during the GFC kind of forced people to not take out risky loans, right? So if you're a home buyer, after the real estate meltdown, what I noticed was that people were buying homes with cash, and they were also taking loans that were private loans. They weren't taking traditional mortgages. I noticed a lot of guys were taking hard money loans. And when you take a hard money loan, the rules are strict. Like you gotta do the flip. You gotta put it on market. You gotta get it sold. And there's a time. The clock is ticking the entire time. Those guys, I watched these guys. What they did was they started taking the profits. They started buying their own houses with their own cash. And they started funding their own rehabs. Now, they do take mortgages out against these homes if they buy and hold. So they can make interest-free money, right? Interest-free loans. But the one big difference that I noticed was that you weren't allowed anymore to just take bullshit loans with bad credit, no job, like own 2, 3, 4 houses just sitting there. There's like an effect from that is bad for young people today. So because you're forcing people into being more responsible with risk, that's some of the effect of that is wealthier people, believe it or not. you end up getting people that are more resilient in their wealth. Can I look at Spotify? Hang tight. I'm going to put it up for you here in the background. CMG with a little bit of a roll going on. Spotify with a nice bounce off of its daily trigger. I like the chart a lot. Nice retest below at 250. Back checked its hourly trigger this morning at 254.21. If you want some targets for the upside targets on this one, you've got some volatility here. You see this volatility right here that you have to work through. But you did just tag your last. You did just tag right here. That one right there you just tagged. You've got some work to do on Spotify.
5 minutes time.
You've got a lot of volatility right in here.
Confidence flash with a forecast of -15 and a previous of -15 spots 5.
Your next upside target is 262. The one thing I don't like about Spotify here is I do not like I don't like all of this right here. There's some aggressive selling going on in here. If Spotify loses 250.34, you're looking at a 50-point drop. Whew. Whew. I'll leave that one up for you here. Do I think it's just noise? Yeah, I think we're going to my target on this run is 530, 535, then a major correction, and then 550, 560, then a major correction, and then 59.60. So no, I got no care. Like Nasdaq's going to go to the moon. Nasdaq's going to the moon.
BP's head of
Absolutely.
BP are to reduce crude oil capacity at its Gelsenkirchen refinery in Germany by 1/3 due to weaker demand outlook.
Got it. Jenna, thank you very much. It's really good color. Really appreciate you joining us here on the earnings.
Thank you, Sarah, and thanks to our team.
Jenna Drosos of Signet. Stock still down 11%.
Stock's not doing well.
Give me 5 minutes. I'll be right back with you guys. I got a text come in. Give me just one quick second.
All right. A lot more of Sarah coming up in the next hour.
Also the CEO of Astera Labs.
1 minute remaining.
Hey, Mr. Talking Monkey, I just responded to you in DM if you want to read it.
Protect your trades.
Ten seconds.
CNBC.
Still waiting.
Good Wednesday morning. Welcome to Money Movers. I'm Sarah Eisen with Mike Santoli. Today, live from Post 9 in the New York Stock Exchange. Former Fed Governor Randy Kroszner with us on what investors should be listening for this afternoon during the Fed decision and news conference.
Then Intel awarded $8.5 billion in CHIPS Act grants, with billions more in incentives. Stock off its early highs. We are live on the ground in Arizona this hour.
Plus, some are calling it 2024's first AI IPO. Astera Labs making its public debut on the NASDAQ. The maker of data center components counts Intel as a backer and AMD and NVIDIA as customers. We're going to talk to the CEO in just a moment. First up, though, on the markets, ahead of the Fed decision, we've turned positive on the S&P 500 after the S&P had a sharp rally yesterday and a nice little turnaround. NASDAQ is lagging today, but just barely. Not a lot of action going into the Fed meeting. Though buying of bonds, we saw that yesterday. We're seeing that continue today. Mike, I said last hour it feels a little bit hawkishly positioned, even though the stock market has been strong, because we've had some wobbles in recent weeks, and also yields have pushed higher. The dollar is stronger.
For sure.
Maybe the market is anticipating a change from 3 dots or cuts this year in projections to 2, and maybe a more hawkish tone from Powell?
I think there's no doubt the bond market is bracing for something like that, just where yields have gone. I actually see the little buying the last couple of days in treasuries almost as it kind of going a little more toward neutral ahead of the meeting, because you don't really know what you're going to get, because it has been such a huge jump in yields. If you just do the language analytics of Fed speak, it has been more hawkish. They have been emphasizing they're not going to be in a big hurry. They want more data. That being said, I think the good news is that this has not really been a Fed-driven market principally.
No.
So therefore, you have other things to fall back on. You mentioned the sharp rally yesterday. Continued shows of resilience. This market keeps looking at these perfectly good excuses to pull back in a broad way, and it doesn't do it. It will at some point. It's still kind of maintaining this overbought position. But I was, look down the list outside of tech even. JP Morgan.
Market is not overbought right now. Do not listen to that bullshit. Market is not overbought.
It's not just tech. Tech has definitely lost some momentum. The overall market has really slowed down a bit, even though it's making new highs. But 18 new highs in the first quarter of a year is kind of a record pace for how many you're going to get over a calendar year. Obviously, not necessarily.
Yeah, I mean, if you would have told me that the market, so in January, the market was expecting the Fed to cut rates today, the March meeting.
Yes.
And they expected rate cuts at every meeting this year.
That snapshot of the Fed funds futures pricing said March.
And we've taken all of those cuts out and left 3 for the market, and the stock market has handled it relatively well, to your point.
It has. And arguably the economy as well has managed to fight through it.
Well, that's part of the reason why. Our next guest says to buy any weakness in this market, as growth, stock momentum, and a broadening in performance and equities will lead to more upside. Joining us now, live at Post 9, UBS Wealth Management.
But I can't believe that. I can't believe some of the stuff that these guys say.
So you have been.
They're like, CNBC is like, oh, the market's surprisingly resilient to the Fed maintaining higher rates.
Where they've come.
Yeah.
You can tell
that's what happens when they raise rates.
Driven by the Fed, right? This is
like there's a historical precedent for this.
And fundamental macro growth-based market. You can see that in the
it's like
highs in the S&P B, the fact that we hit an all-time high in equal weight last week, and C, the fact that at this point in time, this was as of yesterday morning, about 38% of the S&P 500 has appreciated more than the S&P 500. So what we are really seeing, I think, is much more enthusiasm, a celebration of an earnings recession behind, of what AI is going to do, not only to technology companies, but everything from healthcare to industrials to reshoring to industrialization. And so I think today is really, all about the dots, and the projections.
So, but when you say this is an earnings-driven fundamental rally, how much are earnings expectations rising? And does it match the kind of the rise in the market that we've seen in valuations?
So ultimately, that's the question, right? When people are talking about, is there a bubble, is there not? It is definitely true that especially for the Magnificent Seven, for growth and for IT, we are at higher valuations than we have been in history. However, we are looking for—
That's not true either.
Growth this year, 6%.
People just fucking make shit up.
Earnings growth is not it's not steady, right? We still see a lot of growth in—
I just showed you the forward PE ratio like half an hour ago.
With things like AI, they have a lot of cash on the balance sheet. They have very high returns on investment and returns on equity. You're also seeing things like healthcare that are going to benefit from AI. That really depress sentiment. A lot of the tailwinds that have been in the market.
It's mind blowing. My mind is blown listening to some of the shit they just—
tailwinds as we continue
the shit they just spew.
Very strong economy. But again, we're starting to see cracks, which makes us confident that we—
Yeah, is it Tang or Kool-Aid? Which one are we pouring out today?
Today, though, if June is still 50-50, or if we're looking forward to August or September instead.
Yeah, we'll see if they, create more suspense about the next couple of months of data, which may well be the case. I wonder how you think an investor ought to be treating this gift of very good year-to-date returns. It's even been a global move.
Yeah.
If you've owned non-U.S. markets, outperforming bonds. You look at, there have been flows into equities, actually a heavy flow in the last week, but also into cash.
Oh, actually, there's been heavy flow into equities this week.
So if there was one big investor that owned everything,
but we're overbought.
You'd be rebalancing out of equities and making sure you have enough of a cushion elsewhere, or while staying involved, I assume, in stocks.
Yeah, so we've talked about this a lot on the show, about sort of the relative positioning between bonds, cash, and stocks, because cash has acted for the last number of years almost like its own asset class, or like fixed income surrogate. So although asset managers may be very into the markets relative to history, individuals still have a significant cash balance. And the fact that there'll be no move today is almost going to create, I think, a false sense of security that that's the place to be. Because within the bond trade, the question that I've been getting the most is, you said this was going to work sooner rather than later. You keep on saying next month, next month. And so there's a little pushback there. I think broadening out your equity exposure, getting into a little more value, a little more small caps, if your baseline has rebalanced largely to large caps.
Your question to me is, do I think we're lower at the rate decision? I think we're trading 520 today. I want to buy a dip. I don't like buying this. I don't like the grind up. I'm not that kind of trader. For me, I like the pullback and buy a dip. I don't like to be buying the grind up.
Break right now, market highs, a Fed meeting, and
David AMS is saying, do not get short. See my note in Pro Traders this morning.
Ambivalent.
Hey, do you want me to, David, do you want me to put you on the show, man?
It's time to take gains. Well,
David, you want to come on the show and talk really quick?
If it's time to get
we can do that if you want.
Balance portfolios.
Yeah, David. I warned him this morning, man. Like, get out of the way. 5,200 door open. We can go straight to 5,300 like it's nobody's business. They don't believe me. I've told them already this morning. They're telling me no.
Is the election conversation?
But it sounds like your clients aren't overly—
Hey, David, let me.
I would say at this point, there's—
Let me see if I can get you on the show, man. Hold on, brother.
Between pessimism and optimism, as you've seen reflected in the data, right? You see manufacturing, housing, industrials really coming much more.
Big time, man. I'm gonna send you a link via Discord.
Are hit hard by the cost of debt.
Okay, all right. I'll send you a link via Discord. Taking about 5 minutes.
Feeling very differently. So
Roger that, brother.
It in some ways feels like a tale of two cities. and people are waiting for the next information point to get bearish or hawkish. But I think today, and back to the expectations around this afternoon, I think that there's going to be a lot of parsing.
Mr. Talking Monkey,
parsing of this.
are you in Discord? Check your DMs.
Where does the Fed put the labor market in a year or in 2 years? Where do they put GDP? And again, is there a reason to continue to have a Fed multiples conversation? Because we all feel, as you said, that that part of the pricing in happened certainly, largely in 2023 and the beginning of 2024.
Well, we'll do an election conversation next time. Because I am curious what you're telling your clients on that front. Ali McCartney, thank you from UBS Wealth Management.
Bye-bye.
All right, turning to housing. Mortgage rates rising last week for the first time in 3 weeks. Diana Olick has more on how the Fed decision this afternoon could impact that market. Diana.
Well, Mike, it's all about rates, right? Because now home prices are still gaining and we have tight supply continuing to push prices higher. So you saw it in last week's mortgage demand. Mortgage rates rose last week for the first time in 3 weeks. And as a result, demand came down for the first time since February. The average rate on the 30-year fixed rose to 6.97% from 6.84. Now, that was last week's average from the Mortgage Bankers Association.
All right, David, I put a link into your DMs.
Daily. You see that by Thursday, the rate had crossed back.
Do we have a Discord-only subscription? Yes, we do. We've got, so here's the deal here on what we've got going on here.
Which are most sensitive to those weak.
So we have a commitment to always offer what we've always done for free. One of the things so if you ever want to watch the show, it's always going to be up for free. If anything, it's going to be more free and more available. The show will be more consistent. If you want to chat on the show, you can chat for free on Twitch if you go to Amazon Prime Gaming and sign up there. You just Google search Amazon Prime Gaming. You can subscribe to us via that outlet, and you can always chat. Now, like our chat, we had to close our chat down to public chat due to scammers, Russian bots, I don't know, like all kinds of craziness, right? Our Discord was the same thing. Leaving it open and free, we invited in wolves and Robin Hooders and scammers and bots and you name it, just didn't stop. So now what you can do if you like is if you want to join our Discord or anything else, you can go to a website called tradethetrigger.com. We offer multiple subscription levels. The subscriber, I think, is $32 a month. It's at $360 for the year, something like that. And that gets you access to our Discord, gets you some tools, gets you updated charts with the triggers on it, all kinds of cool stuff. So you can just go there and pick out what you want. If you go to the membership page, I think there's a Discord-only subscription as well. I'm not positive on that, but I think that there is. My thoughts on XLF, going up. Going up. Absolutely going up. Whole market going up. Whole entire market's going up. But yeah, there's all kinds of different choices for you. There's absolutely free. There's all the way up to being a pro trader where you get the tools and all that kind of stuff. Oh, cool. Hell, are you in the Discord right now? Momo, say hi in the Discord. I'll say hi to you. Go to the general chat and say hello. Let me find the general chat. Hold on a second here. Ah, there you go, brother. Hey, buddy. How are you doing? Oh, wait a minute. Wait a minute. I think he might be here. Okay, so we have a special guest right now as we grind up into this supply. Hey, buddy. You're live, by the way. I can't. Oh, wait a minute. There we go. Oh, this is going to be so awesome. I can't wait. David, can you say something so I can hear you? I can't hear your voice at the moment. I can't hear your voice. Let me see if I can send him a chat really quick. Hang tight 1 second here, guys. Looks like he's muted.
Or download the app.
Shares of General Mills on the move this morning. Strong earnings for the cereal giant, a beat on the bottom and top lines, while also reaffirming full-year guidance. On the call, the company saying it expects, quote, continued input cost inflation in the current quarter. The stock is near a 7-month high, though I will say,
David, are you still there?
a lot of it is about expectations.
can you
and
hear me?
relative
I can hear you now, brother.
Still seeing organic sales.
Hold on here. Okay, everybody.
It's just still getting.
So we've got David AMS coming up right now. David, are you ready to go on or no?
Hold on 1 second. Let me get my
All right.
set up.
So you are live, by the way. We can hear your voice on the show.
All right, cool. Hold on 1 second.
Yep. Let me know when you want me to put you on the screen.
Yeah, hold on 1 second.
So I just want to let you guys know we have David AMS on the show this morning. He's going to come on and talk to you about what the expectations are for today. You heard me tell you this morning that if we break above 5,200, that the doorway to 5,300 is wide open. So the ceiling or the door is not locked any longer once we get up there. And to be very, very careful with being short today, and that you can get your ass blasted this morning. You can see we continue to grind higher right now. We're now trading 516.23. We broke above this orange band here earlier, so your next target above is where? 516.57, 516.69. And then the next target above there at R1 is 517.43. So give me just a moment here. He's trying to work on a presentation for you to explain to you why to be careful as the morning moves forward. On the bottom part of your screen down here, you see IWM here, triple bottoming, right, sitting on its daily trigger, awaiting the Fed. This goes counter, of course, to what CNBC has been pushing on you this morning, isn't it? Which is a front running of inevitable rate cuts in the future. We also know that Jerome Powell has not changed his speech or his speak at any point. Now, there has been some floating of that idea from smaller Fed presidents. There's been that floating of that idea on FinTwit. There's been a float of that idea even this morning on CNBC, that he's going to switch his speak more hawkishly. Well, you know what? Maybe we're not going to cut rates this year. Or maybe we're not going to cut rates in June. Higher for longer. Now, what are my thoughts on higher for longer? I like it. The longer we stay higher for longer, the safer bulls are. In my viewpoint from previous history, the moment the Fed starts cutting rates, look out below is my mantra on that. Now, we haven't hit 2% inflation. Inflation and unemployment and employment has been bouncing around, right? No velocity in any of those data points, right? We want a little bit up, a little bit down, a little bit up, a little bit down. And the longer that happens, the market remains safe for more upside moves.
Just give me 2 more minutes, Cap.
No worries, brother. Do your thing. Well, no, so it doesn't really. So that's a good question. IWM wants the cuts, though, right? I don't think traders care if there's cuts. You got to remember that this is like the Fed funds rate. This is all gambling. You guys don't get this, right? It's accumulation and distribution. Not you particularly. I mean, in general, like there's a thought out there that there needs to be rate cuts. There doesn't. There just needs to be the story of a rate cut. Does that make sense? So if they don't cut rates today, there is going to be an anticipation that they are going to cut rates in June, no matter what the garbage that comes out of CNBC's mouth is. And it doesn't matter if we cut rates in June. There's an inevitability to it, and the market will price it in, is the point. The more rope that you take away from an inevitable cut, the more a chance of this huge move into, hey, let's try, like we're going to come in June, and if we got a rate cut, the move will already have been made. Does that make sense to you? Yeah, it's like you can't tell me. You're not going to sit there in CNBC and tell me, yeah, the Fed's going to get all hawkish, and you might not get a rate cut this year. These people they're like whores, or buyers are like whores, right? They don't care. If they think that they're getting a rate cut, they will price that shit in before we ever get there. And they're not going to wait for the rate cut in June. They're just not going to do it. You'll see it priced in, and you probably see CNBC at that point say to you, when the eventual rate cut does come, hey, you should buy small caps now as they dump into you. Does that make sense? I don't know if it does or doesn't, but the hawkishness. I'm with you, JC. His speech or speak, right? The Jerome speak has become more and more and more dovish over time. It has not become more hawkish. We haven't had that. If we got that today, on a short-term basis, yeah, the market could come down. But I don't anticipate that. They haven't been adversarial towards us, so I don't know why we're expecting that from them today. IWM needs to be above 202 to show strength. So IWM currently is parked on its daily trigger. It is currently above its hourly trigger. That's extremely bullish to me. To me, that's bullish. That's all I need to see. Price, hourly trigger, daily trigger, all in order right now. So I see it as bullish, or at least currently at the moment. As a matter of fact, we're gonna put some sauce in this too, right there. 205, 203, and some change. And right here. Nope. Right there. There's your IWM chart down below. What is the chance they blast this to 5,300? 10% chance. I think it's 25, but for a 2 sigma move, 10% chance if they do it today. But again, we're in a Fed day, so I think anything could happen. I think anything could happen today. You know, Chase, it's like we can go to 505 today. 505, 530, all in today. Depending on what the Fed says.
We have posted out the full CoinDesk article on our feed for all those interested.
Oh, that is to say, pick up some zero dates for they've got 8-cent calls for today for 530. I wouldn't get them that high. I'd get them like 520. I wouldn't get them that high. I would get them like 525s. R3 is at R2 is 519. So 519C. Valhalla is 520. This is what people in the market think we're going to today. R3 is 522.31. And then you've got this big zone up here, 525.46 and 528.61. So I wouldn't necessarily get 530s, Chase, if you're trying to take that trade today. Yeah, you know what's crazy about the ads? I don't even get the money for them. I keep playing music every day. They take all the money for the ads. I'm gonna turn them off for today. I'll turn them off. Hold on a second here. Turn the ads off. Hold on, man. I got you covered. Hold on, JC. Hold on 1 second, brother. Ads are off on YouTube, at least. Twitch, I don't know how to do those. Hey, what's going on, X? How are you? Hey, thank you, X. I appreciate that. He's been here since day one. It's changed a lot, hasn't it? Do you know what I did? Do you know what I just got? Hold on, let me drink some water. Whenever you're ready, David.
Yeah, cool.
Are you ready?
Yeah.
All right. X, come back. X, I got a laser show, man, and some fog machines, dude. We got to talk. I'm going to bring up David AMS really quick, discuss with you guys what his expectations are for today.
Well, you know,
morning, David.
Hear about this. In regards to expectations, what the reaction will be from the event itself, I have no clue, you know, but I do have my levels pointed out and where I want to operate to and from, because it's a gamble for me to say what the Fed is going to do. You know, if they cut, I don't know what they're going to do. If the market's going to freak out because they think something's wrong, and it could be seen as something good. So, you know, we could go either way. And, you know, I like it when it's stable like this right now, because I don't have a feeling that they are pumping it to a place where they are going to dump it at the moment. And I posted this morning in the Pro Traders chat also, where I said, okay, how bad I want this thing to go down, you know, to get a better price to get for longs. You know, I have
that's where I'm at, bro. Like I'm like I need to bounce somewhere.
Yeah, and I said that, but like on the, you know, the thing is that like the chart is not showing me that they're going to go down for now, and it did everything I was expected, what I expected it to do today. And for London this morning, to give you an idea, I think you guys are familiar sort of how I operate, where I use the Asian session ranges, and I base my trade plan for the day on that. And nothing more, nothing less. There's nothing fancy about it. I look to see what the Asian range is to give you an idea how I operate, since I mostly trade NASDAQ.
You want to explain quickly to these people about the London Open, the Japanese Open, or the Asian Open, and then the New York U.S. Open?
Yeah, I'm trying to clean up my charts for you guys to see it much better on what is happening. Because like my day is basically planned around the Asian session ranges, which runs from 7 p.m. New York time to midnight. And there are a few levels that I plot out on my chart, and that is the Asian high, the Asian low, and the midnight open. What I do when I plot these levels, I wait for breakdowns and breakouts from these levels. So, and I plot the range deviation that I have for the Asian session ranges, because usually they will stay within one standard deviation of that Asian range. And so I saw already one midnight open, New York time, that they were looking to accumulate below it. So to give you an idea and where I'm talking about here, you see this little green box here? I put an arrow on it. See if I can make my screen a little bigger. See? This little box here, it says Asia. right now. I don't do anything in this range except for if I'm awake. But most of the time I wake up 5 a.m. My time, and which is around 11 a.m. Eastern time. And the only thing I'm waiting for is for the midnight open to print. And I like to position myself usually at 1 a.m. or either at 2 or 3 a.m. So, but the foundation of my trading is basically set on the 4-hour chart. The blue lines you see are the 4-hour opening lines. A lot of times, the first hour move that happens in that 4-hour opening window is the fake one, and then they bring it back down. Except for when you're in a discount in a specific area of a session, or we've held a specific level. Now, let's go back to the 4-hour chart to see what is happening, because there's a lot of stuff going on in there. And I was actually hoping for price to go a little lower to trade into this fair value gap where I could accumulate a long to reach my target. Because my end goal target for today is this red box here. It's a 4-hour bearish fair value gap where we worked through already, but I'm expecting like a second rejection or something like that, or a trade through it, and then ultimately to reach 18,404 and take out the stops maybe at 18.6 on NASDAQ. So why was I looking for longs here? Now, there are a few things that occur. I marked the last stick and the first stick when futures opens up. And there was a little gap that was created, and I called them the new day opening gap the day before, but we held it. So, you know, that was the level that was tested overnight in Asia, and they managed to bounce it back up. And yesterday, with the candle from Tuesday, the low of that one, the wick, and the high from the candle from 6 a.m. on Tuesday, there's this 4-hour fair value gap here. Now, typically, I want price to trade down into a discount to go back up. And it's not doing that.
Yeah, that's where I'm at, man. I'm like, give me the dip.
The discount never came. So, you know, in my opinion, we are still trading in a premium. You have to be very careful with taking the long. So, you know, I'm taking it bit by bit. And, but, you know, whatever the 5-minute chart is telling me at that time, I need to trade on that. So let's dive back into that chart to see what clues I saw this morning and why I went long. So let me draw the box again for the Asian session because it's a bit more easier that way. So we have this high here, which starts at 9 a.m. And then the midnight open is here. So basically, this is the Asian range here, right? I'm going to make it a different color. And I'll show you how I plan my day. I have a tool that calculates this for me, but I'm going to show you manually to see how it's done because you don't need these tools. I started doing this, drawing this myself because you know you can slap on any indicator on your chart you want, but if you don't know how to use it and what to do with it, it's useless because in the end you need to press a button at the specific time of day and yeah, trade from there. So what does this range mean? This range right here, and the tighter the better really, to be honest, but it basically tells me what are they planning to do for the entire day. So we have one standard deviation here, approximately. I suggest using the bodies of the candles. And if you use the wicks, you can do it too, but it's more accurate when you do the bodies. So this is one standard deviation. See, one standard. Oh. 2 standards. And that is the reason why for me, the market is very stable. And I like, because look, Powell always said, what was his goal when COVID hit? His primary focus at that time was market stability. And they've lived up to that word. I mean, we've been grinding up, but we've had no weird shit happening anymore. So, I have to stick to see, what they are telling me. Oh, hold on 1 second. Sorry. What kind of STDs do you have, Cap?
That's what I'm looking right now. I'm like, so you're just like me. Like, come down to Captain Jim's cheap call lot, please.
All right. All kidding aside. Okay. Anyway, you have this Asian range here. And look, the Asian high that I have marked here is the Asian high that I use for the session. And I use that to see if we have a breakout or a breakdown from that level. So, because there are 2 different types of highs and lows that I use, it's the one that starts at 7 p.m. or at 8 p.m. And I like the one that starts at 8 p.m. because it narrows my scope a little bit more, where I'm able to participate quicker or to take profit sooner. And because let's say, for example, we're at the midnight open and right here, and I have a feeling that they are accumulating below, I start planning my trades like this. So, in TradingView, you have this beautiful trade planner that you can use, and you can set your risk rewards, and you can do 2 to 1s, for example, or 2 to 2 risk reward ratio. And then, it depends on your risk appetite, what you want to do. You say, I don't need to go all the way up here or something like that, because if I know a specific move will happen from this area, I'll slap on some bigger size and trade towards that level. So now look, what is important for me, it's called NDOG, the new day opening gap, is a magnet. That number or that level will come in play. Now, why did I draw this NDOG? That means new day opening gap to me. What we're going to do is go to the last tick when futures markets close and the first opening tick. So my focus when I wake up is in this little box here. Okay. I'll put an arrow and let's go to the 1 minute chart. So we know where to go. So there are 4 things that I do. Here we go. Look. Here we go. So this is the last tick right here from yesterday at 16:59. And then this is the first opening tick. That little gap will come in play many times during the day. Since I'm sleeping in the Asian Open, it doesn't really matter. The thing is that before London Open, and we are below it, I look for confluences. Is there a chance that we could go retest that level back up? Yes, there is. Because at 2 o'clock or at 1 a.m., when we're down here and we're below the midnight open, and I see enough range that I'm able to scalp along towards that level, I'll take it. Now, what I see happening here, I look for reversal patterns. So this little consolidation area that you see here is very important to me. I'm going to go back to the 5 minute chart and show you why that little consolidation part that happens in the Asian session comes back in play for the rest of the day. And I leave that on my chart. So what I look for is these bearish fair value gaps, these flushes down, and actually they start from here.
Yeah, I can see it over there too.
Yeah. And the only thing I do is I draw a box over like this. and it doesn't matter how far. This one's get tested here, but here you have another one. You see, there's another flush, but it didn't make a new low. And I don't care much about the wicks. I look at the bodies of the candles. So whenever I see something like this happening, the first thing I'm going to do is draw a little box like this, and I buy that one and leave my stop here. So I'm looking for longs in this zone here. I have a low risk, because my stops are only like 5 points on this part. I can leave it as 10. I start off with 60 ticks, especially in ETH. It can be a little problem, but it doesn't really matter, because like later in the day, it will come and play again. So we have these reversals.
Just simply, can I just interrupt here for a minute? If you're watching out there right now, do you see how David is tracking demand across his chart from session to session? And rather than chasing highs, things like that, he's looking for that same, where is the demand? Is that basically what you're doing, or am I getting this wrong?
To simplify things, yes, it is.
Yeah, I'm trying to simplify it for him.
Because what is, a lot of people, they think like a specific low is support or resistance, but for me, once it breaks that, to me, something changes in my mindset where I'm able to join the trend in the opposite direction, for example, so it's my way of thinking is a bit different compared to everyone waiting for levels. I have these zones where I want to pay attention to, and then I look for these setups to occur. Now, the problem today is because of FOMC, there's a lot of fuckery going along. So it's not as clean as it should be, which is okay, but they still work, because then, I still have my midnight open where I can rely on, and the Asia session ranges where we've been playing around on for the entire day. So, but nevertheless, in the London session, when the cash opened up, the minute I see them messing around, making a new high, breaking out of this consolidation range, and they made you join the party. So as soon as this breaks out, I start longing, and I start working towards this new day opening gap, which I'm already done for it. And even on this little breakout here, you see, let me take this green thing off. This was my ad here to continue on long, because I started to scale out on this, and I started accumulating longs on this part. I think I posted some charts in the Discord. You can see where I executed on those trades. I can't open up my account here because I have to log in back in TradingView. I logged out to just in case if we get into a situation where I'm able to place a paper trade or something like that, where we can trade together and show you how I execute them. Now,
so are you saying you're still a buyer down around that 17,779 or
17? Where? No.
Are you?
Whoa.
Say again?
No, well, let me see. I don't know. I was still long. Let me see.
I'm looking at our NDX right now.
Oh, no, well, yeah, you can see what I did here just now. This is a real trade that is going on. I still have a runner on, but I wasn't paying attention to it, so but I don't care much if it's going down because I'm skilled. So my average is 18,225 at the moment at the Asian low. So you see this. Let me see. Are you able to see me drawing?
Yeah.
Okay, cool. Okay, so remember the midnight open that I pointed out on the chart. So when I wake up, I mark the Asian low and the Asia high and the midnight open. And then we have that new day opening gap, that NDOG that you saw on the thing here. Let me see. This little tiny box here, right here. That's the last tick and the first tick of the day. So it's at 73, 74. It's really tiny. It doesn't happen often where it's like that. And there are a few other levels that I also take into account, which is the 2 o'clock open candle from yesterday and the daily close. So, all I have on my chart are these 4 levels, and the rest I could care less about. And what I look for is I like to look for sweeps either from a recent 4-hour high or low, and then look for these inversion fair value gaps that I buy up. So what happened here? I'm trying to see if I can show you a better example. What I did yesterday, I think. Oh, here. Well, here's the same story, right? This is what I was trading yesterday and taking the long when everyone was bearish in the afternoon, because at 2 p.m. Like,
oh, was this yesterday?
Yeah.
That was great yesterday, wasn't it?
Yeah. Oh, this was the open. Sorry. Yeah, this was the open. So, yeah, this is the open. Why I said, I started to go long. And why did I go long? Because we were trading in a discount. I think we were below the previous day equilibrium of yesterday.
Yeah, we were trading at a discount. And then as soon as that 3:30 hour hit yesterday, I was like, we're going to rock this shit right up to the top here into the close.
Yeah. It's like, for me, anything below the mid from yesterday is, for me, when they open up like that and they sell down London and
yeah.
They press it down like that, I automatically buy. Because look, yesterday London was in premium for me, so I shorted. And this is the setup that I look for in London, for example, and why I go short. Because, like, I had a specific level that I was waiting for to happen. And remember that new day opening gap that I drew for today? This is the one from yesterday. So you see the last tick and the first tick, we have that. And I was expecting London to open up in the cash and to trade up in that level. And next to that, for me, this is my resistance zone, for example, that I'm keeping track of. It's very simple, because, like, you see these candles without any wicks and untested, they will go back and retest it. So they either reject the mid of it or the lower part of it. So when we get there, I see this, this is like algorithmic pushing it up, and trying to get like a higher short to sell the market down. And the only thing I do, and this looks bullish as fuck when you see it, because, like, a lot of people think, oh fuck, now we're going to go back to that high. Well, in my mind, I was not looking for that at all, because I had a bearish bias, because I thought we were going to retest these equal lows on this side, for example, and this consolidation part, because we had already done this. And I wanted it to trade back into a discount to scoop up longs to go back up. So, and I love the 5-minute chart, because it's crystal clear. And yesterday it was, and like today we have a lot of fuckery happening. So, but here you have that bullish fair value gap. And the only thing I'm waiting for is, you see this 5-minute red candle here, the big one? Yep. I'm going to point it out. This one, the minute it closes below this green box that I draw, I'm in short mode. And the only thing I do is scoot for shorts and look for shorts and start accumulating shorts. I put my stop right here. You don't have to take much risk. And where do I target to? Are these lows here. This right here. And you have time to add, because, like, once you know and you have defined that you're going into a specific direction, you have time to enter it, and the market loves giving you second chances, and you can keep getting in, and then you can add to your position. And where do you go to? The discount area, which was another gap from the day prior.
Yeah, right down there. It's beautiful.
Yeah. So, and then when we touch that, okay, we get to that low, and I'm looking. These zones are so important for me, because what I'm looking for is these big candles right here, right? And I'm just waiting for the first 5-minute to break above it and then go back down. And if, like, for me, and that's another thing, because, like, this is, like, for me, an order block, this one here. So if we hold the mid of it, for example, it's a long. So I start scooting longs, because if you go on a 1 minute chart, you can see this pattern evolving in the same way. And it's like a mini W that is happening, you know? So let's zoom in. And then next to that, we had a silver bullet, which is going to be inverted, which was going to be used for me as a place to go long from. And of course, they scooted down. But, you know, that's part of trading. It sucks. Accept it. You have to take some risk. If you don't, you're never going to make money. And, you know, my risk is defined right here in this box that I drew. And I can, you know, put my stop right here. Very short. And I'm only talking about like a 5-point stop, and start accumulating the longs from this part here. The minute it breaks above, this was my ad at this point here. Because this is for me like the second stage accumulation where they continue up, and where is my primary target? What they
right up in there.
Yeah.
Right up in there.
And this is the perfect Judas swing. And the Judas is the trap where they get everyone short and they rip your face off, and then, you know, and look where we are now. So, and they keep doing that every single day. It's the same pattern. It's the same game almost. So, and for me this morning with the with like the longs, like I said, every Asian session range, I draw up my standard deviations, and usually, typically, they make a high at the 1 standard deviation, or either a low at the 1 standard deviation, where you can take the other side of the trade. Now, for today, you're going to see some weird shit. I don't know. To be honest, I don't know. I'm not expecting much, because everything we know today is priced in, right?
Yeah, that's so we've had some people on the show, man, ask some, I thought, some very insightful questions. They said, man, this looks like a no, you know, sometimes we have a Fed meeting and we're priced it in, right? And it becomes like a, you might get a rip or a dip and a rip, but there's no continuation that the, you know, it's kind of a dud.
Yeah. Yeah. So
that's my question here is, and you already said you don't normally trade these U.S. events, right? You just like a normal day of trading rather than, I don't know, a Senate hearing or a Fed rate decision, that kind of stuff.
I don't. Yeah, I usually wait to see what happens after. I'm not going to be holding a position for it unless you know, in the past I've traded this stuff, and I've had a Nasdaq like 150-point candle going down in the right direction on a single contract, but I've also had it gone the opposite direction where I had it wrong.
Yeah, I can't. These days for me, the same thing, man. Like it's a lotto trade, right? That's all it is.
Yeah, and the thing is, you know, whoever's showing you all this shit on the internet where they're getting filled, it's bullshit, because you don't get filled. Like, you know, I've tried it myself where, you know, I'm in a position and like, and sometimes unless they, you know, it starts consolidating and the volume has picked up a little bit, then you can initiate it. But like sometimes it takes like 20 seconds to get filled, and there's nothing worse that in that 20 seconds so much can happen.
Dude, I've had them. So I was complaining about, I'm not going to say them today, but they were like, we're not doing our order flow, and I'm like, yes you are. I'm watching, getting no fills on fucking SPY right now for pennies, right? And then chasing, and then I'm chasing you, and then eventually I finally catch up, and you do the fill right before the top, and you know, I'm just like, I'm not fucking playing this game with you guys today.
Well, you know,
this is the most liquid fucking product in the stock market, right?
Yeah, and you know, and that sucks about trading in London. If you're trading more than like 5 contracts or something like that, and you put your stop and you don't manage your stop accordingly. So, look, I don't work with stops, right? And the reason is because I prefer to just press the button. It's a risk I'm willing to take for myself, because I've lost so much money in the past, and even last week, you know, I get filled 20 points above or below wherever I have my stop placed. If you have it linked on the market order, the liquidity is really thin. There's only like maybe 4 or 5 contracts on the book per price level approximately. So let's say for example, I went long here, right?
On options, will you ever use a market to get out if you need to? If you're like we're blasting up or something like that, or you're in a you ever use market orders or
orders?
Say again?
I always use limit orders because, and that's why I never get like the like max amount that is possible, because the spreads sometimes are even a buck or something like that, and like and that's why I don't like trading options. You know, it's like, look, I don't trade SPY, and the reason why I don't is because I have no it's the overnight that happens where all the action happens to me, right? So it's like you can't do anything with it. Like even now, I took a SPY put as a lotto thing, you know, like I only spent like $200 on it, but it's something I'm you know, a risk I'm willing to take on it in that sense. But I also wanted to see how do I get out of this position or get filled on those things, and it's just it's
I usually try to rein in my expectations. If I think like, let's say I think a 10-cent call is going to $1, I'll set a sell stop on it at 80 cents, 90 cents, and I do miss out on profit sometimes, but my fills have become atrocious trying to hand buy and hand sell. There were some rules that came out recently that may be impacting that, but I've noticed that my fills on both sides of the trades are more dog shit than they've ever been than in previous time. I think it's intentional, personally. But
yeah, and like look, the thing
like,
is,
hey, come play zero dates, and we're gonna fuck you over no matter what. And we know you're here playing them, and so we're just not gonna get you your fills. And it's that simple. I really truly believe that it's that simple.
Yeah.
This is a recent thing. This isn't something that's been going on for years. It's been like it's really glaring, maybe the last 3 months, maybe 6 months. I went on a tirade about this, and some people out there were like, you know, delete this shit, fuck you, you're wrong. And I'm like, dude, I've been trading this shit for years. Never had a fucking problem until recently.
Yeah.
And I think it's because, well, there were some rule changes that came out. I'd have to go find them, but there were some rule changes that came out, and I think it's the people selling the order flow people. I think that's what it is, but I'm not positive. So hey, we're gonna go out and have a 0-day party, and all these retailers are on it, and so we'll just fucking do is not fill them on the way up, make them chase, and then not give them fills to close as well. This is above bid to ask, all that shit, right? It'll make a couple pennies extra. It doesn't matter. I don't get the fill.
Yeah.
And then comes the roll. You got to be really fucking fast right now, I think, personally. Now, this isn't prime banks
for me. And the thing is, you know, with futures, I'm able to execute just, you know, with the press of a mouse click, you know, to give you an idea.
I got friends with prime banks saying they're not encountering this. Like if you're trading with Schwab or someone like that, they've had better fills.
No, well, yeah, I have no complaints with interactive brokers. You know, the thing is, those market order fills that I get 20 points above or below is because they're market orders. And, you know, the book is really thin. If you look on my book map now that I have here, you can see each order on each price level right here. So you see 32 contracts are here. But the problem is, let's go back onto the chart. You see when they have these jumps, these fair value gaps that get created. Let me put on the tool so you're able to see them. I mean, these are things where price jumps. Now let's go to a 15-second chart. Now it's okay because we're in RTH, the book is thicker. Well, let's go back to London, and the only thing you'll see is gaps, vacuums everywhere. So, and that is the problem, because if you work with your stops in London, and like London hasn't opened yet, you see all these gaps. You see, you know, the chart gets cluttered. This is a good indicator for me to see that there's a lot of gaps in between, but I also use them to my advantage, because like if these gaps get left behind, I know they will go back and fill them and refill them. So, you know, all gaps got filled, And that is where the saying comes from, because this is where price has jumped a specific price level and they need to refill those orders at a later stage during the day. So I like it when they leave these big gaps open, for example, because they will go back.
You know that they're coming back for them.
Yeah, so I trade towards them. I use them as my exits, for example. Now, when RTH opens up, the book is a bit thicker, so you don't see them as much. But you do see them in consolidations. But you can see in those consolidations, we go back and recheck them many times. So, which is perfectly fine. Now, you see, the thing is, I showed you just now that 5-minute fair value gap, right? That I extended all the way from London this morning, which was at 4:30. And notice how that is my support level for the entire day already. And now let's go back to Bookmap. How am I utilizing this thing? You know, I was late joining the party, but to give you an idea what happened is we have that midnight open, which was touched here, right here. You see, I'm gonna open my drawing tool. Like typically I would close my long here right now because I see we're being absorbed, and this is an area where I typically would short it back down.
Yeah.
This.
That's what I'm looking for.
Yeah, but I'm going to show you why I can't do that, because I'm long. And because like on the higher time frame, I still have my target that we're going to go up here in this zone here. And I still have one contract on, but I'm skilled out. So what did I do to be able to give myself that room? Because this is my average according to my broker. But in my head, my average is right here on the Asia low. So what I do is once I see that we've held this area here, and that happened at the open, I think, they scooted it down to the midnight open. They held it to the tick right here. See, this is the low. That was 9:45 approximately, which is the midnight open. See? They held it, scooted back up. Okay, this is a short. You can short it back down. Typically, you would think we need to go down here, but there's a, you know, we have that fair value gap that I showed you. This one here, notice we're wicking in it, but we're not getting any bodies closures below it, right? So I'm still in my head long. I'm not going to change it until, you know, they break down on it, or they, you know, they close a 5-minute candle.
Are you looking for that today? Like I'm hoping that 2 o'clock or something, we get a nice quick rip down there.
Well, yeah, you know, London's closing in 20 minutes. So, you know, it's, I don't know what they're going to do. They're going to do a run on liquidity. You know, if they're going to go up, maybe that's a sign for me to get out, because, but like, you know, there's another thing that I keep track of is the CVD, and there's just no bearishness in there. So smart money is not doing it. So I'm just expecting chop, you know, and I'm trading the ranges. And I have a bullish bias because I think we are still going to retest those highs at some point. So, but you know, whatever happened, you know, the thing is that like I enter my trades and I buy these 5 contracts right here, you see, and the first push up, I take them off, 4 of them, because I'm not putting much risk on at the moment. And what that does, it reduces my average, where I'm basically long from the Asia low, because I like to trade those Asia low and Asia high ranges. Now, there's a thing here. We are, you know, they keep scooting us above the Asian high, and the previous day high is also being tested. I would prefer them to do something like this and trade up to it. But, you know, since we're undersized,
Yeah, it's a function of today, right? To some extent too.
Yeah, but like I said, you know, like typically if what I see happening here at the moment, I like if I'm scalping, I would short it down to here, you know, and but you know my average is here, so I have nothing to lose, and I'm like just waiting to see what is happening, and I can always eject and join the party to go down to what I showed you earlier, where I was hoping to scoot up some longs here.
Let me see if you guys have any questions right now for David. Okay, make this larger so we can see what they're asking here.
Because I really want to see something happening in this area here, and then I'll put on some bigger size. And what I'm looking for is a flush down.
Yeah, that's what I want
Bearish
right there.
fair value
That's what I want right there.
And then go back up, and then I'll buy the first bullish fair value gap that overlaps that previous bearish one, and then I'll go long. And where will I target to? Are these highs here? So, and if we go up here right now, I'm out. This is my exit, no matter what.
That's how I felt this morning on the open. So, like I said, when we opened up this morning, I was like, yeah, what room is there to trade here? Like, we're not going to 520 on no news, I guess, or unless they front run it. But even if they do front run it up there, I've got no catalyst for it. So I'm not going to take that trade.
We're locked in this range, so you have to take what you can get. And what is high probable for me to trade, and that is why I use those standard deviations, because typically a high or a low of the session is made at the one standard deviation, unless a news catalyst pushes it further, which is perfectly fine, but then you need to wait for confirmations for it to continue back up. Now, why did it reject here? There was also a bearish fair value gap. You see this high here that was here, if I pull this over. So this was an area of resistance for me already in that sense. And if we trade into it, and the minute, the candles, they close back underneath it, and they can wick through it. But, notice that there is no body candle closures above it anymore. And, they trap them. So it's messy. It's not as clean as it should for me to typically take these trades. But it requires you to wait, because a lot of times they will go back and retest it an hour or a few hours later. Now comes the other element to it, right? Because you always hear me talking about the 4-hour opens, and I like to operate from specific key times, and that is basically every 4-hour candle opening that occurs, because it's when the market starts setting up the trap. So, and they happen every single day at the same times. So let me take everything off here for a minute, and I'll show you what I mean with this. Let's go to this chart here because it's a little cleaner. Well, today it's messy because we're in consolidation, but let's go back to yesterday.
Yeah, it's tough to, it's like days like today, man. I don't like, it's like one of the worst days like today where I'm like, when I'm going to go on the show today, how do I set something up for somebody when anything can happen? It's like,
you can't, and they have to accept that, which is okay, because, you these days it's a coin flip, right?
Yeah, it's like an ER, man. It's like,
yeah,
what am I doing sitting here trying to trade an ER?
To do anything with it. So
I'll trade the run up, I'll trade the after, I'll trade the reaction, but I'm not particularly keen on I think days like today are the reaction trade. 100%. Not the we're gonna take a coin. Well, I guess you could do the coin flip too, but it's still, as long as that's a lottery. That the only sure thing I know is I know where buyers are, I know where sellers are, and if we can go to either of those places, I can usually buy or sell.
Yeah. And I guess you could call those 4-hour openings that I'm talking about like POCs, right?
Yeah.
Basically, they trap you around that level, and it's your job to figure out if they're either accumulating or distributing below or above that level, right? So a lot of times it depends on the type of day and what the previous session has done. And if we're in a discount, for example, let's say we have London right here, right? It's at 2 a.m. The open starts. You notice how they're accumulating above and then scooting it up. And typically, for me, at 5 a.m. is when the trap is set, and that's when the liquidity, gets out of the system, and then they start preparing to move it down for the RTH and the normal, let's say, 6 a.m. open. So the times where I like to initiate a trade is either at 1 a.m., 2 a.m., at 6 a.m. New York time, and at 10 a.m. and at 2 p.m. That's it. The rest I could care less about what happens in between, because most of the time I'm just joining the party to what it is. Now today, forget about today, because you can't. We have FOMC. So let's review what happened yesterday. So look, they are accumulating below here. And in the end, when the cash opens up in London, they scoot it up and they whip it up here. But the only thing they really did is they were accumulating shorts from this area here, because notice that they are stepping down already the previous sessions. So they're creating, in my head, the trap to make a continuation move down. Then 6 a.m. opens up. It's the next 4-hour candle. The first move a lot of times is the fake one, especially the one at 6 a.m. and at 2 p.m. So they go up and everyone thinks, oh, we held support, we're going to go up. No, well, they're not. They're actually dumping it down. Then comes the next one at 10 a.m. And that's why I do not trade the open, because I want the market to show its hand, to tell me what it's going to do, and they will tell you what to do. And that's why I look for those clues and those fair value gaps to either go up.
Let me ask you, I just pulled up a chart here where Scott Vol Wiz, he brings up that there's vol control. He calls it the like a vol control that comes into the market at 10 a.m., 1:30 in the afternoon, and 3:30 p.m. It's been pretty consistent lately. Have you noticed any of that, where the buyers step in at those times at 10 a.m., 1:30, and 1 p.m., 1:30, and then 3:30 in the afternoon? Have you noticed any of that happening or no?
Oh yeah, but like I have my own setup for that. Look, I have my golden nugget, which is based on algos, where I take, I either join a trend or do the opposite part of it, right? And that window starts at 11 o'clock, New York time usually. But I like to take the trade at noon. It's a lunch trade. And, after an hour and 30 minutes, you should be out unless your target has been reached. Because if the previous opening price of 2 o'clock has not been tested that day yet, it's a target where I'm going to work towards to. So in this case, like for example here, you had the New York AM session down here. And look, we were trading in a discount here already. So that's why I was scooting for longs already. And then, the golden nugget is the one that pushes it through to that level for me. And that happens every single day. So, sometimes you will see the high or low of the day, and even like the biggest low for like days on end. Because look, for example, this golden nugget here, which was on Friday, last Friday, look what happened the next week. I mean, I don't like to hold over the weekend, but you get these type of moves from it, but you can also get like the highs from it. So yeah, and sometimes it's just in range if we're in consolidation, which is fine. But you get these, here, this was before daylight saving, so the time is not right. The times are not correct on the chart.
So if you're watching the show right now, we've got a bunch of questions coming in. I can see what some of you guys are saying here. If you want to learn more, number one, if you want to learn more about this, David is in our Discord. He discusses this every day in our Discord. If you are, Scott, I'm just going to bring this over. So this comes from Volwiz. I'm going to briefly put this here, David, just for a moment.
Sure.
Now, this isn't to say that this is every day, but if we are trading down into the 10 a.m. hour, you're going to be looking for buyers to step in there. Same thing if we trade down into the 1:30 p.m. hour. And then the same thing if we trade down into the 3:30 p.m. hour, that you're looking for buyers to step in around 10 a.m. I think this is 1 p.m. He may have written 1:30, but right around that 1 p.m. hour every day. Now, that doesn't mean that this is every day. If you guys want to take a snap of this or something, oh, hold on a second here. Clear all this out. If you guys want to take a quick snap of that at home, now, if price is going up, you're not going to be able to trade this. But if you see the market coming down into some fair value stuff at 10 a.m., 1 p.m., and 3:30, you should be looking for those buyers to step in. All right, continue on. Sorry about that, brother. And we've got questions here for you, David, too. A whole bunch of questions.
Can you read them? I can't read.
Yeah, I'll read some too. Do you think using Asian markets to predict U.S. markets is a bit of a tail wagging the dog? I mean, if it works, it works. There's another thing here too that David hasn't brought up, which is, which he has in the past, of course, but you got to remember about market or dealers out there when they have to chase price, and then when they try to become delta neutral again in different market openings and closings, right? What can they dump on the U.S. Open? Something they chase down in the overnight. You guys have heard this term, right? Like you become the hole into a close, U.S. session close at 4 p.m. And then surprise, surprise, they're offering those options. Well, not options, but or those contracts up to the Asian market, then the London market, and where does price go into the U.S. market open? So they're asking you, do you think Asian markets? Do you think using Asian markets to predict U.S. markets is a bit of a tail wagging the dog? I mean, I guess if it works, it works. So what are your thoughts on that, David? If you even have any thoughts. You don't have to answer these questions, by the way.
Look, the thing is that Asia is always the one that is accumulating, right? And a lot of times...
Say it again. Say it louder for him.
Yeah, and a lot of times you will see either a high or a low in the London session for the day. And yeah...
It's common, right?
I don't know, call it what you want, but the thing is that like what is predictable for me in the London session regarding the Asian session is that like when you do it, for example.
So these are algorithms, true, right? These algorithms are working on a clock, on a calendar, and
definitely
you can see them literally like accumulating, distributing. It's wild when you look at it, from every session together. A lot of U.S. traders think like, oh, this is the stock market, right? 9:30 a.m. until 4 p.m.
Yeah. So you see, I'm doing a live paper trade now for you guys right now here. How I like to scalp them out. Like typically I would scale out here in this area here. I only managed to get filled on one contract. See, I'm out already.
They're asking you why you have different sized candles on your chart too.
Is what?
Why do you have the multi time frame candles on the chart? You have smaller candles on the left and larger candles on the right.
Okay, the larger ones are the 4-hour candles that I have. Usually, I put them at 13 to show you the lines, but usually I only care about the last 3, like this, and they are 4-hour candles because like I'm in the belief of that the market, especially now in these type of situations here, we're seeking liquidity. So if you don't know what the resistance is and the support is, then you are the liquidity, basically, So, and what I look for is either the previous openings, the closes, and the highs and the lows of these 4-hour candles. And this is my scope, basically, where I trade in.
And you're looking at what the range, the price range is in each candle where it's been traded the most, right?
Yeah. So, in my head, like, I already pointed out what, my interest is in these levels down here, right? So let's continue to pull these boxes over. And why did I take this long here just now? Okay, you see, I went long here. I scooted it because we went down on that 4-hour opening. We got underneath it and started accumulating. I see this barcoding thing happening down there. So for me, in my head, it's already, okay, fuck, they're going to go back up. Whatever, this is only a 5-point scalp, but it's fractal because it happens on every time. I'm trading a 15-second time frame chart right here in front of you, right? So, and we, I outlined this area. Look, this is that box that.
Yeah, I like it. I mean, I agree. I see what you're saying here. This to me is no risk. Well, there's risk, but not like
Yeah.
on the upside. You're already on the upside already. Where we're gonna do a breakthrough. I'm long right here at this resistance point, and I'm like, oh, do you like crazy? Like, wait till you get above it, at least to create that.
I could care less if they break down, because like for me, like typically I would put on like 4 or 5 contracts on this, and I wasn't able to press the button quick enough because I'm using a paper account on here, but like I'm typically on Bookmap, I would like add here and just press the button, and then on this first push I would take some off again, and that difference of price points, I buy my stop basically, but we could be in a downtrend with it, or in an uptrend in a downtrend. So it's like I'm a scalper, I'm not a swing
Yeah, no,
trader.
I'm the same way. If you ask me what time frame we're on, I'll tell you
That is
4
the
different
thing.
things.
For me, if you're not able to get $50 out, you're not going to be able to get $1,000 out of it, so if I'm able to get the $50 out, that's fine. So and just as an example, I'm jumping from screen to screen here, so for me it's difficult to really focus on like executing flawlessly in that sense. But you can see that the reason why I'm selling here is because there's this little inefficiency here. Now let's have a look here. You see this little gap here?
Yeah.
On the 15-second chart?
Yep, I see it.
Okay. That will get filled. It's not going to remain naked at some point. So the deeper we go, for me, that is already in my head where I'm content to take profits from. So let's plan ahead towards that gap. Let's forget about the stop for a minute, right? Because we're not focusing on the entry yet. The first thing where's my exit? That is the first thing I'm focusing on. Then the second part is, where's my stop and where will I enter in? Hold on 1 second. Hold on, my cat is meowing like a bitch, so I have to go down to give her some food to shut her up. Hold on.
So watching while David is taking care of his cat right now, taking a look at SPOOs, not too much going on S&P 500 right now, just grinding sideways, awaiting the Fed's decision at 2 p.m. When we get closer to that 2 p.m. hour, I'm going to switch the format here, and what we'll do is we'll bring up, I'll bring up the Fed or Jerome Powell's speech, and then the Q&A. You'll have that on one screener. The other screener will have, I believe, S&P 500, TNA, or TNA, and I forget what the other one that I put up. Maybe VIX, I guess, or Dixie or something like that. And then you'll also see the I think you usually put up the book map, but I'm not sure. So you'll see a format change as we get closer to the 2 p.m. hour, right around 1:30 this afternoon. That's about 1 hour from now. If you have any questions while David is gone, please feel free to ask them now, and if I can get him the questions, I will.
I'm back. Can you hear me?
Yeah, they're called. So yeah, we can hear you. So what they're called multi-time frame charts. Not everybody offers them. I think Lightspeed offers them. You have to find specific brokers that focus on futures usually.
Yeah. So you see what?
Yeah, Dixie will be up too, Jimmy. Sorry, go ahead, David. I apologize. We had questions in the chat, brother.
So you see what is happening now already, that they're trying to rebalance this inefficiency that is here, that that I plan this trade for you. Say, okay, well, this is where I plan to go in, and this is my stop, and we've reached the target now already. You see? Boom.
So you guys all watching this at home right now? Oh yeah, is the Trader Podcast Deepfake out today or no? I didn't know if it was out or not. If somebody can link me to that, I'd appreciate it. I'd put it up for you guys.
Okay, you see the target has been reached?
Yeah, it's perfect, man. It's a great fucking trade. I mean, this is the thing too. Is David, was when we came into this week, we were telling people to stay on the extremes and not be trying to trade the 1 minutes in case we get these big, massive drops. To just buy these extremes, and this is working out perfectly right now, right?
Yeah, well, that's the problem, because I know you're trying to revert from the scalping and more to the swing thing, but look, the I'm showing you how to trade this then now on a 15-second chart, which
Well, yeah. Well, I think my point to them is that if they're just hanging out in the middle, they could get hurt, right? There could be sudden drops in the market. So even if you're trading a 15-second, or yesterday, day before, we switched over from like the 30-minute, the 1 hour, the 30-minute down to the 1 minute only when we were taking trades. But looking for those extremities and the bottoms and the tops to trade.
yeah, and that
So
is
zoning out or zooming out a little bit, I guess, or not being so focused on the 1 minute chart or 15-second chart or whatever for where actually are we right now?
Yeah, and this is the messy part of it, though, in that sense. Like, over time, when you get confident and finding these type of setups the way I'm looking for them, I put on some more size. So, like, let's say, I trade between 3 to 10 sometimes. That's the max that I do. But on this trade, for me, that's already like $2,000 on an 8 lot, or with 8 contracts, for example. And like, when the market is predictable in a range, I have my stop in place and on these swing lows, but I don't care if they continue up to, even though my bias is that they will go up. It's a different type of trade for me. I extract what I need to extract for that day, for example. And if you're able to identify 3 of these things per day, and they happen 100 times a day, and you train yourself on that specific setup and not be jumping from one type of style of trading to the other, you know you don't need anything else. You could care less what they do, because you've already pulled what you needed to pull out of the market with this trade. And that is the problem that I had in the beginning, is that I was flip-flopping strategies all the time. Then at a specific time, I started to just trade these reversal setups, when everyone thinks we're going to go down, to take the opposite side of the trade.
Mm-hmm.
So for me to go short again, I'm not thinking of going short at least until we reach towards this level here, or even higher. Because and what I'm going to be looking for is these reversal setups to go back down. Now, I showed you this little inefficiency on here, right, on that chart. But look, I also know they're going to go back down at some point, because look, we have
there's one right there.
Lower end. So, and that is why I'm certain that we're going to go there at some point. But how high can they go? Well, like I said, in my open trade that I still have here, I'm still long, for higher right here. So I'm still holding that same runner. I'm letting it do its thing, because like, that is sort of like the swing trade that I'm doing, where I think, we're going to get a push up at some point. Now, I take into account time of day and those kind of things, because London close is happening now. And so, the algos get turned on, and they're going to start selling them and distributing them again. And like I said, also, my bias is bullish, because I'm looking at the cumulative volume delta. It's not showing any weakness so far for the entire day.
I had a question for you. People are asking, how do you do the 4-hour candle overlay on your trading view chart?
Let me see. There is a indicator called, it's called TTM HTF.
TTM?
Yeah.
HTF is the indicator.
Yeah, it's this one. I have a paid one. but it's okay. But this is the one that you should have. It's free. It's the same thing that I have for the paid one.
TTM, HTT. What else does it say there? I can't read it.
TTM, HTF, higher time frame candle overlay, power of 3. It's from the Tick Magnet.
You guys catch that out there? Thank you, Aces10, posting that.
Yeah. And you have some other ones also. There's 3 or 4. You need to look in the indicator list on TradingView to see. But like, it doesn't look, you can slap it on, but you need to know how to use it, you know? So
I just posted in the YouTube chat for you if you're watching on YouTube. I fucking love this show, David. I'm sorry, man. But this show is so awesome. Like, this stuff that we do here is so cool. And I appreciate you being here, brother. I just wanted to let you know that.
Yeah, no worries. So, you know, and now comes the part again where the fractal part of it, of the higher time frame story of that is being told, for me, in my opinion, is that we should trade up to these equal highs up here, right? So on the higher time frame, I like when they leave highs like this. I guess you could call them poor highs or something like that, or whatever. But I like to use them as target a lot of times. The only thing is that like with this, I don't know how deep they can go. And the weird thing about it is because like I really, really, really want to scoop up some long.
There you go.
And I just, but it's not going there. And so far, as long as we're above that midnight open,
I'm like, give it to me down there, please. Right to my face, right down there.
You know? And in the meantime, I'm just trading what the chart is telling me, you know, and it's like we're going up. Whatever, call this a pennant flag. I don't know, you know.
Yeah.
We break down of it, then I'll short. But I need a candle closure, and then we get a retest anyway. So I'll join the party short as well, like that. You know, it doesn't matter to me. So if I get stopped on this runner, that's okay. And if that means that we're going to go down, man, we could go down all the way down to.
Yeah, if they could flush it, I'd be stoked. I've been waiting for this all day long. I just need a flush, like one flush. Give me one fucking flush.
Yeah. So looks like they're both lagging, right? So I don't know. Call it whatever you want.
Yeah, I don't know if we're gonna get it or not. I'm hoping it happens at 1:30. I'm hoping the hedge comes on the market. Market starts to roll down and into the meeting. Sometimes it doesn't, but when it does, I'm like, oh, I love this. And then the only thing that I ever make a mistake on here is if we do it. Sometimes I enter a little bit too early. I'm like, yeah, I should buy calls right fucking now at 1:15 or 1:30, and then I should have waited an actual half an hour until that 2 p.m. news drop, and then boom, it's off and running.
Yeah. Let me see. Right now, oh yeah, and there's another thing I keep an eye on always is the Tuesday range, right?
They're trapping these people, and I'm watching right now, and they're trapping. I'm sure there's some bears out there right now that are like, this is it. It's the top. We're going to roll down right now. And I look at it as more of a trap. So I'm like, oh, they're going to trap these fuckers in here, and they're going to have them all in and rip their faces off here soon.
It could be. I don't know. Let's see the candle, you know, like the story, like, you know, my mentor has always said, the wicks do the damage and the bodies tell the stories.
Yeah, dude.
So, and that is the thing. I need candle closures below it, and then
Exactly. You need candle closures below it, right?
Yeah. Until then, I don't know.
I just want a quick flush. Like, just give me a quick flush down. Straight down to the HT. Fucking buy the fuck out of it.
Now, look, there's this thing here right now that is happening in front of us, and I'll show you what. It is a potential short for me. It's this. So, look, the only thing is that we're not at a key level. But if in the next minute and 30 seconds they close this candle underneath this little box here for me.
Mm-hmm. I love the candle closures, man. I watch them. I watch every candle that comes out and what's happening inside of that candle every single time.
But I have to be careful that I'm not being vacuumed into these like 5-minute candles at the moment, you know. So I'm just going to switch over to an hourly chart. on a clean chart. You take
That's
everything
perfect.
out
Like
here.
right, you can simply explain this right there. What you're showing right now.
Into power of 3. Look, this is what has my interest, but we already tested it, right? Really like this zone.
Yeah, that's nice. I like that a lot. Let me see some of these. We got questions here.
Yep.
Chase Winter says, John Haggerty says, tick magnet. It's also a chick magnet. And then Chase Winter said, so vol crush pump regardless of whatever Powell says. So Chase Winter, to answer your question, I don't know, man. Today, I gotta be honest. Today looks like I could be wrong on this, but some of these rate decisions are non-events. So you get like a vol crush, but you don't necessarily get the follow through to the upside that everyone's hoping for. I wonder if that's going to happen and the real move comes later. Now, JC56 is saying, I'm still bullish, but can we not deny the divergences going on in the market, though? So, JC, can you expand upon that thought? La says, I'm bearish, but for next 6 because it's hard to time at the top. You're also worrying about Chase's question. Here, let me show you guys one quick thing. Okay, do you mind if I interrupt for a minute, David?
Go ahead.
All right, we're going to talk about something here because I think there is a
But do you guys realize, I don't know what kind of top you're looking for, but that SPX closed at its highest level ever yesterday? No,
yeah, that's what my question. Some of what my question is too.
So, it's like you're really trying to call a top for nothing, because wait for a structure to break at least. We had the highest daily close yesterday ever. Look, I'll show you on the daily chart. See? On SPX.
I'm going to switch over and just show these guys something really quick. So,
yep.
Let me see if I can. Maybe I can bring it down here.
It's a good place to accumulate shorts in some way, of course, but like, you don't know how high it can go, especially with.
I'm talking about these. They're talking about divergences. So I want to show you guys this really quick here, okay? But let's talk about divergences for a minute. So I want to show you guys when we come down, when market breadth comes down, right? We're doing a rotation, sector rotation, right? Rotating out of divesting ourselves of sectors. You can see it down here as well, but at times price doesn't follow those rotations and you don't get a liquidation break. So I want to show you 2 examples here, two important examples. And you can see here, just right here, right at the top, and you can begin to see the rotation down in market breadth, but you're also seeing price follow aggressively, right, to the downside, an attempt to go higher, and then more selling, right, more selling. But we didn't see that right here. I want to show you another place right here. So this zone right here, see this zone? I don't know if I've got people. I think I might have people here at my house. I hope I don't. But right here, this one specifically. Come on here. Come on now. This one specifically here is an indicator that rather than a sector liquidation, just watching this grind sideways. And what happens is they begin to accumulate again. And, people go, oh, we're going to crash here. And they're not paying attention to the reaccumulation of the market. If you're not seeing aggressive price down, you're seeing side, side, side. And what are we seeing right here is that same thing. If you look closely right here, you're seeing this side, 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 right? Side, side, side. You're not seeing in this move down any price following. And you're actually seeing a reaccumulation right now. And someone just said it on CNBC, right? They were trying to tell you that the market was overbought, but yet more money came into the market yesterday, right? And you can actually see it right there that the money's coming in. You can see it right here. If you look very closely, you can see this dip, rotation out, and then a rebuying going on. And you can actually see it right in just price action right here. Grinding, grinding, grinding. Why? Because they want to push price higher from this new buying that's taking place. We never got a sector liquidation event in this rotation that took place. Oh, did we lose David really quick? I think we might have lost David.
No, I'm here. I'll be back in 5 minutes.
Okay, take a break. So what divergence are you talking about? Like, we're talking about real money buying here, real money rotation. You see a rotation out of stocks, then you see a rotation back into stocks. You don't see price going down. What's the divergence that you mean? I guess I'm missing something on the divergence that you're discussing here. It would be one thing I would say would be, yeah, we're catching a bounce right now on SPOOs. Like, they bought the fuck out of it just then, right? So people are all hemmed in short, and we took it to the tick to the half-hour trigger. I might be missing the point then, JC. I apologize if I'm missing the point, my brother. Yeah, so I'm not seeing what you're maybe seeing. I saw a rotation out of risk on sectors. I saw a rotation into like XLU and things like that. And then now I'm seeing a rotation back into risk again. Ah, the divergence with HYG. Okay. So I missed that. RSI, MACD, stochastic. Yeah, I can't speak for those indicators. I don't use them. I don't use RSI, MACD, any of that stuff. You're saying correction. I gotcha. Negative divergences on those indicators. I think there's some of the poorest indicators out there. It's a tough one that's a tough one to discuss. Now, HYG, I will say this about HYG. I do look for divergences in HYG versus SPY, that they will, of course, come back to meet again, that they resolve each other. No, I like HYG. I think HYG is a great indicator. Absolutely love it. I love HYG. I don't want to be mixing. I'm talking about RSI and MACD and all those stochastic indicators by themselves. Really quick, we'll switch over to the trigger screen here. And I just want to show you right now, they did buy the dip right on that half-hour trigger. They bought it again earlier down over here, and they're doing it yet again right now. I still want to buy down here. They're not giving me the hourly trigger. They're just like, fuck you. We're going to buy the half and just move it on up. Target above right now, 516.24. RSI is useful to understand. Its default is the 14 Wilder ZMA, which is equal to a 27 normally. A lot of traders use RSI, so when looking at the 27, you're syncing against other traders that use RSI. Jimmy Berry is saying bulls need to recapture yesterday's highs and base or retest for possible 517. If bears can muscle up and reject 516, then we may go down. NQ looks like it's getting ready to rally. Chase is saying massive call, open interest, right? I don't know about that squeeze, or they don't print them. For me right now, if you guys want to see what I'm looking at let's take a look at this. This is SMCI, but SPX. So just right here, this is your local resistance. I'll move these red boxes out of the way. There's two things that I'm looking for here. I want to be above. Okay, I want to show you this. I want to be above 5,200. Not a lot of room here, is there? And this is what my concern is. Let me go back to this. So here's SPX, right? This is the SPX gamma situation. This is the previous high, right? Previous high right there. Let me move this back a little bit. So for me personally, right, what I'm looking at here is there's not a ton of, like I can see all this, right? Buyers stepping in, buyers stepping in. They just keep buying it, buying it, and buying it, right? And I don't see a lot of room here, right? That's not a ton of room right there, right? 5,200, 5,180. I guess it's some room. There's just not a ton of room. I always see stuff like this, and I'm like, my risk versus reward, is it really there for that little thing right there? If anything, I'd really like to see price jump over it and make a new high, right? Get the new high, pull it back down, and I'm off and running to 5,300. Like, so me, that's the trade for me right there. It's like the big money trade. I feel good up here. But this right here, I'm more looking for where we are right now. I'd be more looking for, the failure. And we're in an event day too, right? All we need is some bad news, or I don't know, Jerome to say something bad, and boom, we get the flush down. And I feel way more confident down here buying something here with a stop underneath it, right? Got a nice bunch of room here to trade. See that nice, beautiful rip higher here. So I'm either above this or I'm down here. This right here, where we are right now, I have no interest in it. I'll be honest with you. I have no interest. Let's look at this on, let's go over here. Let's put this back down below here. It's that previous high. This is local resistance right here. It's like we're scalping for, here, let's look at it like this. So if we're on this chart right here, right, this is that 520. I guess there's room. I guess this looks like there's room. That's that 520, right? This is what we're trying to trade right now. So the only thing that I would say to you would be as long as you're buying this stuff, yeah, the move is higher, right? Smash it up, smash it up, smash it up, smash it up, smash it up until you can get up here and trade that 520. Now, I want to preface this for you, okay? We are on a fucking, sorry for saying F. We're on Fed day. So we're in high volatility. This is the last day of it, right? We're in a high vol. We have volatility today. We're on Fed day. And what did I tell you on your market briefs? You'll be humming right along, and all of a sudden the floor drops out from underneath you. If we were in a low volatility situation, I would say to you, no, that's not going to happen. Every dip will be bought, right? Any pullbacks will be bought. You can stay. What did David say a few minutes ago? The market loves to give you second, third, fourth chances. Under normal circumstances, I would say that applies here. That even if you're in the wrong trade, it's likely going to turn up for you anyways down the road. But on a day like today, on a Fed day, I don't think it's just where we are right now, right? It's not implausible for us to be like, yeah, we're going up, and then boom, straight down. Right? And that's where you actually should be buying, is down in here, right? So it's hard to discuss that for today, I should say. Yeah, I think we posted it in the inside the chat. That indicator that you're asking about. If you check it, if you look inside either of the chats, you'll be able to see it's like TTX or something like that. Market convincing you to stay in a losing trade. If we're not in a volatile environment, all dips should be bought. Does that make sense? The market should be supportive of. Let's say you're in the upside down of that trade. You shouldn't be worried about it. Only in a volatile environment. Right now, which we're in right now.
Yo, I'm back.
Cool. Let me switch back over.
I'm cooking in the background.
That's fine. That's fine. As a matter of fact, David, I was going to take a break myself. It's 12:50, so is 10 minutes enough for you, or because I need to take a break to get set up for the show for like the 1:30 hour? I'm gonna flip over here so we can.
Is it all right if I'll be back in about like 30 minutes, 45 minutes or something?
Yeah. How about this? Do you want to Do you want to hang out for the rate decision with me at 2 or no?
Yeah, we could do that, and then I'll show you.
You can eat dinner and do your thing, and maybe stop back by before bedtime. I'll tuck you into bed and all that.
Yeah, for me, I mean, I'm loving these 2 weeks now with the time difference because I get to go to bed an hour earlier. But the problem is that, man, I'm waking up way too early here at the moment, so that sucks.
Yeah, I've been grinding too, man. I've been grinding like 4 hours of sleep, 6 hours of sleep max every night right now. It's terrible.
Yeah. So I'm still in my long, and I'm going to keep it. But I do know that, you know, we'll see one like 18,100 or 200 at some point. But I might just close it and grab the money while I'm having dinner, you know?
The gamma flips at 51.50. Someone was asking.
Is what?
The gamma flip is at 51.50. People were asking in the chat.
Oh, is that on SPX or on
SPX?
51.50.
Yep, 51.50 is the gamma flip.
Oh, that's way below there. That's beyond my scope.
Yeah, and local support is at 5075. Local resistance right now is 5,200, but where the door was closed, it is no longer closed. So that local resistance is kind of bullshit right now. It doesn't mean we're gonna blast up there to 5,300. Just note that local resistance is not the door is not locked. We don't have to kick it in.
We'll see 51.89 new all-time highs probably. At least a tick, you know. I don't know. We'll see.
Yeah, I got 518 as the likely. No, I've got R2 today is 519.15.
Let me have a look.
I'm trying to be conservative here. And they're buying it right now, Dave. They're in here in the half-hour candles buying the fuck out of it right now. Right now.
And then we'll make a play for the afternoon.
All right, I'll see you at what time? 1:30 or 2?
Yeah, I'm just gonna finish cooking my dinner here and then
okay.
Have dinner, and then I'll let you know when I'm back.
Yeah, I think it's about an hour from now. What time is it where you're at right now? 8 o'clock, 9 o'clock, or what time is it?
No, 6.
6? Okay, cool.
Yeah. Do you want me to just put this on mute or hang up and then we'll do a new Google Meet?
All right, cool, man. I'll see you then.
All right, bye.
Oh, wait a minute. Sorry about that. Didn't realize you did these. Let's go. I'll absolutely sign up and support. Yeah, man. I'll just let you guys know right now. If you want to support what we're doing here, the best way to support is to stop donating. and become a supporter on the website at tradethetrigger.com. It's the best way to get into our community, become a part of our community, and help support the things that we're doing here. And we're trying to develop a bunch of stuff for you as well in the background, so to make this a more sustainable community over time. All right, so I'm going to take a quick break with you. It's now 12:54. I want you to be aware here, right? I showed you a chart earlier that said those guys come in at 1 p.m., 1 to 1:30, and start buying like crazy. So be careful in here if you are short. And do I get ads if I support through the website? Ads for what? I don't quite understand that. If you get ads through support on the website, don't quite understand what you're saying. I don't think you get ads if you sign up for Twitch, do you? I don't think you do get ads if you're a Twitch. Like, I think it depends on who you are as a Twitch member. Need something. Hold on a second. I gotta read what you guys are saying. I need something to listen to while I sit on this margin desk. Do you do these daily? We do them every day. Every single day. We try to teach traders basic trading tools so that they don't. What we found was this. Who's asking this? Trading for veteran service members. Right on. So what we found was that people. Let me end this call for the moment. Well, we had a small trading group. It was like 10 of us. Then it became like 100 of us. And I'd always ask people like, or they'd show me their trader log, right? I'd be like, well, what was your thought process here? What was your thought process there? And we'd find that people, for a lack of a better word, we found that people didn't have just basic trading strategies, just like really basic stuff. They would like consume their YouTube video. They would consume, I don't know, a note in the overnight from somebody, and then they would go to work, right? So they'd start trading, and they'd say, I don't know, Spot Gamma said this, or I don't know, Trady Tick said that, that kind of stuff, and not having like a set of tools that were more related to price action than a thesis. Like everybody's supposed to have a thesis. You should have a thesis, right? You should have a trade plan for when you're entering and exiting a trade. Where am I going to enter it? Where am I going to exit it? If it goes against me, what do I do? How do I manage it? And what should I expect for price action in that trade? So we started the show to deal with that stuff, to give people tools, basic tools that they need to be successful in the market. So yeah, we do this every day, man. Monday through Friday, 9 o'clock in the morning, usually 9:30 until 4 p.m. every day. I'm losing my voice right now because I'm sick, but yeah, dude, we do this every day, bro. All right, I'm going to take a quick break. I'll be back with you guys. The show, of course, stays on. I'll put CNBC on. I'll be back here in the next 15 minutes to half an hour. I'm going to set up a whole different scene for you, getting prepared for Jerome Powell's comments at 2 p.m. And then the reporters asking a bunch of silly questions 2:30 p.m. And we'll discuss expected ranges for today, what the options market is saying, where the bottom is. Yeah, man, I appreciate it, brother. And I like that you're trading for veterans and service members, by the way. I like your moniker. I'm a veteran myself. I was in the Army. We have a lot of veterans, I think, in this audience, too, for some reason. But so I appreciate your service, brother. Hey, what's going on, Crazy Eddie? Okay, so I'm going to take a quick 15-minute break. I'll be back with you guys 15 minutes. I just got to take a break. My throat's killing me. I'm pretty sick right now. Been running with temperature and the flu and all that kind of stuff. Whole family's sick. So I'll be right back with you guys in just a few minutes.
CNBC shares are up almost 2%. They just announced a third AI customer and will begin shipping them products later this year. Didn't name the customer, but said they have a third AI customer. Again, shares up almost 2%. All right, now time for final trades. Bryn, we're going to start things off with you.
COWS, COWZ. If you want one screen free cash flow yield that consistently does well, this does it for you. It rebalances quarterly. It's got a current free cash flow yield of 7.9. It's up 9% year to date. It's a great long-term strategy.
All right, Weiss.
You stole my final trade. Archer Daniels, Joe likes it for momentum. I like it because they're close to resolving the accounting scandal, and it's a way to play commodity.
Wait, we do have consternation?
So Steve obviously cheated and looked at my final trade. FMC Corp, it's playing a bottom in the agriculture space.
All right, that's going to do it for us here on Halftime Report. The exchange starts right now. Thanks for watching.
Frank, thank you very much. Welcome, everybody, to The Exchange. I'm Tyler Matheson, and here's what's ahead on a busy Wednesday. Less than 60 minutes to go to the Fed's decision on interest rates. No move expected on that front, but the markets could move on what Chair Powell says. And our panelists are looking for some very specific clues from him today, and we will tell you what they are. Plus, Reddit, the first major mainstream company set to IPO this year in the tech area, and one of our guests says he wishes it wasn't. He's here to explain what he means by that and what it means for the overall state of the IPO market. And shares of Chipotle topping $3,000 for the first time ever on plans for a historic stock split. Can the company keep cooking up gains? That's all ahead, but we begin with today's markets and Dom Chu with some numbers. Hey, Dom.
They are numbers and they are in the green, but they are very modestly so. You can't get much more, Ty, in a holding pattern ahead of that Fed rate decision than we're at right now. So let me just take you through the percentage gains. It's about pretty much flat, flat, and flat for the Dow, the S&P, and the NASDAQ. The Dow Industrials currently at 39,158, up 50 points. That's the outperformer, up 0.1%. And we're pretty much spot on, up 2 points in the S&P to 5181. And by the way, just for context, again, very tight trading range. We were only up 6 points at the high of the session for the S&P and down 6 points at the low. So very much a tight trading range. The NASDAQ composite, 16,175, up in 8 modest points there. Again, pretty much flat on the session overall. We are seeing some movement, though, in some catalyst-driven, news-driven stocks, specifically with regard to the computer chip business. Intel, after the news of that big kind of chip grant, the $8.5 billion in loans and totaling $11 billion up to, Intel shares were up more solidly today. They're now down 2/3 of 1%. NVIDIA shares are down about 1% as well after its big developer conference and unveil of its next-generation AI chip. Advanced Micro Devices down 3%. Micron reports earnings after today's closing bell. Keep an eye on that. And the semiconductor ETF ticker SMH just about down 0.1%. And then Tyler mentioned it, from chips to chips and guac. Chipotle shares did at one point top 3,000. They're at $2,903 right now, still up about nearly 4%, but up 8% at the highs so far. Just to give you an idea, the 50-for-1 stock split obviously puts some of these shares closer to that $57 to $60 range when they do kind of split adjust at that point. But Tyler, this is a company that's now worth roughly almost $80 billion. And just to give you an idea, it's not necessarily AI returns, but an up 80% over the year means it's now bigger than Target, the big box chain. I'll send things back over to you.
Holy guacamole. Dom, thank you very much. Let's start in Washington. Steve Leisman with what we should expect from the Fed chair and the FOMC today. Hi, Steve.
Hey, Tyler. Yeah, I think it's possible the most important answer to the most important question of this meeting, when might the Fed start cutting rates, could come right at 2 p.m. in the statement, not necessarily from the press conference, from the statement, if the Fed repeats a critical line from the last announcement. In January, they said, quote, the committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. Well, they repeat that. It's going to be like going back in time, resetting the clock once again, telling investors they still don't have that confidence to cut rates, need additional data, maybe months of data showing declining inflation before they're ready to firmly tell telegraph any rate cuts. Along with the statement, new projections could provide clues to the policy outlook as well. They projected in December GDP at 1.4%, running a little hotter in the first quarter, 2%. Unemployment, they projected at 4.1. Well, they're creeping up to it towards 3.9%. Core PCE, you can see there 2.9 in January, maybe 2.8, 2.9 in February. So running a little hotter than their year-end forecast. And there's the Fed funds rate with that projection for a 4.6%. There is some concern that the individual Fed members, once they get done projecting it, could take off one of those rate cuts from the projection there and raise their outlook for the Federal Reserve funds rate for the end of the year. It would take only 2 members to do that. I'll leave it there, Tyler, throw it back to you. We'll look at the projections and also looking for some information perhaps on the balance sheet and what's expected to be the start of a discussion about ending that balance sheet reduction. Tyler?
I would love it if you would give us a little bit of a tutorial about a phrase that I'm sure is going to come up multiple times over the next hour and a half, and that is the so-called dot plot. What is the dot plot? Why is everybody paying attention to it? How often do they plot the dots? And just walk me through it.
Okay, so the dot plots are the individual forecasts of Federal Reserve members for where they believe the federal funds rate should be at the end of this year, next year, 2026, and the long run. They take all those dots and they create a median out of it, and it's what is the general or average projection of the Federal Reserve for the funds rate that they set. The problem with the dot plot is it is confused for policy.
Say it.
They give you the dot, it comes up with an average, and that average is 4.6, and people confuse that for being the policy of the Federal Reserve to reduce it to 4.6. It is not the policy. It is simply a derived average of 19 different.
There you go. Say it.
Kind of guess policy from there. Yeah, they look to be cutting, and if there are fewer dots at a lower range, it might mean that they're going to be projecting fewer cuts.
Yeah.
But it doesn't mean that's the policy of the Fed. It's just their outlook, all things being equal.
Tell them the truth.
Their forecast, in other words,
Exactly.
a forecast of what's
It's
going on.
bullshit.
You know what they say about forecasts?
Tell me.
Well, I was just going to use the joke about what they say about assume, right?
Yeah.
Put it this way, they're almost always wrong.
Almost always wrong. Steve, thanks very much. We'll see you a lot during the next hour.
I love that they're saying that right now. Finally.
Next guests are unanimous in their view that the first cut in interest rates will not come until the summer, and that Jay Powell will want the committee to be as close as unanimous as possible before that cut is actually delivered. Let's bring in Julia Coronado, joins us on the phone, Macro Policy Perspectives President and Founder, Subhadra Rajappa, Head of U.S. Rate Strategy at Societe Generale.
All right, so this is SPY up here.
Global Wealth, CIO. Welcome to all of you. Subhadra, let me begin with you and just get your sort of...
Actually, let me, yeah, so I got the...
what's going to happen today. And then what would be your outlier view? In other words, if the baseline isn't...
10-year Treasury yield right here,
next
center.
Alternative B.
Yeah, so like Steve was mentioning, I think that the Fed might upgrade its growth forecast as well as its maybe a tick higher on inflation for this year. But really the focus is...
This is the Dixie over here.
The dot plot. So we're expecting that the Fed retains 3 cuts for this year. Our call is that the Fed will deliver the first cut at the June meeting and then stick to a 1 cut per quarter schedule for the remainder of the year. But really the surprise for us will come if they move the dot for 2024 to suggest only 2 cuts for this year. And there's also a chance that both 2025 as well as the
Okay, so what am I missing here? Cap, I know this is free. Forgive me if I'm out of place, but I listened to this at work. Any way to give more price updates throughout the stream would be very helpful. Just a suggestion. It's not enough interest and forget about it. I don't understand. JC, I don't know what you mean by that. What are price updates? I'm not quite sure what you mean here. Let me know what you mean, brother. I don't know what you're asking for, man. What do you mean by price updates? You mean my voice speaking in the background? Like where the price of SPY is, maybe? I just don't know. I don't understand the question specifically. You mean updates on SPY price? Okay, so just current price. I will say this. If SPY begins to ever move, you will most certainly hear us talking on the show at any time. So if you see any like significant up or down movement in price, you'll usually, almost every day, we're here focused on it. Yeah, I try to only take breaks when I'm not anticipating something happening. But usually usually I'm here, like mostly 5 days a week. If we see any significant price movement, not like specifically today, we've got this consolidation, not too much going on, right? I guess I said I want to buy that, but I'd really like to buy that, so we'll just make it lower. Yeah, I think we do a lot of call-outs here. Yeah, that's it. That's it. That's the thing I'm trying. JC, stick around, man, because we get wild in here. Like if the market starts going down or the market starts going up, like we turn the music on, we get the lights flashing, it gets crazy in here. But if it's anything like this sideways stuff, we don't do too much with it. As a matter of fact, let me move this over here. We're going to put SPY in the center, and I'm going to put T and X over on the left-hand side. Wait a minute, did I do that wrong? Oopsie. Hold on here. TNA, baby. Good old TNX. So in the center, we're going to do SPY here. Right in the center for you. Cappy Cap wants to buy way down here, believe it or not. On the left-hand side here, we've got yields getting wrecked right now. And here's the dollar index. Let me see if I can just draw this in or something so you can see it better.
So, David, should we be happy if the Fed indicates that it may cut only 2 times this year or maybe 3 times this year? Should we be happy about that, or should we be, because it would suggest that the economy is growing nicely and unemployment is not rising all that much, if at all, or should we be worried because it would be a suggestion that inflation is stickier and more intransigent than we would like?
So let's deal with the inflation question first. I think Citi's view, our view is that we are really in a situation where our highest confidence is that inflation is definitely going to be down at the 2.5% level, at the end of this year, which is very much the Fed's target. There may be some, noise along the way, but January and February were a little hotter in point of fact because price increases took place at that time, and we really see the vast majority of the inflation indicators heading down, with the exception potentially of fuel. And taking a look at the other side, right, of course, the economy, we thought the economy was going to be slow then grow, that it was going to slow down now and accelerate. We just increased our earnings per share projections from 5% this year to 7.5%, which is a large change for the average stock for the S&P. And with that, we're building in the idea that the markets can go higher based on those earnings. But the Fed at the end of the day has to come up with a plan to normalize that rate curve, right? To actually see it, right? Have an upward slope. And the longer it waits to do that, it actually adds risk to the market and it takes away that possibility of resilience. And I think that Jerome Powell sort of said that at the last meeting when he said that the idea of normalizing, right? He doesn't have to wait for every signal in terms of inflation to be in place in order to begin lowering rates, because he knows that leaving them at this level with this level of QT actually is itself a danger to the economy.
That's very interesting. Julia, let me conclude with you to pick up on what David just sort of referenced there, and that is the idea that that the Fed might cut rates before. It doesn't have to wait for perfection. It might cut rates before inflation gets to 2%, not waiting until it does.
Yes, absolutely. The Fed still believes.
Where do I want to buy? I want to buy 5.
Chair Powell has said point blank, if we wait.
Well, I mean, I really like I'd take the hourly trigger, if the right time of day. So that's 5/14/70. But when the decision is made at 2 p.m. or whatever, I'm going to expect like a bloodbath down into it. So somewhere right down in
place to be once you've gained confidence that inflation is moving in the
5/10/77, 5/12/44, any of this. If we get any kind of like doom and gloom into this Fed decision, because it's decision day, if we get like any kind of like doom and gloom, this kind of bullshit, and try to buy that into the decision. Anything down, any kind of like range stretch down in here, I'm looking to buy.
But we do expect that March and April are going to deliver that downward trend.
I'll even take this right here, this hourly trigger. I'll take that shit too. But just because this is a Fed day, I don't see why we can't stretch even lower than the hourly trigger.
Probably a bridge too far.
Julia, Subhadra, David Balin, thank you very much. Appreciate your time today. See you again soon. All righty, let's turn to housing and another sign of just how sensitive buyers are to any movement in interest rates right now. Diana Olick has the very latest. Hi, Di.
Hey, Ty. Yeah, it's all in the weekly mortgage demand numbers. You see it there, and they're getting more and more sensitive to the small rate moves around bigger numbers like 7%. So mortgage rates rose last week for the first time in 3 weeks, and as a result, demand came down for the first time since February. The average rate on the 30-year fixed rose to 6.97% from 6.84%. That was last week's average from the Mortgage Bankers Association. But if you take a look at the daily rate, and that's from Mortgage News Daily, you see that by Thursday, the rate had crossed back over 7%, and it rose even higher to start this week. So applications to refinance a home loan, which are most sensitive to weekly rate changes, fell 3% compared with the previous week, and were also 3% lower than a year ago. Applications for a mortgage to buy a home fell 1% for the week and were 14% lower than the same week a year ago. And interesting on those purchase applications, with housing supplies still so low and prices still so high, the average loan size for purchase applications increased to the highest level since May of 2022. Tyler.
All right, Diana, thank you very much. Diana Olick. Coming up, Reddit expected to price its long-awaited IPO this afternoon. We will look at what
options are really fucking expensive today. Like, whoa.
Is the biggest wrinkle for investors. Plus, Box CEO Aaron Levy will join us.
Really, really expensive today.
Investor Day. Just made a big acquisition.
Are any of you guys long calls or puts right here? Like, I'm looking at both sides and I'm like, man, they're crazy.
More jobs instead of replacing them.
Rates will go to 8%. I would love it.
Back.
I wish we'd go to 20.
This is The Exchange on CNBC.
Yeah, I like the 8%. FSLR. Yeah, we're not below the monthly trigger just yet on. We're not below the monthly trigger just yet on FSLR. I'm pretty bearish on it. If you want to know, I'm bearish on it. Yeah, your monthly trigger keeps coming up. Do you like buying that monthly trigger right here? Yeah, I'm pretty bearish on it. I'm pretty bearish on it right here. I think you're going to get a new low on it too. I think 130 is easy on it. Maybe $100. Are you bullish on FSLR or no? Those premiums will deflate massively at the first pump or dump. Yeah, I'm looking at the options chain for today for SPY. 519 C's are 61 cents. How about like 15 cents? So I'm looking at the premium on the call side. Then I'm looking at the premium on the put side, and I'm like, for 512s, those are 64 cents. It looks to me like both sides of the options chain right now is it looks like a fucking trap for retailers. Both sides do. I'd really like to see one side get slashed to even attempt to buy a call or a put. Hey, Kitty. I'm not interested in paying somebody else premium.
Surging in its public debut today, up 69%.
Well, volatility dropped. The vol SPX at the money vol surface shows volatility just going down after today. But you know, if the Fed is nasty, then vol can kick back up again.
ARM went public back in October. At the same time, we are waiting another big IPO expected to price after the bell today, and that would be Reddit.
Yeah, so what we're going to do is this bottom screen down here that you're seeing right now with CNBC, this will be filled with Jerome Powell.
It shows that
and then in the top left-hand screen, you're going to see... Kitty.
Very anticipated IPO. It's been 827 days since Reddit announced
the screen that is
its paperwork to go public. It appears though that
there
awaited day is
for you.
Here. Reddit.
That one will be financial juice, so that we can see the key talking points, whether they're bearish or bullish. And then above here, you're going to see SPY, TNX, and Dixie.
Final decision call. Where the bankers, the advisors, the company all gets together and decides a final price for this IPO.
Yeah, just trade a straddle and trade the vol. I agree with that too. I like the straddle today.
Which implies
I'm not liking like zero date puts or calls personally.
That's a 36% decline from the $10 billion value.
I'll trade the reaction on it on like calls or puts, but currently where they are right now, I think they're out of their fucking mind.
Global digital city where
it's better to be a call and put seller today than anything with the premium on these calls and puts.
The headlines just while the company was on its roadshow over the last week and a half.
Can I elaborate on why I choose OTM on zero dates opposed to in the money?
By the FTC into Reddit's agreement.
So
Content with third parties.
It matters. Time of day matters. What I'm buying, how far outside the money, how far inside the money. If they're zero dates or one dates, time of day really matters. Yeah, and the IV will drop after the event, more than likely. There'll be an IV. So let's talk about that briefly here. Let's have a little chit chat here. I usually do this on rate day, and I haven't done it in a while, so we'll switch over and take a peek at. Let me see if we can take a peek here. Maybe one quick second. We'll do something here because I normally do this, and I didn't do it today. What am I doing here? I said I'm going to do something, but I don't know if I'm going to do it. I say I'm going to do this. Yeah, one quick second here. Give me one quick second here. It's now 1:24. We have a half an hour ahead of us. So the expected move today is 519.01 on the upside, okay? So 519.01. And you can see this Valhalla trade up here, right? So upside expected move today. If we get the expected move to the upside, you have an expected range of about 519 and change. So a little bit lower than here, right? So we'll actually lower this down a little bit. 519.01, right there. We'll call it Valhalla, right? Everyone's saying we're going to 520 today. We'll bring this one, where are we at? There we go, 519 right there. And the downside move for today is 511.94. And so just right down here, right, that 511.94 is right in this zone right here. Right down here. So I'm telling you that I'm looking for a dip buy down here, right? And if we go zone to zone, whether that's down below and then all the way up to 519, if we were to go zone to zone today, right, up and down, let's say, and any kind of weakness, you've got me telling you, yeah, I want to buy this shit right down here, right? I want that little bit of weakness down here to buy. The upside target is up here. So this is your expected range today. Right in here. One of the posits that I have is that this Fed rate decision might be a no, like a no event, a non-event in terms of volatility. If we don't trade outside of this range above that 519 nor below this, this is just your 1 sigma move, right? The expected range for today. Now, what else happens when we make these moves? Let's say we move up here, right? This expected target up to the upside here of 519. Oftentimes on an event day, you will see a failure to get there. You'll actually see the market, let's say the market responds well, right? And price rips higher. You'll actually see a failure before we get there. And that goes your first, there goes your first repricing of options. So you bought 50-cent calls, let's say. They're expensive as fuck, right? Like 519s are 63 cents, right? So hold on. So you're in calls. We blast up your 63-cent calls. Maybe they go to $1.20 or $1. What is it here? I think it'll be $1.20 or 30 or 40, regardless. Even the premium kick that kicks in or whatever, right? So you're like up here, and then we come back down here. These little algorithms, these little dealers and market makers, they will reprice on vol crush. And now these options that were 60 cents here, 65 cents, whatever they are, will restart, let's say, at 35 cents. Does that make sense? And then they'll make another move higher here. Whoop. Then you might get 70 cents on that second rip higher, right? So you get repricing as time goes on. Same thing, though, applies as well to the downside oftentimes, right? You come back down here, you slam down here, you see the puts, your expensive puts go in the money. They're like 100% up or something like that. And they start to bleed them off, and then they reprice them in here. How do you get around that would be the question. Well, the question, I guess, is how do you get around that repricing? One way, of course, is by using spreads, right? If you're using spreads, you're not going to have to worry about the repricing of those options. Another way that you can combat this is by not trading until options are repriced. So if you see the initial upside move, you see the failure that comes back down, you're watching the options chain, right? And you're still kind of bullish. You're like, yeah, I'm bullish. I'm going to take another trade. Boom, that's where you take the trade right there. You've already been told that it's bullish news. You're kind of more confident in your upside moves. Same thing if we were to blast down, right? Doom and gloom from the Fed. And then all of a sudden you see it come right back up again for the next down move over here. And you're kind of like, yeah, I'm going to take instead of taking this trade and losing all that put premium, I'm going to jump in on the second trade over here and take this one down into the close at the end of the day. So at least from an options perspective, the market is priced in to 519 and 511 and change for today. I'm going to switch over now to the Fed and try to bring up, let's see here, let's do the Federal Reserve. News and events, videos maybe. I don't see one yet for today. I'll put CNBC back on while we wait here. And I'll look for their video.
Welcome back to The Exchange. I'm Bertha Coombs with your CNBC News update. The U.S. is warning that foreign hackers are targeting water and sewage systems across the country. In a letter to state governors, the administration warned that the attacks were perpetrated by Chinese and Iranian hackers in particular, citing a case of a downed facility in Pennsylvania. Cybersecurity professionals have singled out water and sewage plants as targets because of the critical service they provide and their lack of adequate defenses. The Environmental Protection Agency issued new rules to curb carbon emissions from vehicles today. In a push toward EVs and hybrids, the new rule says as long as 56% of new vehicles sold are electric by 2032, the auto industry could meet its carbon emission limits. The EPA says the rule will avoid over 7 billion tons of emissions over the next 3 decades. And the Mega Millions jackpot is close to $1 billion ahead of Friday night's drawing. The pot has been building for 29 straight drawings now since December's last winning ticket. Current jackpot, $977 million. They're going to have to rewrite that old song, Tyler. You know, if I had $1 billion instead of just $1 million.
I still got a chance here. I'm going to go out and buy one.
Go for it.
Bertha, thank you. Coming up, Box CEO Aaron Levy will join us on the heels of the company's Investor Day. In the past, he's opposed the overregulation of artificial intelligence. We'll ask him if he still feels the same way. That's next.
Damn, I don't want to buy any of this, dude. I'm like looking at all these options. I'm like, hate when they do this. I hate like 5.19s or 57 cents. Like, get fucked. Sorry. They've been hiding the data release. I don't want to spend 60 cents on calls, man. I don't want to spend it. Do I trade BA? No, I don't trade BA. I have traded BA and I've lost my shirt in it. Well, I just want a deal, just send them down to 20 cents or something, 10 cents, 20 cents. 4 strikes out of the money and you want 60 cents and a 0 date? Get out of here. Yeah, what's your positioning for? I want you guys to tell me what your positioning is. Poke Juice Box says I'm hedged with 510, 500p for Monday and 510, 505p for next Wednesday. I like that trade a lot. I like the Friday or this upcoming Monday 500 and 505p's. They were what? I think they were pennies, right? Yes, pennies or something yesterday. They were dirt cheap. They were dirt cheap yesterday in the close. So like I'm wondering, yeah, maybe I should take some of those out.
Welcome back to the Exchange, everybody. Shares of Box up more than 10% this year, outperforming the S&P as the software and data and content management company shifts to AI. Box counts 67% of the Fortune 500 as among its customers, and it is working on implementing an enterprise-grade AI into its offerings, enabling businesses to use it safely and securely.
You're sitting on cash right now. Yeah, there's this specific rate decision to me is like,
awesome. Thanks for having me.
Great to be here. How is AI?
It feels like they were pushing a narrative on CNBC this morning that was like complete bullshit, and I was like, what are you coming into today?
Effectively, Act 3.0 for Box.
Yeah, so we're incredible.
Did anybody pick up the VIX 17Cs or no?
With Box, enterprises manage and secure some of their most important documents and content. So think financial records, marketing assets, contracts, product designs. So all
no, the 500Ps. Hold on, I'll show you what they are. Hold on a second here.
Powers how businesses work. With AI and with this new chapter that we're entering, we can fundamentally transform the insights that you can get out of all that information. We can help you automate more and more of the critical business processes in your enterprise.
So 500p for this Friday is 11 cents. Or 11 cents.
This content
for SPY this Friday, 500p, 11 cents.
That's in this data. That was never before possible with our unstructured data or our business content. And so this is why we think it's a massive breakthrough where we can turbocharge productivity.
They're 22 cents for Monday. So this upcoming Friday and Monday, they're dirt cheap. They're 11 cents and 22 cents. I think those are great trades. They're dirt cheap. Like they cost nothing.
I guess what I'm hearing you say, and I am a dunce when it comes to AI, but
you have plenty of time on there to at least get some kind of a trade on it today, tomorrow, whatever. I mean, if you're all bared up, what's 500?
It will allow the user, the company, to use that data, manipulate that data, access the data, and bring it alive in ways that are not just storage per se.
That's exactly right. So
what is wild too is that they've got like 500s for today priced at zero.
B2B company, and you have a large sales.
Like even the options market, man, this whole like the options market right now that I'm looking at the options chain right now. I'm like, these fucking guys don't see us going anywhere today. I think they're gonna trap all these fucking bulls and bears in here today. That's what I think they're gonna do.
Engineer on that account would have to go and find exactly the document that has the answer that they're looking for, and then be able to learn whatever the information is. With AI, you just ask a question of all of your data and instantly get an answer back that will go and accelerate whatever that problem is that individual is solving.
This like I'm looking right now. I'm looking at the options chain. I'm like, why is everything
this content in an enterprise and turning it into real-time knowledge and insights for anybody across the organization?
So 503s are a penny.
Making sure that that's safe, that it's secure.
503s.
Answers back from the data that you personally have access to.
There definitely isn't a rate hike priced into the market right now.
But just think about what this can accelerate in life sciences and healthcare and financial services. For any kind of go-to-market team in an organization.
There's way more juice on the call side.
Into the underlying knowledge inside of your organization.
And I can go in and find
526s are a penny, so 526C.
Contract, for example, that I need to help me understand.
Market is definitely priced on the call side here.
Cruise comes in, right? An acquisition you did about a month or so ago. It helps you vault into this area.
Yeah, so we're basically combining the power of Box AI, which is a platform capability that connects.
For this reason, your option purchase should have been days ago.
Or IBM or others, We're taking the power of the ability to extract structure.
Jimmy, you're thinking that we move big. Where do you think we move, up or down?
Be able to take out
or both. Both. You think we're going to get a big down move and a big up move?
And then with the Cruise acquisition,
I think we get trapped personally.
The viewing of all.
I think today is going to be a failure on the up or down side, and then they're going to hem you right in. You're going to be stuck.
For renewal.
If I had to take a guess, that's what I think is going to happen.
Risky clauses in them that you might want to pay more attention to. So,
Jimmy, you think we're going up or down?
To get business insights from all of the data in your organization, and Box really never could have provided that before. But frankly, it was never possible before the role of AI emerged inside of enterprise software.
Quick thought on AI and jobs. A lot of people worried very much about the idea that AI is going to eliminate lots of jobs. You have a much more nuanced and I would say optimistic view of that. Could you give us it in a thumbnail?
Yeah, so hard to do in a thumbnail, but basically, I think that humans do way more inside of our daily jobs than simply rote tasks. And what AI is incredibly good at is automating those rote tasks. So what email should you send to a customer? How do I extract data from a contract? How do I automate an invoice process? That's where AI is going to be incredibly powerful.
So we have an interest rate prep white paper here from Financial Juice. On Wednesday, the 20th of March at 2 p.m., the FOMC is set to release U.S. interest rate decision along with rate statements and summary of economic projections. I think that does bring some volatility into the market. Down, Jimmy's saying. Jimmy's saying he thinks that we're going to go down. The overview, FOMC is widely expected to keep rates unchanged at 5.5%. Markets will look for any changes in longer-run inflation and GDP forecasts in the latest SEP. This has been a point of contention here, by the way. Just this note right here. This has been a point of contention that there's really not a lot going on with this rate decision. So the focus will be on the SEP. Markets will look for any changes in the longer-run inflation and GDP forecasts in the latest SEP alongside the much-anticipated dot plot, baby. Everybody likes the dot plot, even though we know the dot plot is bullshit, right? Means nothing, which was released in December, summary of economic projections. Markets will be looking for any pushing forward or moving back of rate cut bets from the FOMC members in the new dot plot. Financial market pricing puts probability of a cut at roughly 0 for next week, 10% by 1st of May, 65% by the 12th of June. And those numbers have actually come down, if you didn't know that as well. Several Fed officials have indicated there is no immediate hurry to cut rates, which is supported by the recent pickup in monthly inflation and resilient payrolls. In his testimony to Congress just before the blackout period, Fed Chair Powell said that the committee is not far from cutting rates and needs a little bit more data. Listen to that closely there, that statement. Okay, now this is a thesis change here. This is what's being pushed by CNBC, and that is, and this is a quote, right? Here's a quote right here. In his testimony to Congress just before the blackout period, Fed Chair Powell said that the committee is not far from cutting rates and needs a little bit more data to become confident inflation is moving sustainably towards 2%. Remember something here. The Fed does not want inflation to spike down and slam into 2% and ricochet back off that 2%. The Fed wants inflation to hover and slowly go down to 2% and maybe go under 2% to 1% or 0%. That doesn't happen by slamming us with rate increases. They're not adversarial. He said, I'm not adversarial. Fed's Powell in the press conference following the last rate decision said, based on the meeting today, January 31st, I don't think it is likely that we will have a rate cut in March, right? No rate cuts in March. And we are now in March, and no one is expecting a rate cut in March or today. So if something else was to change today, if you saw a rate cut or a rate increase, anything like that, it would be outside of what he's expecting to do today. So there's some commentary here from Unicredit. We expect the FOMC to leave interest rates and the pace of balance sheet reduction unchanged at its meeting on the 19th and 20th. The FOMC's updated macro projections are likely to be little changed, indicating 3 rate cuts this year. We still expect rate cuts to start in June, in total 125 BPS this year. Now, I want to make a note here to you, too. If everyone's saying we're going to get a rate cut in June, when do they begin to price that cut in? Think about that today as the market trades after this rate decision. Has it already been priced in your view? Has it not been priced in? Or does Jerome change his statements to, you can probably kick off the June rate cut as well. Maybe you're not going to get one in June. That would probably have an initial negative reaction in price today if he was to change his verbiage in any kind of way, shape, or form, for a more hawkish tone. Nomura stating here that we expect a hawkish update to the summary of economic projections at the FOMC meeting. What else do we got here? Wells Fargo will hold its blah, blah, blah. We do not expect any policy changes. That's from Wells Fargo at this meeting. An expectation that is held by most market participants. And then Morgan Stanley, on the net, we think not much has changed for the Fed. We expect changes to the summary of economic projections will paint a picture of optimism around supply-driven growth, higher GDP forecasts coupled with unchanged forecasts for core inflation. I think I'm on that trade with them. I don't think that you're going to get a more hawkish Fed, any kind of a more hawkish Fed than you're expecting, or any more dovish Fed. I think he stays on that dovish projection. And I don't mind the fluctuations in inflation and employment right now. As long as they keep coming up and down really slow, I'm happy with all that. JPM Morgan saying at next week's meeting, we expect the FOMC will leave rates on hold and make a few changes to the post-meeting statement. In the dot plot, we think there are better than even odds that the median dot for this year moves to showing 2 25 BPS cuts by year-end 24 versus 3 such cuts into the December plot. Now, that could be taken as bearish on the stonk price of SPOOs. If that does happen today, that could be initially perceived as a negative for the market, but I think bulls are in safety if that does change today. The longer we're raising rates or considering raising rates, we're not cutting one after another. I still think any kind of negative connotation from that leads to just another great dip to buy. That's another note. Dan V just made a good comment about the Q&A. I do want to warn you of something, that you get the initial press release at 2, and then you end up getting the Q&A, and the Q&A can go really well or really bad. There's like no in between there. If they piss off Jerome, he gets all salty and crazy. If they placate Jerome, it's not a bad conference. Can be very, very, very positive. There are definitely 2 reactions: the reaction at 2, and then the reaction from 2:30 until the presser ends. Isn't this the first FOMC since he had that 60-minute interview, and since Yellen said she made a mistake saying transitory? Do you think that'll play into this? No. I agree with you too there. As long as growth components keep up, inflation isn't a concern currently. I agree with that statement. GDP's been great, right? Everything's been resilient. He's gonna come out and say that shit. He's gonna stay, dude. This fucking guy is gonna get more If this guy gets hawkish today, I'm gonna give it like a 5% chance. Once this guy's on like a thing, he's on it to its conclusion. These people think they're the smartest fucking people out there. I doubt that he comes out and he's hawkish. Yeah, he does. Al Marino's asking a great question. Does his necktie, what do you guys think he's going to do for a tie today? Purple? He's been like, what if he does a green tie? Do I think we're going up or down for? I think we're going both ends. I'm serious. I think we're going to go coast to coast. I think you're going to see that high that I showed you earlier, 519, and I think you're going to see that low. And I think you're going to get trapped in the middle. I think you're going to see both. I think you're getting trapped today. This looks like, I could be wrong here. I could be completely wrong, but I watch every one of these fucking things, right? And there is nothing to talk about today. There is nothing. So they're just making shit up to talk about. They're purely making bullshit up to talk about today. There isn't like this big catalyst. We're gonna make the dot plot the catalyst. I'm like, get the fuck out of here. Are you serious? Even CNBC just admitted that's bullshit. Should have nothing to do with the market, but of course it does, because there isn't a lot to talk about today. Expected low today is 511 and change. I think it's like a 511.19 or something like that. I found that on optionsai.com or something like that. I go there for quick and dirty fucking info. They do like a projection for any ticker that you want for expected moves for the day. Today smells like a trap. It smells like a trap for bulls and bears. That's what it smells like to me. And I don't like the price of options right now at all. So this looks like give me all your money day. Looks like I bet there's a dealer just sitting there going, yeah, I can't wait. These fucking guys think they're going to make money today. Does anybody have an actual link to the Fed Live? I don't actually have that here. I'm searching for it right now on YouTube and on the Fed Reserve site. I don't see it. QT changes. They've been doing QE for the past 6 months. They've been sneaking money in the market. They've been sneaking it through prime banks, loaning it to hedge funds. I shit you not. They've been doing QE for so long now. No, wait a minute. I think I got it. I found it. Okay. So we're going to get rid of this. Okay, so here's the FOMC presser down here. Whoop. Whenever this is ready to go. Oh, that's that bad music that they got there. I found the link. I got it now. It's up down below. Dude, if Jerome breaks out the charts again, when he did that shit, I couldn't fucking believe it. I was like, what are you doing? I was like, you're the leader of the free world, basically. The whole world's watching you and you're over here. So I can make this even bigger. You're like the leader of the free world and you're over here trying to tell people. There we go. So this is where you'll find the headlines as they come out. So see my cursor over here? So you'll be looking for the headlines as they come out up here. They'll either be red or regular colored. If they're red, that's bad, right? Shouldn't say anything more to that. What'll happen is the boys over at Financial Juice, they will read over the news release and look for anything negative or positive in that news release. And then at 2:30 p.m., we'll have the Q&A with reporters. There was some discussion last night. If you were on FinTwit, Andy Constant had asked a bunch of questions of Nick Timmeros. So if you ever want to check that out, you might want to see that exchange that took place yesterday in FinTwit. You want to see Powell? What's your thought on the housing market? Any signs of a crash or correction knowing you have properties? So I am selling my properties right now. That should be all you need to know. I hope to be out of owning properties by summertime. I don't want to be here for next. In my view, the housing market top will be next spring. By next spring. Yeah, when he does that shit, it bothers me. Like when he's like showing charts for like 10 years from now, I'm like, what are you doing, man? Like what are you doing? Like, who the fuck knows where we're gonna be in 10 years? Like, you don't have to say like Jerome Powell does not have to explain himself on a rate decision to anybody. You just like top line, boom, 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 you're done. Yeah, red tie's bad. Red ties, but I think for me today, I don't think that the dealers care where we go. I think the dealers are like, yeah, we're hedged right to fucking the 19 and down to the 11. As long as nothing crazy happens, I think they're going to trap your ass today. I think that's the plan by the Fed or by the dealers. Dixie's still rolling down right now. TNX, a little weak. That's what I'm thinking, Jimmy, is I think I want to get out. And then I think I want to try to get back in 4 years, 6 years, something like that. 4 or 6 years, look to re-enter the housing market again, but not today. I'm going to leave one property for my kids. I've got one property that I'm going to leave for my kids so that if they ever get in any trouble, they have a place to always call home. The more debt, the better. I'm here for the fun and the chaos. Let's say you're here for the fun of the chaos. Where is Fed Chair Powell speaking? I don't know, but he does these round tables. It's usually like a group of people that have interests. You know, it's like, I don't know. We're the Red Tricycle Society, and can you drop some knowledge on us? They're kind of boring usually. Yeah, Jimmy, I was looking to so yesterday I was looking at I'm like, why would I go with a with a term when I can just go to like I was telling my wife, I'm like, I can just put money in Robinhood. Doesn't that shit pay like 5%? Like Webull pays like 5%. There's no rules in when you can take it in or out. It's so bizarre. We were discussing last night. I was gonna make a post about this on Twitter. But I think I'm going to save it for the weekend. It has to do with the money herd. Yeah, you want to come live with me? You come live with me. Do you guys know about the money herd? Like, it's like you can see it sometimes and sometimes you can't. It's easier sometimes to spot than it is at other times. The money rent, like, so when we were in inflationary stages, you saw money run to like the housing market, and then you saw the money leave the housing market. Then it went into bonds, and that's what I was thinking about this week. I was thinking about like, you want to outrun inflation? The easy way is with any of those accounts, right? If you do any kind of like money market account, any kind of if you do like even just Webull, if you're making 5%, you're doing pretty well right now, right? But where do you find the money? Where's the money crowd, the money herd going for the risk? I think that's the stock market. I think that's the place for it right now. Yeah, I'm shocked at that. I don't trade using Robinhood. I wouldn't trade that money there. I was just like, park some money in Robinhood. 5% It's fucking stupid. All right, 1 minute left. I'm gonna turn on I'm gonna launch the news squawker here. Let's see what we can hear here. Yeah, I'll probably take a reaction trade. I'm not willing to buy any. I'm not willing to trade these options right now. I need one side to get cut. I have no interest in getting my shirt ripped off me here. Options are too pricey for me at the moment. Spoo's squeezing right now, trading 516.44 in the initial release. Dixie blooding right now. TNX on the rise for a moment there.
That's in the CBO, 30-year debt, Fed rate no change rate remains unchanged at 5.5% as expected. CBO 30-year debt and deficit forecasts are lower due to discretionary spending limits passed by Congress, a stronger GDP growth due to increased immigration. So CBO projects its debt held by public's fiscal year. Fed officials, median view of the Fed funds rate end of 2025 at 3.9%, previous 3.6%. Risk to employment and inflation goals are moving into better balance. Remain strongly committed to getting inflation back to 2%. Fed projections show 9 of 19 officials see the policy rate above 4.6%, median forecast for 2024. Fed projections imply 75 basis points of rate cuts this year from the current level, additional 75 basis points next year as well. Median view of the Fed funds rate in the longer run.
Yeah, nothing's changed.
Up from the 2.5% previously.
Nothing's fucking changed
over the past year, but remains elevated. And projections show higher long-term policy rate projections at 2.6% versus 2.5% in December. Projections show one fewer rate cut in 2025 than previously forecast. Fed policymakers see the end of 2024 PCE inflation at 2.4%, unchanged from the December projection. Core seen at 2.6%, which is up from the 2.4% seen previously. Economic outlook is uncertain. Central bank highly attentive to inflation risks. Projections show only one official seeing more than 325 basis point rate cuts for this year. Policymakers upgrade the 2024 GDP growth forecast to 2.1% from 1.4%, seeing unemployment rates at 4% versus 4.1% in the December projection. In describing state of the job market, amidst January's characterization of jobs gains having moderated. Economic activity expanding at a solid pace, job gains remaining strong, unemployment rates low. The Fed also maintained their current pace of balance sheet drawdown. Following this, upside move in the S&P 500, downside in the dollar as well. So again, US interest rates remaining unchanged at 5.5% as expected. A slight upward revision to the inflation forecast, as well as the longer run interest rate forecast as well in this dot plot. So we have posted that out on the feed for anybody interested.
So, I mean, like this, you see this news that was created this morning, right? And this is showing not much change at all, right? Fed on track, nothing changed. We've got Fed and weighing future policy stance. The Fed will consider a wide range of economic data. Fed projections show 2024 policy rate view unchanged at 75 basis point reductions. The vote in favor of the policy was unanimous. What else we got here? Fed maintains current pace of balance sheet drawdown. Median view of Fed funds rate at end of 25 was 3.9%. Fed does not expect to cut rates until it has greater confidence that as inflation is moving sustainably to 2%. Risks to unemployment inflation goals are moving in better. All this stuff is the norm here. Fed read some of this stuff with me as it pops up on the screen. Fed projections imply 75 basis point of rate cuts in 2024 from current level. Additional 75 basis points in 2025. Fed Reserve leaves key overnight interest rates unchanged. Fed projections show 9 of 19 officials see policy rate above 4.6 median forecast for 2024. Risks to employment inflation goals are moving into better balance. Better balance. Yeah, like this is the fucking nothing burger. Like the Fed is not hawkish. I don't expect right here Jerome to come out and be hawkish. These guys, man, the fucking Fed. Sorry for swearing. The Fed right now is they're faking data. They want inflation. Listen to me closely here. They want the data to be up and down, gently, like rocking and rolling, just like this. They're not trying to slam inflation down to 2%, then start, cutting aggressively. I know that you want that to happen, but that's not what they're doing. That isn't what they're doing. And I don't care if they raise rates in a year or two. This is a manipulation by the Fed. They know the longer that they do this, that the markets will be stable. Stable markets.
Additional Fed easing in 2024.
Not expecting the hawk Fed to come out today. Especially from this stuff here, from what I'm reading here. SPY now trading 517.81. Target to the upside 519 and some change. I'm going to switch right now to a single chart so that you can see it. We're going to go to SPY really quick. It'll be on the top of your chart there. You've got the Valhalla trade to 519. I'm also going to break out for you we're above R1 now, trying to trade R2 at 519.15. Remember what I told you earlier. Look at your charts above there. Remember what I told you earlier about a failure just before you get there, right? And then a repricing. So be careful of an early roll, right? They roll it down on you, reprice, and then you go up there and tag that upside target. So be very careful. If you get wrapped up or if you're upside down in the trade or anything like that, just hold and we'll go right back up there again. Red suede suit. No, I was like, I don't know why I don't, it had to be. It's like CNBC, right? If it bleeds, it leads. You need a reason, it's like we got to make up some volatility for this shit. And the truth is, this is a non-event today. It really is. Like, they got to create shit. They're just trying to stir the pot. They got nothing. They don't want to run a story that's everything's okay, everything's fine. I don't think you're going to get, Fed's not adversarial. Fed is telegraphing to you in the future what they're going to do.
Says fewer FOMC officials see upside risks to their unemployment forecast compared with December, but more of them see upside risks to their inflation forecasts.
Traders price an additional Fed easing in 2024. Fed policymakers upgrade
U.S. yield
2024 GDP growth forecast 2.1 from 1.4%. They see the unemployment rate at 4% versus 4.1% projection in December. And they don't want to see it any higher. Oh, I'm going to tell you right now, the Fed does not want to see unemployment above 4%. KRE is mooning right now. Here comes your repricing right now on SPY. Fewer FOMC officials see upside risks to their unemployment forecast compared with December, but more of them see upside risks to their inflation forecasts. That's coming from Nick Timrose. And reads through some of this here. Fed projections show one fewer rate cut in 2025 than previously forecast. Fed projections show higher long-term policy rate projection. at 2.6% versus 2.5%. Fed also saying inflation has cooled over the past year but remains elevated. Yeah, this part right here, I don't know that this whole part right here, this Fed inflation has cooled but remains elevated. I'm assuming, or I've heard a lot of you state today that another rate increase would help drop inflation slightly more. I think there's I feel like there's a blood sport. People are like, I want rate increase so we can get to 2% really fast and it bounces. And we send the Fed into a fucking tailspin and they catch on fire. The plane catches on fire. They crash to the ground. I don't think that's going to happen. I think Jerome thinks he's saved the day. I think he'll believe that shit forever and ever, that he was the savior. Come back down here, take a look. Check back on the 1 minute trigger, see if we can get up to that 519 again. Trading right now, the peak right now was 518.38. Dropped it slightly inside of the expected move for today. Dealers not giving any kind of an out for bulls. There's no more follow-up from bulls at this point. With call buying, we'll see how high we can go here. This looks like a trap, man, for bulls and bears, so just be careful here if you are long or short. You're going to need J-Pow to stoke the bulls' dreams today. I got some calls on right now, Jared, brother. I bought that fucking pullback just there. You put all of your sideline cash into the stock market. Yeah, there's a lot of old people with cash on the sidelines looking for that money or that dip buy or whatever. They missed the entire run in Q1. They're just like, fuck it, put me in it, coach. I don't care. "19 minutes until the Fed comes out and speaks again. Be careful. They're going to try to roll us down soon. Once we get closer to that 230, like 220 or so, be very careful about being long. They like to roll it down for the Q&A. Jay Powell is not in the fluffer mood. Have you seen his suit yet by chance? "18 minutes left. Yeah, we should have Bork do a like, what color tie does he wear? Is it purple? Is it red? Is it green? I'm gonna go with purple. My guess would be a purple tie. Yeah, I gotta get out here in just a minute. I got a couple more seconds here. I got my finger on the fucking. Oh, maybe I didn't here for a minute. I'm gonna watch one more candle here and see if I can stay in or not. They're gonna take my stops right now. So fewer FOMC officials see upside risks to their unemployment forecasts. But wait a minute. Here we go. Hold on a second here. That's it. I'm out. They took me right here. I bought this candle down here, and they took me right here. So I didn't even get to monetize that. And they're coming right back down to hunt them right now. Fewer FOMC officials see upside risks to their unemployment forecast compared with December, but more of them see upside risks to their inflation forecasts. I don't know if I believe that. I think that's the big one for me is unemployment. Coming back down now to test the 1 minute trigger. Tesla with a roll currently. VIX trading $13.62. It got blooded down to $13.27 at one point.
Amazon is developing a new AI tool for online shopping, according to the insider.
HYG getting blooded really quick, getting rolled over. Looks like they closed their... Oh, they left a little bit of gap below or above on HYG. They took out most of the gap, but they did leave from 77.76 to 77.80. They did leave that gap behind. Dixie getting absolutely annihilated. Trading $1.368 right now. I want to buy this right fucking now. I want to buy that. I want to buy that fucking thing right, that fucking candle right there. Try it a second time, maybe. Now, here it goes. I'm having problems with taste trade again. I'm having problems with taste trade right now. I fucking hate tasty. Hey, David, do you want to come back on?
So regarding the market reaction to this FOMC decision and the SEP, we saw US equities jump to session highs this afternoon as the Federal Reserve held interest rates steady and signaled that the central bankers are expecting 75 basis points of cuts this year. So the Fed's so-called dot plot was in focus, as investors had speculated that a recent uptick in economic activity and inflation could lead to fewer cuts this year. So in the end, the Fed signaled the same number of rate cuts the market had already priced in. So it does seem that this lack of deviation from the prior expectation is what caused the strength in US indexes, weakness in the dollar and government bond yields as well.
Let me bring you over to, take a look at this chart right here. That's almost a near clean pin strike, right? This is your local resistance, right? You see it right there? So we can go on the bottom right-hand side. So this is your gamma profile. Look what happened here, right? Almost a near perfect pin strike, right? Right there. Straight green bar, straight up, and boom, straight back down again. See you later. You shall not pass. You know that we need to be above this 5,200. We need to trade above it, right? And then hold it. Catch ourselves a new high. And then catch the ride back up here. Has not happened yet. As of right now, they sold that 5,200. They don't like it, do they? It's a 30-minute chart right now, 30-minute candle. And they are pushing down as hard as they possibly can right now.
At 2:30 p.m. Eastern Time, we get the FOMC press conference with Chair Powell.
Try it again, long again. If no, the last known place was 51.74, so right down here. I'll try this one right now. If we lose this, next buy zone is 515.46. 515.46.
According to Echoes, the French government deficit estimated around 5.6% in 2023. And US Treasury yields now higher after the Fed 10-year yields last at 4.297%.
Bulls taking another stab right now at that 5,200 in SPX. We did get the target price of 5,200 on SPX, by the way. Dude, they ain't giving me shit here. They ain't giving me nothing right now. They're gonna, oh, fuck. They're gonna try to take all my money. I got one more penny. And I'm out again. No, I haven't made a goddamn dollar yet. Nothing. Haven't lost any money, but haven't made anything either. That's attempt number 2. Tried to buy this fucking thing right here. Tried to buy that candle. Up, straight back down, tell me no. Tried to buy that candle. Up, straight back up, tell me no. We're going to go lower down here. Okay, fine. Let's do it from right here then. Let's try that one. Let's try lower. Let's try right here. How about this? Did I have a CaptainJimJames wants to buy this? I didn't get that either. They didn't give me any of that down there. Now I want to try down here. I want to try to buy that one right there. Let's see what happens to this one. Come a little bit lower. Bring it. Come on down here for daddy. No. I took my stops. I was good. I haven't lost $1. I haven't done anything crazy.
At 2:30 p.m. Eastern Time, we get the FOMC press conference with Chair Jerome Powell. We have put the live stream out on the feed for all those interested.
Give me 2 seconds. I'll be right back with you guys. Give me just 2 seconds here. You see here, get this all spun up for you. Should be just a few moments now. 3 more minutes until Jerome comes out. What tie are we going with? I'm going with purple. Why don't you guys tell me in the chat? Tell me your tie colors. I'm going with purple. Purple or blue? Black? Just a tuxedo? Ties all hanging off to the side? It's like, sorry, I just had to leave yelling over at the dance. Blue is a good one. Green. Yeah, the dot plot's not wildly changed at this point. Like just blood red. Oh yeah, there goes the squeeze right there. Spooz squeezing again, trading 5, 6, 17, 61. Can we actually hit Valhalla this time, please? Orange. I like orange. A tie with memes of Janet Yellen.
Shortly expecting the beginning of the FOMC.
Oh, here, hold on a second here. Need one quick second here. Can someone let David AMS know that I'm going to bring him on here in just a moment? Can someone say something to David in the Discord? Here we go, boys and girls.
NYMEX diesel April futures settled at $2.69 a gallon. NYMEX gasoline April futures settled at $2.73.
Hey, David, I got you here, brother.
Our dual mandate to promote maximum employment and stable prices for the American people.
NYMEX WTI crude April futures settled at $81.68 a barrel.
Inflation
down
has
$1.79
eased substantially, while the labor market has remained strong. And that is very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
Do you hear me?
Yeah, can you hear us?
Monetary policy has been putting downward pressure on economic activity.
Just going to be listening to Jerome for a minute. We'll talk in between when he stops talking.
Tightness has eased and progress on inflation has continued. The risks to achieving our employment and inflation goals are moving into better balance.
By the way, it's no.
I'll have more
it's
to
no
say
longs
about
for me.
monetary policy after briefly reviewing economic developments.
There's no long for me at the moment.
David is not long right now. Just heads up out there.
Expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.2%. For 2023 as a whole, GDP expanded 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have weighed on business fixed investment. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2% over the next 2 years. Participants generally revised up their growth projections since December, reflecting the strength of incoming data, including data on labor supply. The labor market remains relatively
blue tie.
Supply and demand
or purple tie
continue to come into better balance. Over the past 3 months, payroll job gains averaged 265,000 jobs per month. The unemployment rate has edged up but remains low at 3.9%. Strong job creation has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressure on inflation. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.1% at the end of next year. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that Total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as from measures from financial markets. The median projection in the SEP for total PCE inflation falls to 2.4% this year, 2.2% next year, and 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are coming into better balance. We believe that our policy rate is likely at its peak for this tightening cycle.
Whoa!
If the economy is as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate.
Ooh.
We know that reducing policy restraint too soon or too much reversal of the progress we have seen on inflation and ultimately require...
Oh, that just went against every fucking thing said on CNBC this morning.
At the same time, reducing restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably down toward 2%. Of course, we're committed to both sides of our dual mandate, and an unexpected weakening in the labor market could also warrant a policy response.
I agree with that, too.
Continue to make our decisions.
Unemployment is the danger. Absolutely. Unemployment is the real place where I'm really scared. If there's like a place, if you were a bull out there.
Based on what each participant judges to be the most likely scenario going forward.
Unemployment is probably the single greatest risk to a bull thesis.
Will be 4.6%.
If you had one macro thing, it's that.
9% at the end of 2025 and 3.1% at the end of 2026. Still above the median longer-term funds rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. Turning to our balance sheet, our securities holdings have declined by nearly $1.5 trillion since the committee.
Yeah, that's right. Push.
Portfolio.
You know exactly what he just said.
We discussed issues related to slowing the pace of.
We are done raising rates.
While we didn't.
We are data dependent.
On this, the general.
There's real risk.
Is that it will be appropriate to.
And where is it?
Runoff.
Unemployment rate. We already know that. He knows that. Most of you don't because you fucking read FinTwit all day long.
Does not mean that our.
You don't believe the truth.
Shrink by less than it would.
Unemployment.
But rather allows us to approach that ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress, and thereby facilitating the ongoing decline in our securities holdings, consistent with reaching the appropriate level of ample reserves. We remain.
Keep on going, dude. Give me 519.
2% goal, and to keeping our longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving.
Yeah, that's 100% trade right there. We just went to 80 cents on 519Cs.
To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Thank you. Microphone, right. Steve Leisman, CNBC. Mr. Chairman,
all the shit I talked all morning long doesn't mean shit.
Somewhat higher core inflation. They also show somewhat stronger growth.
Get out of the way. Be very careful out here.
On average, rates were kept.
Watch out. We're about to squeeze to the fucking moon. Watch out out there.
And growth is higher. Does it mean more tolerance for higher inflation and less of a willingness to slow the economy to achieve that target?
Well, it doesn't. No, it doesn't mean that. What it means is that we've seen incoming as I pointed out in my opening remarks. We did mark up our growth forecast, and so have many other forecasters. So,
oh, dude, you guys want to see fucking 530? It's coming.
And the inflation data came in a little bit higher as a separate matter, and I think that caused people to write up their.
You want to see 530 really fast? You guys want to see it happen? It's about to happen. We're pretty close to it happening. You want to see an explosive upside move? I don't know if we can get it here, but
just to follow up, when you say that you're willing to either maintain,
hold on here,
for longer, what is the top?
They're trying for it right now.
For inflation coming in above its 2% target.
So we're strongly committed to bringing inflation down to 2% over time. That is our goal, and we will achieve that goal. Markets believe we will achieve that goal, and they should believe that, because that's what will happen over time. But we stress over time, and so I think we're making projections that do show that happening, and we're.
Watch these buyers right here. It's only 2:41 in the afternoon, right? It's a half-hour candle down here. Only 10 minutes into that half-hour candle. We're about to fucking rip some faces off. Give it just a couple seconds here. We're about to explode to the upside.
Is coming, but it still hasn't shown up meaningfully in the CPI.
You want to see it? It's about to have. If you watch right there, you get that half-hour. If you watch that half-hour bar right there, we're about to fucking rip faces off.
So I think there's some confidence that the market rents, lower market rent increases that we're seeing will show up in measures of housing, services, inflation over time. There's a little bit of uncertainty about when that will happen.
Yeah, get out of the way right now. If you're short right now, be very careful. You're about to get run the fuck over.
Uncertainty about the exact timing of that.
And will you be able to get overall inflation down to target if housing doesn't break through quickly?
First upside target, 52.25.
We will get aggregate inflation down to 2% over time. We will. And I would assume.
Right here, I'm going to move it up for you right here.
We'll see goods prices coming into a new equilibrium where they're going down perhaps not as quickly as they had been earlier this year.
Get out of the fucking way if you're a bear.
Back down as current market rents are suggesting will happen, and where non-housing services will move back down. Some combination of those three things, and it may be different from the combination we had before the pandemic, will be achieved, and will bring it.
Oh God, here we go.
Sustainably.
Oh. Oh. Oh.
Nick Timmeros of the Wall Street Journal. Chair Powell, during your congressional
just push it up there.
That your test for making the first change to interest rates does not require you to be terribly comfortable. Is at 2% because interest rates are well above neutral. At the same time, you said here after the last meeting that the first cut is highly consequential.
You got sexy Nick Timmeros out there right now.
Above neutral. Why would the first cut be highly consequential? Is that because you anticipate one cut would be followed by one or two more along the lines of the recalibration you made in 2019, which itself was modeled on the mid.
5,200 breaking right now.
It's more. I would put it more in the context of what I said in my opening remarks that
another 15 minutes left.
We're in a situation where, if we ease too much or too soon, we could see inflation come back, and if we ease too late, we could do unnecessary harm to employment and people's working lives. And so we do see the risks as two-sided. So it is consequential. We want to be careful. And fortunately, with the economy growing, with the labor market strong, and with inflation coming down, we can approach that question carefully and let the data speak on that. That's really what I was thinking.
How much of that inflation that we've seen so far this year do you chalk up to one-off calendar adjustment effects following a period of high inflation versus some change in the trend we saw in the second half of last year?
So I want to start by saying I always try to be careful about dismissing data that we don't like. So you need to check yourself on that, and I'll do that. But I would say the January number, which was very high, the January CPI and PCE numbers were quite high. There's reason to think that there could be seasonal effects there.
Yep.
But nonetheless, we don't want to be completely dismissive of it. The February number was higher than expectations, but we have it at currently well below 30 basis points core PCE.
He's lying right now, by the way, if you don't know that.
Not like the January number. But I take the two of them together.
Tell him the truth, Jerome.
I think they haven't really changed the overall story.
Just tell him the truth.
That of inflation moving down gradually on a sometimes...
that's it. That's the truth. Tell him the truth.
I don't think that story has changed.
Gradually.
Those readings added to anyone's confidence.
Gradually.
To that point. But, we didn't... last thing I'll say is we didn't excessively celebrate the good inflation readings we got in the last 7 months of last year. We didn't...
You don't want to see that either.
Take too much signal out of that. What you were saying was that we needed to see...
right here.
That we could, we wanted to be careful about that decision. And we're not going to overreact as well to these 2 months of data, nor are we going to ignore them.
Hi, yes, Chair Powell.
Watch 18506 on NASDAQ.
Could you speak a little bit more about the timing?
Say it again, David.
Enough data
18506
between now
on NASDAQ.
and, say,
18506 target on NASDAQ.
Evidence that you say that you still need, or by June, is there enough data for you? Just give us a sense of your thinking there. Thank you.
Yeah, so we make decisions meeting by meeting, and we didn't make any decisions about future meetings today. Those are going to depend on our ongoing assessment of the incoming data, the evolving outlook, and the balance of risk. So I really don't have anything for you on any specific meeting looking forward.
But, just a question of, is there even enough data for you to be able to?
We'll take, things can happen during an intermeeting.
Spoos moving on the move now, trying to trade 52.2492.
I just would say that the committee wants to
forget Valhalla. We're going higher, baby.
Data that gives us higher.
Give me 52.2.31. You want Valhalla? It's up there.
And we don't see this in the data right now.
SPY squeezing right now, breaking above R2. Now trading 519.13.
Nothing in the data pointing at that.
Woo!
Those are the things that we'll be looking at coming meetings, and without trying to refer to any specific meeting.
Chris.
Hi, Chris Regaber, Associated Press. Thank you. In the projections, there is an increase in the neutral rate, as you know, and
oh yeah, look at that down there.
Higher rates projected in 2020.
Look at that one right there. Look at that. What's happening over there?
What might be behind that? Is there a real sense here that the economy perhaps changed in some way that will be needed in the future? Thank you.
So,
reach for the sky.
There was an uptick in the longer run.
Reaching for the highs.
And also, there's a 25 basis.
Just a note, we're on R1 right now. You can see a pullback. But there is an expectation that we'll go higher here. But there should be a pullback on this R1. Just be aware of it.
I think we think that rates.
Next target to the upside to Valhalla, baby. 52.250.
For reasons that are mostly, important, slow-moving, large things like demographics and productivity.
Yeah, slow-moving, large things.
Things that don't move quickly. But I don't think we know. I mean, my instinct would be that rates will not go back down to the very low levels that we saw, where all around the world there were long-run rates that were at or below zero. In some cases. I don't see rates going back down to that level, but I think there's tremendous uncertainty around that.
Great. And just a quick follow on the projections, you also have 2.6% core inflation for the end of this year. It's already at, or you mentioned it being 2.8 in February. I mean, that doesn't sound like much disinflation at all. So are you still confident, or the last press conference you sounded pretty optimistic you would get more confidence to the end of this year. Is it right to say that this suggests you're not seeing a lot of disinflation this year compared to what we've seen 2023 and so forth?
I think that higher year-end number reflects the data we've seen so far this year, because you're now.
David, I'm going to put you up on the screen, brother. Hold on, man.
I think that. Sorry, say your last part of your question again.
David, you're now on the screen.
Still optimistic
All right.
you get the confidence you need this year.
Where's your target, David? Is it the red line there?
If you look at the SEP,
Here,
what it says is
506.
that it is still likely in most people's
what had happened,
view that we will
as soon as they
achieve
went
that
up,
confidence and that there will be rate cuts. But that's really
before I
going to
went
depend
off
on the
screen,
incoming
I
data.
pointed you out
It
to
is.
that 18404
The other thing is,
level,
in the second half of
the
the
dotted
year,
line,
you have some pretty
right?
low readings,
And we
so
have
it might
this
be harder to
resistance
make
here of the
progress
4
as you move
hour
that
for value
12-month
gap.
window forward.
So what happened was is they
Nonetheless,
tagged it with a
we're
tick,
looking for
and
data
they
that
went back
confirm
down.
the kind of low
So
readings that
first
we
thing
had
I do
last year.
is
And,
I'm not
and
long
give us
from
a higher
this
degree
zone
of
here.
confidence
The
that
only
what
thing
we
I do
saw
is
was
create
really
a box here
inflation moving
on this fair
sustainably
value
down
gap.
to 2%.
I keep a high on the scene of the crime
toward 2%.
and the previous day high. That is a level that must hold for me to continue to go back up. So when I
Gina
saw
Smiley
it
with
drop
the New York
down,
Times. Thank you for
it
taking our
went
questions.
into the fair value gap,
Per your comment,
ultimate.
Anne, that
So
a
I went
weakening
long
in the
here,
labor market would be
and
a
I
reason to
exited
potentially
trade
cut
right on
rates,
this
or
high
at least a
here.
consideration in making a
Now,
rate cut. Would
I
continued
wait for
strength
repricing.
in the labor market be a reason to
Because
hold off on rate cuts?
the thing is
and just in
the
general,
distance
if labor
between here
supply
and here,
continued to rebound in
it's still about
2024,
like
the
100
way it did in
points, right?
2023,
Yeah, it's a lot of points, man. Same over here with SPY.
possibly stronger growth.
I don't
means
know
a
if they're
path
going to
forward
do
on
it today
policy.
or not. So I'll
52, 50, I've got 52.
And a lot of demand. And
31 is that next target to the upside.
Workers are getting
Yeah,
paid, and
and
they're
it doesn't really
spending, and
matter
that's,
because if they go up,
what you would
and go
have
up
is
further,
potentially
my trade is
kind of what you
complete.
had last year, which is
I'm
a
happy with
bigger
100
economy
points like that,
where,
you know?
where inflationary
And,
pressures are not increasing. In fact, they were
but I'll wait the
decreasing.
reaction.
So you can
So,
have that if
as
you have the
see, I've already
continued
marked out the
supply
zones
side
where I have interest in. To
activity that
remain
we had
uber
last year
bullish,
with,
I want this to
both
bounce
with
from here immediately.
supply chains and also with,
to go, and then we can go
growth in
to
the size of the
15
labor
up
force.
to 506.
But so
today.
strong hiring in and
Well,
of itself would not be a
you
reason
see
to
how
hold
they
off
went
on
back
rate
and
cuts.
checked the fair value gap.
Not
Even
by
that.
itself, no. I mean,
You know,
we
it's
saw
30 points
you,
that
you
you
saw
just
last
saw.
year.
If
very
I have
strong
my limit
hiring,
order in
hiring
there,
and inflation coming down
I would have
quickly.
gotten hit
We now
right on
have
top
a
of
better
it,
sense that
and
a
I
big
would
part
have
of
been
that
up
was
already almost
supply
40
side
points on
healing,
Nasdaq.
particularly with,
And that's a lot.
growth in the labor force. So
Now, it's very
in and of
volatile.
itself, strong job growth
We
is
shall
not a
see
reason.
if it's going to. I don't know. I didn't
to be
listen
concerned
to the
about
press
inflation.
conference because I'm in the Google Meet and I can't have Twitter.
Can you hear him talking right now or no?
No. I don't need to
Neil
listen to
Irwin
him
with
because it's a
Axios.
distraction for me.
How do you assess the state of financial conditions right now? And
prefer to
particularly,
see in the
particular,
chart
do you
what it's telling
view
me,
the kind of
right?
easing
Because
financial conditions since
if
the
he
fall
says
is
something bad,
consistent
it
and
will show me
compatible
in
with what you're trying to achieve on the inflation
So
mandate?
I don't care what he says.
So we think,
and that's why I'm just.
Thank you very much, FX Retracer.
Indicators, and you can kind of.
So I just focus on where
see
we are
different
going,
answers to
right?
that question.
So-
But
Can you put a marker where you think we're going here?
conditions are weighing on economic.
Or right here?
You see that in a great place to see it is in the labor market, where you've seen demand.
Yeah, baby, that's what I'm talking about.
A little bit from the
What
extremely
I'm looking
high
for,
levels,
you know, it's
and
not
there I
going to
would
go
point
in
to
one shot.
job openings, quits.
Yeah, there you go, David.
Things like
I
that are
don't know.
really demand.
It looks great. I like it.
Side things happening, but I think those are demand side.
Hello, can you guys see the crayons at home?
You know, we saw that's been a question for a while. We did see progress on inflation.
So you want me to mute Powell and put David on? Hold on, David. Hold on 1 second here, David. All right, say something right now, David.
Yep, I'm talking.
All right, David, what do you got for us?
Oh, all right. They didn't hear what I said earlier?
Now they kind of heard you, but they could hear Jerome speaking.
Okay.
There's like two of me now. Wild and crazy, CaptainJimJames, twice in a screen. Hold on 1 second here.
Yeah, no, well, you know.
Hold on, I'm gonna move. Hold on 1 second here. Hold on 1 second. Cap screen. Okay, we're back. We're good. All right, David, have at it.
Yeah. I didn't even look at the ES yet, but you know, the thing is, I think we're at all-time highs now.
Oh yeah, dude.
Yeah. So for me, I don't even look at it really anymore because now it's
all price action here, brother.
Yeah, I mean, just ride it and I don't know, see how far it goes. But even there, what I just showed you on NASDAQ, you know, where I was waiting for this back test at this level here, this zone, on how it backtested it. Even ES still respects everything that I have drawn out. And remember before I went off stream, I said we're going to go to that 52.57, right? And we got there. We broke above it. But even when you're looking for a retest and how we're getting a breakout above, look at this wick of this candle, to what level they went back to retest it, because this is the confirmed breakout of this consolidation zone here, where they go back and retest it. Now, I'm being very careful. As the guy stopped talking?
I turned him off.
Ah, okay. But
do you want me to turn? I can turn him on in the background here.
No.
So if he does stop talking, we know that the momentum is done.
I just need to know when he's done talking to.
Yeah, I will bring him up right now in the background, brother. I agree with you on that one.
I could care less what he talks about. I just need to know if he's.
Yep, I agree, 100%. I'm bringing him up right now. I'm going to put him on low.
Yeah.
Well, you've talked
okay, yeah. You can leave on my end. You can leave the sound off. It's okay. So, but for the people on stream, maybe it's good if they care.
No, they don't. They're telling me in the chat to take. They're like, get rid of it. We want to hear about the trade.
Yeah. So now you go with the momentum and you just let it ride because this was your entry long to re-enter. Now the reason why I drew this one here is because I don't want this. This is basically where I put my stop, right? If I'm scooting up. Let me make it a different color because you don't want it to break down from here. Because we break down from here, we're going to go all the way back down. So I keep raising this thing here. So we need to watch out. And another thing I need to watch for is 3 peaks. 1, 2.
Every situation is different, but the historical record is that you need to approach that question carefully and try to get it right the first time and not have to come back and raise rates again, perhaps, if you cut inappropriately, prematurely.
Yeah, they're trying to push down right now. They're really hammering on it.
Yeah. Yeah, we had an impressive move already for today, so
Well, and we're coming into the 3 o'clock hour. I want to remind you people out there that we have 4 more minutes left here in this half-hour candle.
Calling on you to lower interest rates, to cut interest rates, because it says, quote,
these sellers are going to try to step in right now and try to push down price.
See? So if I was long, I would have ejected here. It's done. Because the only thing I would target, really, is this. Even though I have a bias that we will go up. But let's wait until Friday.
I want to see if I can buy like 5202.
Tremendous amount of importance on our engagements with Congress.
Let me have a look.
With great respect. In this case, I would say those are, our mandate. Yeah, our mandate is for maximum employment.
I got a range here from 5202 to 5196.
To accomplish, we're trying to do that in a way that sustains the strong growth we're seeing, the strong labor market we're seeing, but
5268. You're talking about SPX or?
Yeah, SPX.
Okay. Hold on.
5202, 5196. If I can get a chance to scoop that up, I will.
Okay, there's an imbalance here. They're going to fill this.
Saying that the higher rates are squeezing the working people.
Yeah, you could give it a shot.
You think they could grab that little one down there or no?
Oh yeah, they will go back down there.
These letters with respect, and we write careful responses.
Not if, just when.
We listen again because we're.
And that's the thing I don't like about all-time highs because I have no references anymore. So
yep.
Difficult. That's why I just stay away from it. But in regards to risk rewards in these cases, we maybe next time on those kind of trades we should look at like the Six Sister, and the trade of the day was this.
5220.
Thanks a lot for the opportunity to ask a question.
5233. I think I've got 52.
The FOMC.
5231.
Unanimity on the
Yeah,
committee.
but these motherfuckers are the best one to trade in these circumstances.
Before you begin cutting rates. Thank you.
This Russell.
We're very consensus oriented.
It's up almost at like 30 points. It's a lot.
Consensus and ideally
And the farther we go into all-time high territory, the more I'm going to start like going into the Russell, because
Yeah, how's the Russell doing right now? I didn't even check.
Yeah, look.
I was told the Russell sucked, and I said it was the best trade of the day.
Yeah, it's up.
Oh, yeah, it's a beautiful fucking trade. Look at that. Oh, yeah.
And it's not done yet because it's going to make another peak, right? So I look for the 3 peaks to occur. So this is peak 1.
206 on IWM.
Yeah, 2112 is going to be the target on the futures, at least. But the thing is they have dirty rug pulls on the Russell, so you have to be very careful. Just grab what you can.
I used to like to trade the Russell as long as I had all day long to trade it.
Yeah, because it moves later, you know?
Yeah, dude. It's like I gotta fucking sit on this shit all day long and watch it go up 30 cents every half an hour.
And then boom. Okay, well, let's go back to NASDAQ.
Bob didn't like RTY. I loved it. I've been loving RTY is ripping right now. It is the trade. It is the trade. Why is it the trade? Because they're going to fucking price in a rate cut before we ever get to that rate cut. That is the trade.
Yeah.
Sorry.
Yeah, it's true.
Right? I mean, you think they're going to wait until the actual rate cuts for how this has gone a lot? Like, I get it. Went into the January meeting. Everybody thought we were getting a rate cut. We knew they weren't getting a rate cut. The moment they figured that out, they blasted it to the depths of hell. Did IWM go to the depths of hell today? No. Why did it not go to the depths of hell today? I'll tell you, it's easy. It's very easy. They're going to price that shit in. They're pricing in a rate cut right now today on IWM coming to you in June.
And you know, the beautiful part about IWM is you always get a chance to enter if you missed the boat. The only thing is you have to wait. So, because they like to flush that thing down.
Yeah, they do, dude. They've been doing it all week. You see it? They're just like hammering on these bulls. The bulls are just accumulating, not caring.
Yes, sir. Yes, sir. But like now, I'll share my bookmap screen on on Russell right now.
Let's see it.
So look at this now. They're accumulating like crazy. The CVD here, you see this chart down here? Any dip is being bought.
Oh, look, we got the market rebel here. Definitely doesn't get the market brief at nighttime, does he? He definitely doesn't get the market brief. Market rebel, you need to sign up for the market brief, brother. You go right to tradethetrigger.com. Tesla wearing big boy pants up 2% right now.
Forecast individual. But we're talking about something that's unexpected. That's where I'll leave it, though.
Spoo's still trying to trade 52.25. I would expect it to stop slightly lower than there, 52.20.
Beginning of the press conference that the committee felt it might be appropriate to slow the pace of asset runoff fairly soon. I'm wondering.
And this is not the high I want to see, so I still expect more upside on.
Oh yeah, dude, the new half-hour candle is like pure fucking green. They're buying it right where they got pushed down right now.
Yeah, I don't know. Is it power hour now at the moment?
It's 3:02, baby. It's power hour.
All right. Yeah. Well, you could reach it.
Of caps right now.
And then
about in half.
We got this next half hour. Hopefully this half hour is nice and sexy here.
So that is what we're discussing essentially.
Yeah, make the new high, and then
we're not discussing all the
make the high of the week today, and tomorrow, or tomorrow. So
it just made another high just a moment ago, right?
Yeah.
Slowing the
on the
MBS right
on the 3 o'clock candle, they got a new high.
Going to a lower pace.
NASDAQ still has room to run
because we haven't had an agreement or a decision, but that's the idea.
The all-time high is 18,691, and
that's what
so we still have a lot.
Fairly soon. I wouldn't
So
want to
yeah,
try to be more
I don't know
specific
if they're
than
gonna
that.
jump this thing up. I don't know how they're gonna do it.
And this is in our
Yeah, I'm watching this right here. So let me just briefly show my screen here.
would avoid the kind of frictions.
So just right down here on SPX, just so you can see this right here. I want you to see this specifically here. So see prices right here. If we start to break below this candle right here, this last 30-minute candle, I'll cut myself loose.
There can be stress.
But I want you to pay attention to this 30-minute bar right here.
To avoid the stress, and then it would be.
And then right where these buyers stepped in.
as something like that happened
As long as these buyers stay on board, upside target still 5,220. If I lose this bar right here, they start to roll this bad boy down, then I'll get out of the trade. So
And will there be a discussion about returning to an...
if you guys can see this at home, make yourself a 30-minute chart with SPX. Snap a line above at 52.25 so you can follow along. And I'm going to go back to David right now.
I do expect that once we're through this, we'll...
Go ahead, Dave. It's all yours, brother.
The other issues about the composition,
well, for me, NASDAQ
revisit those
18404
It's,
is
you know,
going
not
to
urgent
be
right now. We wanna get
my over-under for now.
this,
And
this
can they go
decision
down?
made
Yeah,
first,
sure.
and then we
But
can, when the time
you
is
could
right,
scoop
come
some
back to the
longs
other
from
issues.
here, but you need to have a tight stop. The only thing is that this wick here, it's a lot.
Hi, Victoria.
But I still
also
expect
on
it to
the
go
balance
up.
sheet,
Oh, say it again.
A little bit about how the outlook for the banking sector might impact your balance sheet.
Say it again.
Do you worry that
Yes,
as
sir.
deposits start to shrink that we could see more?
But you want to see something like that.
Oh, yeah. Keep on pushing.
One of the reasons we're slowing down we will soon enough, fairly
And
soon,
to
I
join
should
these
say,
parties,
slow down, is that, we want to avoid
you get another fair value gap on top of this.
Oh, yeah.
Right. I was thinking particularly about banking sector turbulence, but
Whoa.
we had some indicators.
Just kidding. I don't know.
Are you drawing porn for the
We're going to be paying a lot of attention.
Yep.
Oh yeah, JC said you're making me uncomfortable, David.
It's doing it live now.
What eventually happened at the end of that tightening cycle where we wound up in a short reserve situation, and we don't want to do that again. And I think now we have a better
So you see,
sense
this
of
is that
where
fair
the
value
indicators
gap that I
is.
just
There
drew
isn't
out
so much in the banking
beforehand
system
what I
as it
said.
was around.
So it's going to be
example,
big. I don't know. They're going to go
federal
for
funds
it.
is trading
No doubt.
relative to the administered rates.
The only thing we need to watch for is
Secured
reversal
rates are
patterns to occur.
relative
These moves can be very violent.
We will
You can
always
see
be
shit
watching
like
the
that
banking system
happening,
for-
and then they
for
break it
similar
down.
signs, though.
Well, is it also because
Oh.
how the reserve supply will react once the overnight reverse repo facility, drops near at zero?
Well, I think we broadly
But
think
just let it
that
ride.
once the overnight repo stabilizes either at zero or close.
Oh yeah, baby. Sing it for Daddy.
Reserves will be-
Sing it for Daddy in the chat.
And I watch bookmap for clues if I see absorptions or big sellers pop into the book
Also about the balance sheet.
where I press the eject button, and so far I'm not seeing it.
You said that starting the taper sooner could get you to. Does that mean you don't have to make a decision on when to end QT at this point? And
All right, so we just ticked 52.20.
the process for deciding that sooner, or will you wait until we're close to the end?
So it's sort of ironic that by going slower you can get farther, but that's the idea. The idea is that
Oh yeah, baby.
with a smoother transition, you'll run much less risk of kind of liquidity problems, which can grow into shock and cause you to stop the process prematurely. So that's where, in terms of how it ends,
Oh yeah.
I'm going to be monitoring carefully
Keep on pushing, baby. Slap it up there. Bring it to 52.22.
whether what they're telling us about reserves. Are they right now? We would characterize them as abundant, and what we're aiming for is ample, and which is a little bit less than abundant, right? So there isn't there's not a dollar amount or a percent.
Oh yeah, look at that beautiful fucking half hour, dude. Dave, we got another 20 minutes, dog, on this calendar, on this candle, man. We got another 20 minutes.
What's happening.
Power hour in full effect right now.
In particular, different indicators, including.
Watch out for the last 30
to tell
minutes.
us when we're getting close. Then, though, you reach a
3:30 to 4, right?
where
Yeah,
stop allowing.
I've seen them rock pull this shit before. So
Yeah, I think 3:20. I don't like. I never like 3:20 in the afternoon. Like right around 3:21 in the afternoon, I'm always like, eh. Or if we're going up into that hour, like 3:20, I'm like they're gonna roll this shit down right at 3:21.
A slower pace.
Well, and the nice thing about this is that like for tomorrow, you get these beautiful setups
fairly
that
soon.
present themselves.
Then you
Even
have
if we
another
start
time where
consolidating in
you
a specific
effectively
range,
hold the balance sheet
you
constant and allow
you have
the
upside
reserve
targets and
liabilities to
lower side
expand.
targets. So
and then that ultimately brings you
they will always like try to fade
brings it into
ES
a nice,
overnight
easy
most of the
landing.
time, right? And
Level that is
then you
above
need to wait to see what Asia does and what if London is going to buy, which I doubt. But
we want to have a cushion, a buffer, because
yeah,
we know
they're going to wake up
demand
tomorrow
for,
and
reserves
they're going to
can
have
be
to
very
offload
volatile,
what they
and
accumulated
we
today.
don't want to,
So
again,
it's
find
simple as
ourselves in
that.
a situation where there aren't reserves.
And that's how they keep playing the game. And then they
assets
get
and
to a
reserves
point
back
where
and
they need to
making sustainable
reaccumulate, and that's when they start selling it down again. So, it's these cycles that they keep doing.
Be careful here, boys and girls.
Hi, Nancy Marshall-Genzer with Marketplace.
They're pushing down right now in the half.
To become more confident that inflation is getting
Yeah, but that's
to
okay.
2%
I
global
mean, they're doing it for a
rates.
reason
Can you
to
just sum
accumulate,
up more
right?
specifically
Yep.
what data you're
So
looking at that would give you
why would they
confidence?
want to buy them up here? Because
most
they need,
importantly,
they have to take out the stops
and the contents of it and what they're telling us. So that'll be
And for
also
NASDAQ, it's
various
up,
components.
right?
So obviously
So
that's what
SPY target 522.23 if you didn't know.
down sustainably toward 2%. And I mean, of course, we'll also be looking at all the other things that are happening in the economy. We'll look at the totality.
That's David AMS. He's joining us right now. This is David AMS's chart that you're looking at.
But
He's trading NASDAQ, and I'm trading SPOOs.
Are there things that you would give more weight to, like wages?
Yeah, Jim Bros are about to drop everything and run. You want to give a target up there, David?
It's really inflation.
For what, NASDAQ?
Yep.
Look to
Oh, it's 18,506.
That's where that circle is, right?
are still coming in.
So 18,506.
And we have a higher one as well. It's 18,691, but I doubt we're going to get there too.
Down to levels that
Yeah, you don't want to get them all trapped in here.
No.
And that's what we want.
You'll get your chance to enter
Inflation
tomorrow.
was not originally caused.
But you have to be careful that this is not going to be a short for now.
Mostly by
And then get
wages. That wasn't
some
really
weakness
the
for a
story.
few days. And
Oh, dude, we're gonna rip fucking faces off.
2% sustainably. We'd like to see. You
And if they don't do it now, they'll do it after the close.
Movement.
If they don't
of
want to
wage
pay out the
increases
options.
At still high levels, but back down to levels.
But
that
you
are more
also have to
sustainable over
always
time.
be aware that they can turn this thing around in a heartbeat.
I do want to give you a warning out there right now. We are approaching right now 52.20.
At this meeting,
Now we have a target above. I think we just ticked it just a moment ago.
be careful.
Now I want to give you a warning. They love to come in about 5 ticks lower than 52.25 or whatever you're going to, and knock it right down. So David was just speaking about that. If you are long right now and you're trying to target a specific number, about 5 points before then you want to exit your longs, specifically on SPX. So just be careful. We did have a high tick just then of 52.20.64.
That we were right to wait until we're more confident. So I think I didn't hear anyone dismissing it as not information that we should look at or anything like that.
This is SPX, not SPY.
Go in the direction.
We have got different things like SPY and then SPX. This is SPX that I'm talking about.
Approach this question.
Let me see if I can make your screen larger there, David. I don't know if I can. I want to, though.
Bank digital currency stuff.
See if I can make your chart bigger.
Hearing a lot from Republicans in Congress about what the
Maybe minimize.
in a digital dollar, but folk, I know you have said to
It's your screen. Oh, let me see. Hold on here. I can make.
that does anything, launches anything.
No, that ain't gonna do it.
Folks like House Majority Whip Tom Emmer have said that the Fed
Maybe right there.
either actively
There we go.
researching or hiring personnel to study the implications of the CBDC. Can you give us any clarity on what the Fed?
Now, where would your stops be here, David?
Digital dollar.
For my longs?
Sure.
Yep.
So I think we've been pretty transparent on this, but I will. I'll try harder.
Well, I will keep raising it.
So
As soon as we break above the structure,
we are
I'll raise it
not
up to here.
getting ready to
This
we
blue zone.
haven't proposed-
Because
we
it's the
haven't
last
come to a
place where I
conclusion that we
would
should
have
propose
added to the longs.
or
So
anything
it
like
remains
that,
risk neutral.
that Congress consider
Now,
legislation to
Look,
authorize.
what happened down here,
And it would take legislation
let's say,
by Congress.
because I went
signed
long
by
here,
the
right?
president
And I got out here.
to give us the
I
ability
didn't get
to do
this
the
entire
what we think of as a
repricing part
CBDC,
because
which is really
I
a
don't like
retail
that
CBDC
part.
with the public of it. So-
This is a move
so we're
that's
just
more
a
than
long,
enough
long way from
in that
What
sense.
we are doing, and I think
Because
what
you get a lot of
Central Bank is doing is
consolidations
we're trying to stay
and
in the
back and forth, back and
frontiers
forth, back
of
and
what's
forth.
going on in digital
So I
finance.
prefer for them
It has
to
many, many different,
flush these lows out
areas,
before I
different
re-enter for the
applications
long. to go up
wholesale finance
to here.
in the payment system.
But it
And so
requires you to
we-
wait,
we- to serve the
and that's the
public, we
thing,
need-
because like
these issues have
you
become
just
very
saw me,
front burner in the last
I deleted it. Just
5 or
let me
6
see if I
years.
can put it
We
back.
need to be knowledgeable about
The
all
arrows
so
that I
we
did.
actually do have people trying
Because
to
for me,
understand
you see this
the
here,
things that are
right here,
but it's
what
relevant
happened
to say
here?
that we're working on a CBDC.
I
and
would
we've
miss
got
out on this
clearly
short,
got a lab here where
right?
we've got one,
If
and
I
we're
was
just gonna
long.
spring it on Congress at the right moment. We don't.
When you were like making my screen bigger,
in my own mind.
Yeah.
I said they're short scalp for me, and the reason is because it's simply a double top for me.
You know, I just
And
think it's something we
you see,
need to
remember what I
understand.
told you?
We
This
have people
over under.
who
As soon as I
are
see a candle
keeping up with
closure
that
below it,
as part of the broader payments
I look for the
landscape.
first bearish fair
That's how
value
I
gap
would
that's on
characterize
top. This one right here, to short it.
Yeah, we talk about this in the show all the time.
Yeah, and where do I short it to?
They catch that new low right there. They give you one more exit. That's that green candle up there between the two yellow boxes between the two pinks.
If you were lucky.
That one right there. Yep. They failed. They let you give you an orderly exit and then boom, drop it straight down.
Yeah, and that's why I put this yellow line here to give you an indication. Like if I was long, still above in this zone, I would keep my stop here because look, we're talking about NASDAQ here, right? And this is 20 points now. And if you're doing that with one contract, you can't, I can't permit myself to sit that out.
No.
So, so it's a different beast. In ES, it's a different story because, like, you know, you're talking about like 4 points, like 2 or 4 points, which is fine. But like,
there's been a march toward greater and greater
you know,
transparency.
on ES, I'm happy with 5 points.
Certainly
Always.
Chair Bernanke advanced
I
that,
always
so
close it
Chair
out
Greenspan
after
did, Chair
5 or
Yellen
6
did.
points sometimes.
You know, so we went from
I'm realistic with my goals and targets, and that's because it gives me the opportunity to trade both sides of the spectrum, right?
I wouldn't
And
turn it back. We also
because
done a
like
bunch of other things. You know,
you can't short where you're already long unless you have like doing it in the micros and then have the minis in a long or something like that. You could do that, but it's a lot of work, and I like to focus just on one chart and be in and out really quickly.
At this moment, we're very transparent.
Yeah, they're making a reversal right now. You see it?
Participants speaking to the public.
Yeah, and that's why I'm saying, you know, it's
so that channel is
the management of those stops. It takes years to get that under control and in the right way.
Not every day and in every way.
And that's why I always tell everyone, just be realistic with your goals and taking profits. Don't think we're going to go to the moon or something like that, you know? What is high probable? What are levels that I know 100% certain that are going to get touched?
Thank you, Chair Powell. Jennifer Schonberger with
Yeah,
Finance.
and
People are very positive right now, David, inside of this. They're all laughing and shit, smiling.
Conference that
now look, you know, I'm talking about trends within the bigger trend, right?
Mm-hmm.
These are just typical rotations that go back into things. Like, you know, I'm clear about where it's going, right? But like I said, for me, it doesn't. You know,
yeah, you're trading a different time frame though. You're trading, was it a 15-second time frame you were trading or no?
Yeah. A 30-second time frame. And like if you look at on 5-minute chart, there's nothing happening.
Right.
Right?
Yeah.
It's like
we don't expect
so
that it will be appropriate
to put things into perspective.
I'm trading on a 30-minute down below here on the right-hand side, and then I got a 1-minute chart up on the backhand side. The people on stream can't see it, but
in our statement.
Yeah, but it's you see on the 5-minute, there's nothing going on. Absolutely nothing.
Nothing. And the 30-minute candle's holding right now, so I'm like, yeah, I'm still long. I'm not fucking selling this shit.
So it depends if you're swing trading or something like that. And I strongly suggest if you're trading a 5-minute, unless you're scalping the way I'm showing it now, stick to that chart only, you know, because like this is the over-under on the 5-minute chart, period. Okay, if we get back down into this area here, there's a possibility that I can scoop another long from here and swing it back if the target has not been reached. So it's fractal.
We'll just have to see how the data.
It's great for everyone in every dimension.
We would of course love to get.
But 20 points is 20 points.
Really good inflation.
So, and that is why I'm using the smaller time frame.
Again,
Are you guys out there on stream in the chat? Are you guys long right now or not long right now?
January and February, which I've talked about a couple of times.
Are you guys all long the market or are you short the market here?
Good data, and we would certainly welcome it.
Do you think that 520 will hold? 5,200, right? Sorry, I said 520. I meant 5,200. We're above 5,200 right now. So we should come back. I'm going to tell you guys a couple things out there right now, okay? I'm going to tell you guys a couple things. Wherever we go up, we are definitely coming back down to 5,200 to retest it. Do you understand me? So when we're done going up here, we're going to come back down and retest 5,200 to make sure that that is the now floor. I want you to realize, okay, in this squeeze, when it's done, I'm telling you, we're going to hold 52. And I'm going to tell you something else. 5,200, right, is now support. And it needs to be confirmed, but it's now support. And our target ultimately is 5,300. That is the target, 5,300. Oh, we're done. Heads up out there. Be careful. The presser just ended. Be careful, David, my brother.
Yeah, keep an eye on 5225.79 on SPX.
5225.
0.79.
0.79.
Yes. Then, let me have a look. Do another projection.
Yeah, I've got 5225 as top.
Yeah, it's about right. Well, yeah, could go higher, but it's a standard deviation of this consolidation area here.
Oh, dude, they are blasting these. Thank you for the free money. If you're out there short right now on inputs, thank you very much for the free money. That's it. I'm flat right here. I'm flat. I'm fucking flat. I'm not going to wait for this last little bar. Just a word. I'm going to switch over down here. I want to show you guys something, okay? So I'm flat. Hold on. I gotta tell people I'm flat.
NASDAQ almost at the target, but
I just want to show you guys I want to show you guys one quick thing, bottom right-hand screen. So right here, I want you to see something here. This is David's yellow line right here. It's just above that blue line. See how we're squeezing up here right now? Just squeezing, squeezing, squeezing. We can jump over here, whoop, right, and do this to go up here. But I want you to know that this part right here, I want nothing to do with it. If you want to know why I don't want nothing to do with it, it's because they can red bar our asses straight down right here. If this happens, they red bar us straight down. You know, instead of pushing over, they're just pushing us straight down. I don't want to get caught in that. So the trade is here. Trade is not right here. You might be the guy that wants to take the trade from right here. I'm not that guy. I want to take the trade down somewhere down in here. Does that make sense? Now, if we break above 52.25 and can consolidate, make a new high right here, I will then jump back on board this trade again to 52.50. Now you're going to be the guy that jumps in again up there, right? Well, I'm trying to get out. I'm exiting as you are entering those trades. Just keep your eyes on this right here. If you want another upside move here, I would recommend that you wait until you get above 52.25. All right, David, go ahead.
yeah. So yeah, and NASDAQ, I don't know where they are at right now, but
I got your screen back up, brother.
All right, cool.
Tom Lee, baby.
The reason why I have that on SPX is because I look at this consolidation and it's basically a standard deviation of this consolidation area here, which is giving me the upside targets. I rarely use them because it's for all-time highs. I like using them more. And these are upside targets even up there, but yeah, I don't know how long it will take for us to get there. But for today, this should be good.
Yeah, I'm done today. I'm flat right now, dude. I've had nothing but good trades. I'm fucking stoked. I'm happy.
Yeah.
Fucking
They might
happy as
press
fuck
it on
today.
further, but it's not going to happen right now because just always remember, look, if they want to sell it down, the higher they go, they want to sell it as high as possible. So, for example, if you think NASDAQ is at its top, guess again, because
I don't think we're at the top, dude.
no,
I don't think we're at the top.
well, that's my opinion, and I will be proven wrong.
Okay, so someone just asked, at what point do we go down? Question mark. So I want to show you something.
Why? What does it matter? The trend is up.
I want to show you. I gotta show this. I want to make sure that if you're, I gotta show these guys this. Give me one quick second here. I gotta talk to these bears because I don't want them to get their fucking asses blown out.
Yeah, but what makes them think they're going to make money on the short side if they're kind of?
They're not. I gotta explain something to them here. Okay, listen. I gotta talk to you guys here. Okay. I gotta talk to you guys if you're out there right now. Please listen closely to me. Okay. Please, please, please listen to me closely. If you're new to this show, okay, please come back to this show on a non-Fed day. Please come back to this show. I don't care if you hate me on Twitter. I don't care if you hate me anywhere else. I don't care if you hate me in a Discord or if you hate me on fucking Wall Street Bets. I don't care. Look at where we are right now. There is no reason for you to short this right here. Zero. And you cannot make for me any reason why to short this here. Zero reason. And I got to tell you why. If you really want to short this, you can. But you got to see at least. You got to at least see that, right? You haven't seen that yet, have you? The 5-minute trigger is near vertical right now, going up. It's not flat. It's not going down, is it? The 1-minute trigger is near vertical right now. It's going up. It's very simple shit. Where's price right now? It's above the 1-minute trigger. You have no business shorting this. If you want to short this, what do you need to see? This right here. You need to see this right here. You need to see red candles underneath the 1-minute trigger. And even then, you only have the short for right there. You can get run right back up right there, no problem. No problem. That's just a 5-minute check back. That's all it is. If you want to short this, you want to see a failure by buyers in here. Like they can't escape this. You need to then see that sellers come back down. You understand? And then you need to see one more failure by buyers. One more on the cross. If you see that failure, you are then Johnny on the spot shorting that right there. So you get the blast down, you make bank, and you are the smart trader. If you're out there saying, I'm shorting this or I'm going to do that and this and all this other bullshit, I guarantee you lose 80% of your fucking trades. And right now, you'd be getting smoked. So you got no trade here trying to short this shit down right now. There's nothing telling you to short this shit down right now. Now, there is a little bit of gamma above us. If you go right here, you can see there's a little bit of gamma right here. This is where it gets dangerous. They can roll this down. They can blast this above as well. Watch it right now happen in real time. They're coming up here into this resistance right now. And they could just as well roll it down or go above. You got no trade here as a short. You're going to get blasted more times than you're going to win. I'm sorry, that's what it is. That's what's going to happen to you. There's no way that I already know. We already know. We've already done a white paper in this shit. We know exactly what happens. You lose. You lose enough that it's not an edge. You must have an edge in this market, and that is not the way to do it. All right, go ahead, David.
Yeah. Now,
sorry.
Looking at SPX is approaching that 45 or that 52.25 zone now.
So buy calls tomorrow.
Oh, you need to be careful. Let's see what the reaction will be. But I doubt.
You come on my stream, right, and start scalping on my show. I want to see it because I don't believe it. You get smoked every time. I know how it goes. There's already white papers done on this. I post them in the chat. There's a BGL white paper. You can read all about it. It's a proven edge. You win 63% of the time. And they're grinding us up right now. So anybody that's been short is getting smoted right now. Like, trend is your friend. Good, David.
Yeah, I put them both on now, so you can see what those targets
Nice.
were back on the SPX.
Now it's 3:30 in the afternoon. A new half-hour candle starting on SPX. They want to rip faces off. Buyers immediately stepping in right now in the first half-hour candle. We'll see if they can hold it or if the bears take over. Currently, that candle is green right now. We'll see if they can hold it or if they lose it. Dude, this is a good fucking day, man.
Yeah. And be careful at 10 minutes before the close at 50. They turn on this algo thing.
The murder algo, the end of the day murder algo at 3:50 p.m.
Yeah.
We got a little bit of red here.
Okay, watch the 5-minute chart. Ask yourself also, is this the high you want to see on a 5-minute? No.
Dude, I want to see 52. I want to see 5,300 today by end of fucking day, man.
Yeah, you need to be careful. Like, if you're long, I take some off here.
Like, what do I want to see? 5,300.
These are runners for the sweepers, I always say.
Well, at 52, so right here at 52.50 or 5225, we've got 54 million in gamma. Then at 52.50, we've got 170 million. 5,300 is only 95 million. So it looks like 52.50 is the looks like 52.50 is the probably the next really true big. This isn't really a big resistance here at 52.25. There's a big one though at 52.50.
Okay. We're getting there. It's hit.
Yeah, 52.50, man, is the next big target. Or that's actually the real one. 54 million is only, we only have 54 million on 5225.
Now pay very close attention to what I'm doing here on SPX right now. You see this? What's happening now?
Mm-hmm. It'd be hilarious if they priced in this whole it'd be hilarious if they priced in this whole fucking IWM move. Like, thank you very much. We just priced in the entire rate cut on small caps. Have a nice quarter. We'll trade you sideways now.
This opening candle on SPX where it's higher, I don't like.
Yeah, you're getting sketched out right here. That little tweezer turnaround right there. Those two candles.
Yeah, it's subtle, but you know, there's a reason why I pointed out that level, because you can expect shenanigans from there.
There's 54 million gamma on that call, right where we are right now.
Yeah. So 52, 25, 79, I said the high was going to be for now. And they ticked it to 26.
Yeah, look at it right there.
Now we need to wait. See what they break above.
You see that we're coming into the. Are you watching Bookmap too, dude?
Yeah. As soon as they break a candle and it closes below here, it's a scalp short for me to this zone here.
I want to see this one right here. This is what I want to see. Can I show that screen? I'm looking for this right here. I'm looking for a 5-minute check back and a fucking move up. I don't know if I'll get it all the way down here, but I'll buy this down here if I can. This is more probable.
It's going to be violent. They're selling right now. They started to sell, and they will sell on the way up. So be mindful of that. See?
I just want a little bit more pull down.
No, don't buy anything here.
I'm waiting for 518 on SPY. $518, 37 or 50, somewhere in there by the time we get there.
Are you showing my chart?
Yeah, I got you up, brother.
Okay. NASDAQ will flush after the close to that area, I think. But
yeah, I would like to sell the close today. But I want to see how high we can go.
yeah, but this was a place to, go flat and just wait. I would not. Like I said, that red line, that 25, that's your period. I don't long it after that.
Like 519.15 was our 2. We blasted right above it, so I'm going to assume we're going to come back down into that 519.15. That's where all that consolidation was.
Yeah. See, and they went 1 point above it. But you see this over under that I drew out? This is not good. So what they will do now is at some point they will go back up, fill this gap. And you see this high here?
Yeah, I'm watching.
Yeah. We're gonna make one giant dick for you.
Yeah, I think it's 52.11 on SPX is where I'm looking to buy.
Oh, I'm not looking to buy anymore.
You're done for the day.
Yeah, no, I'm not buying this because it's in so much premium already.
I didn't realize it was 337 already either.
Yeah, it's not worth the risk to remove.
Yeah, that's a fair point. I wasn't thinking about the time either. I'm getting all bulled up here, bro.
No, don't. And if you
I didn't realize that we only have what, 22 minutes left.
Yeah, just wait for London. It will show you the way.
We don't have enough time left.
Yeah. And be okay with it, and like, the nice thing about it is watch NASDAQ because we still have room to run. So in that sense, we do know that we can still go up. So whatever drop we get, and keep an eye on the blue zones that I marked out, right? And look at the previous swing highs.
Sorry, I wasn't watching. Pay attention.
And like plan 10 points and grab 5 of it, That's the best. That's the safest thing to do.
I'm looking for. So here we see if I can trigger full screen. So I'm either looking for price to come above here, right here.
Yeah, I didn't even overlay the triggers yet. Let me have a look.
Yeah, show them the triggers. Like right here, I'm looking for that. And I would take that trade right there. So this one right here, if this squeezes up, take that trade right there. Or if it rolls down, whoop. I'm looking to take that trade right there. But I have to still beat the previous high on this, whatever this is coming down.
Yeah.
But still right. So we don't have a lot of time left, so.
No, but like, the thing is, like I said, try to be done always with your trades around this time.
Yeah, I'm like, well, that's the one thing that's bothering me is like, the one thing that's bothering me, dude, is there's only what? There's fucking 20 minutes left. That's it. Is it even worth it? Or maybe just try to short the close possibly would be the other one. If they blast it up into the, into Valhalla up here. Let's see if I can go back to the, to your screen here. Let me see what the puts are looking like for tomorrow. Holy shit, guess what?
What?
Guess what? It's my birthday. I didn't even know.
Tomorrow.
Tomorrow. Tomorrow's my birthday.
Holy shit.
I'm getting old.
We don't talk about that here.
I know. It's my birthday. Hey, just heads up out there. Today is not today, tomorrow is my birthday.
Oh my
I didn't even notice, dude. Congratulations to if it's your birthday, happy birthday to you too. Looks like our parents liked having sex when it was cold out. It's my birthday. Hell yeah. Tomorrow is my birthday.
Are you going to disclose your age?
No, 29 forever. 29 forever. I'll say this. I'm still not 50 years old, which is awesome. I'm in my 40s right now, but I think I was scared of no, when I hit 30 was the first, like 25 I started feeling okay as an adult. 30 I felt great. 30 was phenomenal. 40 I thought was going to be bad. It wasn't. But like 45, not liking it. I'm starting to feel it now. Starting to feel it right now. So
you see why I said no longs yet? What SPX is doing now?
Oh yeah, it's rolling off the 1 minute trigger finally. These bears are out here just drooling right now.
Yeah. So
drooling.
That's why I drew this over under here. As a zone where I would short typically to this zone here, right?
So what are you short to? What's your target for short?
Here, that I drew out here.
So just the yellow box, just right here.
Yeah. And then I'd scale out and wait because.
So do you consider that a liquidation break, or do you consider that the market's rolling over here? Oh, there we go. I'm on that trade too.
The thing is, you don't know yet because it starts off like this, right? It's very subtle. But whatever happens, if you think you missed it, and let's say for example, let's say
they should fail here on SPX, right? At like 520 per 520 even, right?
I get break even here because I'll just wait for repricing. Because the beautiful thing about this is if you have the patience, and let's say if this does roll over, and if it is a rollover, then you have time to get in. So
let me show you guys what he's talking about here on my screen.
That what?
Oh, I'm going to switch over right here. You see this green candle right here? Saying it's got time, right? So if this green candle fails right here, your immediate next red candle is going to be a bloodbath right down there. But you need to make sure that you break this previous one right here, okay? So let's watch how this candle works itself out here. So this new candle right here should come down and start raining down. You see the bulls with weakness right here? Weakness by bulls, the buyers right here. And they'll run this right straight down right here.
And look, what I like about NASDAQ, it's like, even though we did not reach the target yet.
I got you back up on the screen, brother.
Up?
Yeah, your screen is back up again.
Oh, okay. No, the thing is, what I like about NASDAQ is the further down we go, since we didn't meet the target yet that I had wants to achieve, and SPX did. So, like, if they sell this down now, that I would love that, because I would consider longing London again to reach the objective, right? But it could be, they could be doing it from here, that they do it into the close.
They're trying it right now.
Yeah, you see the yellow line that I mentioned? And let's go back to the 5-minute chart. What is happening there? And the beautiful part about this is that, like, these reversals, if it is an actual reversal, it will show itself, it will show its hand on the 5-minute chart also, in the same pattern that I just drew out on the 30-second chart, except it will take much longer for it to evolve and to develop, where you have plenty of time to join the party for a reversion trade back down. So there's something there for everyone. But like, for now, yeah, it's just, the trend is still up, but yeah, you need to be very careful, because you see, this is the hard part about it. I'm going to take these things off for a minute to show you what I mean.
Oh, here we go, dude. Their buyers are still there, dude.
Yeah, but wait.
The buyers are still there. They're gonna do it to them.
Be wary. Look.
They're gonna blast them, dude. Watch this. These fucking bears are all wrapped up right now. They're all hot and sweaty.
Don't get too bulled up yet.
I'm not. I got a target to buy. I got it. It's lower. I got it over. This is what I'm looking at right here. Hold on.
I want this to remain.
So this is my chart that I'm looking at right here. You see, I'm looking for. I want to. The problem here, the reason I'm not bringing it down fast is because of this bullshit right here. See these buyers right here?
Don't
These fucking guys right here.
Don't even consider buying above 5,200 SPX. It's not worth it.
Yeah, I got to see a turnaround. I either have to see a turnaround, like I would need to see that right there to begin considering a long from right here. Or I would need to see, I wouldn't look exactly like that. It would be more like, yeah, I guess you can zig it and zag it, but that's like a really simple line, but it would be something like.
Okay, buckle up.
Yep. That doesn't look good at all. Looks like a disaster too, Dave. Like right there. God, this drawing looks like dog shit. Like I wouldn't even consider that trade unless it was right there. It'd have to come up, show itself that we're going higher, then I would take it. Yep. And then down here, I would need to see it blast down here, and then I would need to see the trade come back up, and I would take that part of the trade right there. But none of that's happened yet. There's no trade here right now for me.
Well, yeah, the thing is, for me, it's very simple. You know, I need a bullish fair value gap to evolve again for me to take a long, or a bearish one to.
Yeah, a bearish one or a bullish one.
Yeah.
Short or long.
I want a bearish one, for example. You know, the same thing what I was showing down here. Look, this is.
Let me switch over so they can see your brother.
Huh?
Good.
Yeah, you see this bearish for value gap here? This one here?
Yeah, right down there, like that one too.
And that is when I buy. So, I need to see something evolve like that before I consider taking the long again. But for now, like I said, what I showed you on the 30-second chart, it was a short. So, yeah, 2 here.
So let me ask you the next question. So I'm going to share my screen with you down here. Bottom right-hand screen. So let's look. This is SPX right now, right? The gamma on SPX. Let me close some of this. Let me get rid of this. I don't want to get rid of all of it. So here, I'm going to show you guys all that right there. So I want you to see this right here, right? We had the previous high back here. We would need it to get above. We've got SPX gamma at 5,200 right over here. And see how they're trying to roll this down right now. And my next trade wouldn't be, well, I guess if we were trading like that, my next trade wouldn't be until we had a new high again, right? New high over 52.25.
Yeah.
Because even then, you can only trade the bounce. You can't really trade. You can't really even trade. Like if you reverse all this down, you still need that new high to confirm the leg higher on the hourly trigger.
Yeah, and you see that is why I raise my stops all the time. Like if you look on SPX now,
I got you back on a screen again.
Yeah, if you see, remember I told you to go short already on this little candle here that showed me, to eject. One, we reached a target where we were supposed, or I was looking for reversals to set up. Then we have this setup here, this reversal pattern.
I'm long again. I'm long again, David. I fucked up.
And yeah, I can't. I have to wait. And that's the thing about that 50.
I'm gonna see if I can ride it into the bell here.
Yeah, sure you can gamble that.
No, they can't get over the fucking they can't get over this 1 minute here, man. 519.77. I have to get over that. This next I'll know this next candle. This next 1 minute candle, I'm gonna find out here if I'm golden or not.
Yeah, need to wait for a break.
Yeah, I got this 1 minute and the next 1 minute. They're trying to sell it right now on me. Eight minutes left until the close. Oh. 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 Keep on going. Ooh. Oh. Oh. Oh, they're pissed. They're fucking pissed. Oh. Oh. Oh, I'm taking your money again. 7 minutes left. You guys want really quick for tomorrow? For tomorrow, listen closely. If you're trading into tomorrow, okay, I want you to know as a bull You do not want to take a long until we trade down to the hourly trigger. That is, oh boy, 5:15.06. The half-hour trigger's at 5:16.77. I am long right now into this bell, into this close. We have an upside target of 5,300. Expect a back check of 5,200. Oh, wait a minute. They're going to hold on a second. I might get stopped out here. I got to stop on right now. Let me talk to you guys. David, I got to do one quick thing, brother.
Yep.
All right. Hold on here. Before we go, you're going to get your market brief tonight. Bottom right screen, I think. Okay, so right here. This is what I want to show you guys, all right? No, I'm showing you the wrong one. Now, this safe trade. Listen to me closely here. Oh, dude, I'm still. They haven't gotten they haven't taken my stops yet. The safe trade here. Listen to me closely, very closely, please, please, please. The safe trade for you here. If you want to not lose or whatever, the safe trade for you is to come back down into this 5,200. You see it right here, somewhere in here. Okay. You get the new high. Come back in. And this is where you are a bull again. Right there. Okay? You understand? I don't care what happens into this close. I don't care if we gap up. I don't care. The safe trade is for you to wait for it to come back down, retest that 520, confirm this is the floor, get a new high, right back down, and this is exactly where the daily or the hourly trigger would be, and you're off and running with a nice profitable few days to the upside, okay? If we were to look at what screen are we looking at? Trigger screen. Here's your trigger screen, okay? This is a 30-minute. I'm going to do a 1-hour chart for you. Matter of fact, I'm just going to close everything out here. Hold on here. Remove 9 drawings. Look at that. Jesus.
Hey, Cap, I got to run.
All right. Hey, David, thanks for showing up today.
No worries.
If you guys want to say thanks to David on the show really quick, say thank you to David for showing up. I appreciate you showing up today, David, for the show today and for Jerome Powell and what he's thinking.
Yeah. Cool.
And you guys have any questions for David before he goes? Everybody's saying thanks, David. Thanks, David. Thanks, David. We love you, David. Thank you, David.
All right, man. I'll speak to you.
David, what's your Twitter handle?
Hold on. I'll put it in the chat.
Can you put it in the Twitch and the YouTube chat?
Yeah.
All right, cool. David AMS is going to put his Twitter handle in the chat. Check him out in the Discord. I'm gonna leave you guys with one last thing here, okay? One last thing, because I know there's people that are waiting for what their plan is for tomorrow.
Let me see.
Hide that one right there. Hide that bad boy right there. And show them a plan right here. Right about there. Right about there. Oh, yeah, there it is, 5:30. What I do want to show you for tomorrow is right there. And that's my trade plan. I don't know what your trade plan is out there, but it's roughly right about there. That we're going to go up and into this close. It's already 358. Expect a pullback. Whoop. come right back down to about 516, start maybe consolidate, and then boom, big shot up to the upside. Price target upside 530 for me. We go back to the 1 minute for the close. Gap it up into the overnight. Where are we looking at here? Main screen. There we go. Oh, yeah. Grind it up in there. All right, so I want you to have a great day here. I am going to be closed. I've got a sell order in for my calls. I will be flat into the overnight. I expect some kind of a gap up in the overnight to 525. Likely a pull down into the hourly trigger into tomorrow. I'm not bared up into tomorrow in any way, shape, or form. If you are, let me know in the chat. Tomorrow is my birthday. I didn't even think about it. I appreciate you all showing up today for the stream. I will see you all tomorrow at 9 a.m. 9 a.m. I'll see you here on the stream. Please check us out on tradethetrigger.com if you want to sign up as a supporter or a pro trader. You can gain access to our Discord, gain access to tools. What else do I got for you? You guys got anything for me? You guys have. Thank you very much for the cake day. You know what? I'll get a cake tomorrow. I don't know. I think they might have. I don't know if they're baking a cake or they got a cake. I don't know for sure. Oh, yeah, look at that, dude. Fuck yeah, nice close. Are you guys short into tomorrow? Let me know. Rave music, all right. Yeah, I'm still sick. I'm still dogging. Still sick. Now, thanks for the birthday wishes. I appreciate it. All right, so I'm going to see you guys tomorrow at 9 a.m. Are you guys all short right? Are you guys all short right now? Am I the only guy that's not short? Oh, yeah, dude. Look at that up there. Oh, say I hate money. Say I hate money as they squeeze you up right now into the close here. They're blasting you right now. Long and strong, baby. Long and strong. Bricked up, baby.